skyboxes, everybody else on a bench. Everybody has a seat, everybody's protected from the weather by a canopy, everybody is better than
Who collects
TV.
the revenue from all this? The university?
The university.
So when you decided to do this, you were thinking about all the things you could use your money for, what was it about this that was appealing?
Well, Aon and Ryan especially have had a lot of success. So this is an and for us, not an or. Our family gave the first generation college scholars, nanotechnology, biomedical research, performing arts. So this is an and, not an or. But when you're making a 100-year investment, you have to think about what impact is this going to have on the community. And an old school football stadium is a 7-day-a-year white elephant. This needs to be an asset for the community, and to do that, you need to make that extra investment.
And do you think it changes the economics for the university long term and the kinds of athletes that they can attract, therefore the sports licensing deals that they can get? I mean, is there a whole sort of economic piece to this for the university itself beyond the donation itself, the ancillary income that I imagine this can actually create for them?
Well, I think first and foremost, the university competes differently for student athletes. A Northwestern degree matters to our students. They still want to play in the NFL, but they really care about a Northwestern degree. That being said, playing in a world-class facility is attractive to everyone. The new Big Ten is a powerful draw. And the fact is, if you think about where this stadium is going to live, it's a bet. There's a bet that we can draw the Chicago corporate community, because you said this is Chicago's Big Ten stadium, and Big Ten football, college football is the #2 sport in America now.
I just think about it in terms of the NIL and how that's changing college sports. I hear what you're saying about the Northwestern degree being a draw, but really, if you're looking at college athletes these days, they are basically playing on a professional level, and you probably need something like this to draw them. Back to Andrew's point, I mean, this may be the new face of college athletics, particularly in the Big Ten.
Well, I think, you try to do everything at the highest order of excellence at a place like Northwestern, and if you're making a 100-year decision, you need to make it right. That being said, having a great home field, having a great environment to play in, but it's not just our football program. We'll host the National Lacrosse Championships, so we have a National Championship lacrosse team. Right. You really have to think about how do you make that 100-year bet, and frankly, all this does is move our football facility up to the level of every facility we have across the university, starting with the hard sciences, performing arts across the
You love Northwestern. Is this half that you're just a really nice person in Northwestern, or half business? Or every college team needs a Ryan family. I mean, I'm jealous.
Well, my dad and mom went to Northwestern. My dad will say that every great thing that happened to his life came through Northwestern. He's built Aon, he built Ryan Specialty, 2 successful public companies, and giving back to Northwestern and the influence it can have in the world has been...
Is this going to take away from the Bears at all?
No, not at all.
Even the Bears.
Yeah. He's got a stake. He's got a. They have a stake there too. Yeah. One last question on this. By the way, Phil Knight has done something somewhat similar in terms of giving an enormous amount of money to Oregon to try to help their athletics field. Where I was going to go with this is, do they come to you with the ask, because that's a big ask, or do you, given your background, go to them and say, you know what, we're really thinking that you need a new stadium and I want to help you with this? Or how did it happen?
It's a great question. So we were thinking about renovating it. We looked around at the world and saw where the world was going, which is changing a lot. And the short answer is when you get out there, realize the answer lies in these entertainment venues being done in the NFL and the NBA. When we learned that, we realized that to make that investment would be the right thing to do, and we told them we were willing to do it. We were willing to do it in a way, and the people in the NFL have been incredibly generous. But then we had to contextualize it to a college. So it has to be very egalitarian, it has to be built around students, it has to be built around the community. And so the fusion of that was really something we came in partnership with them on. But we said, we'll make the investment, and then over 100 years, this will be the best investment we can make in our athletic programs, just like we've done in biomedical research.
What happens to the crappy old stadium that's structurally no good? Does it stay standing?
No, it's a giant hole in the ground.
The one in D.C. is such an eyesore whenever I'm leaving down. Look at that thing. It's like...
So what are they going to put there?
That's where the stadium's going.
Oh, you're saying the stadium's going to go on top of it.
Come down and go...
It's already down. It's a big hole in the ground. Structural steel starts November 22nd.
Did you blow it up, or did it just...
Would have been great, but the neighbors would have not liked that so much. So
Because I would have come down. I love watching this. When that happens, it's kind of cool because you put the blast in specific places. It's really cool.
Pat, thank you for coming in.
Thanks for
Congratulations.
having me.
It's very exciting to see what you're doing, and we can't wait to check it out in person at some point.
Thank you very much.
Appreciate it.
All right, when we come back, we're going to talk earnings, Bitcoin, and more with Tom Lee of Fundstrat. That conversation is next. And later, the fight over the Fed's future. Economist and former New York Fed President Bill Dudley will be our guest. Squawk Box will be right back.
Da 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 da. Like.
We got some news just out this morning. Roblox now announcing a series of safety updates to its platform. This comes, if you remember, following Hindenburg Research disclosing a short position last month. But in that short position, it then alleged that the company was inflating user metrics, claiming to find games such as Escape to Epstein Island and Diddy Party. Now, Roblox has rejected all the implications of that report. These updates that Roblox is now rolling out this morning include the ability for parents to adjust controls and review their child's activity remotely. Also, users under the age of 13 will no longer be able to message with others directly outside of games or experiences. Now, tomorrow on Squawk Box, we will speak with the company CEO, Dave Baszucki, in the 8 a.m. hour. And it's great to see them doing this, and it's going to be great to be able to talk through what this is all about.
The price of Bitcoin surging 30% in November. Right now, I think 90 and 91 or so, 90 and change. Join us now, Tom Lee, Head of Research at Fundstrat Global Advisors, as well as a CNBC contributor. We can get to Bitcoin in a second. I want to talk just about the overall markets, Tom. And you think leading into Thanksgiving that slow sort of bleed, that was slow bleed last week in the market, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, and is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's, what, Bessent was at 70, but then Musk said, tweeted about Lutnick and his chances went up. What is it now?
They've both fallen to sub 40%. So it, part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
They're using Polymarket to decide the Treasury Secretary.
Stranger things have happened, right?
So that, you think we hear this week? And that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so, I think that's like what I consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact.
The Fed might not cut as quickly as possible, but you still said we're in a good place. Dub it.
Doge that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute, but how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
Part of what you think Elon's rationale for tweeting about Lutnick has to do with Bitcoin. So that leads us to what we intrigued with Bitcoin. And that might have been only that Lutnick has reportedly at least tens of millions of dollars worth of Bitcoin, maybe even more than that.
Yes, I think that's right. It does seem like Bitcoin is becoming more and more a hallmark of what this next administration is going to have, and it does solve some of the deficit concerns. If Bitcoin becomes a reserve asset, and it may solve some of the what I consider inherent problems of the current financial system. Bitcoin remains a very secure blockchain, so I think there's still a lot of potential for Bitcoin.
So where were we last time you were, or at least a recent time I asked you, still triple digits by the end of the year. I think we were around 70 or under 70. We're much closer now, so I don't want to ask if you're raising your price target on Bitcoin, but it looks like triple digits is certainly a possibility. What is it, feel better?
Yeah, I think comfortably over 100,000 makes sense before the end of this year, and Bitcoin is trading pretty closely to how it should post halving. So I think it, the next 12 months look pretty good for Bitcoin.
Do you ever, with the S&P, worry about valuation? Or if you worry about valuation, you'll always be worried, I guess.
Yeah, that's right. I think if someone set a number and said 20 PE is the cap, and they faded the market every time, they would have left so many years of gains on the table. I think median PE at around 18 times isn't too demanding for the S&P yet. And the 10-year at 4.5 is still over a 20 PE for a 10-year bond. So I think the S&P isn't a valuation unrealistic story yet. And then of course small caps are much cheaper with a median PE closer to 12 times now. So I think if I was concerned about valuation, I would just look at smaller caps or mid caps.
So in the next 6 months to a year, what type of gains do you think would be reasonable for the S&P with the Trump trade intact?
Between, at least between now and year end, 5 to 10% still makes sense to us.
Now and year end,
Yeah, so something over 6,000, like 6,300.
and then next year.
And then I think we build upon those gains early next year, because I think inflation is even softening and there's room for more Fed cuts, and so that would be a dovish development. So, high 6,000s is possible too.
For a Monday, I'm feeling a lot happier. I don't like Mondays much, but you didn't say anything negative, did you? Is there anything we need to worry about?
Well, there of course is some
Cholesterol or something?
yeah, cholesterol and
Always.
food coloring,
Oh, right. McDonald's is safe again.
Yes.
High-test Coke. If RFK is drinking a bottle of high-test Coke, I might go back. No.
Fruit Loops? What about Fruit Loops?
I already like Fruit Loops. We already
Red
have.
dye.
I love. You like Fruit Loops? I love Fruit Loops.
Yeah, but the Fruit Loops
I know.
they sell in Canada
Yeah.
are different than the ones here.
Yeah.
You think that he's not going to touch the Fruit Loops?
It doesn't seem like, it's really the coloring that just is different. I just want the natural way to do it. The other one, not all preservatives are bad. Next time you have some meat or milk, or try some rot meat.
No, but he does, like the idea of the heavy pesticides on stuff that
Yeah.
are allowed in places like this.
Could be, right.
Hey, Joe. Good to see you.
Good to see you.
Coming up when we return, a closer look at healthcare under Trump's administration. Oscar Health CEO Mark Bertolini is going to join us after the break. We'll talk to him about CBS and some of the other things too. And we come right back.
Smell of this.
right, welcome back, everybody. Our next guest is a longtime leader in the healthcare sector and has unique insights on potential areas of healthcare reform in President-elect Trump's second term. Joining us right now is Oscar Health CEO Mark Bertolini. Of course, he is the former chairman and CEO of Aetna, and he also served as a director of CVS Health Corporation. And Mark, it's really great to see you this morning. Thanks for being here. Our next guest is a longtime.
Nice to see you, Becky. Gentlemen, good to see you both.
We have been trying to figure out what this new administration is going to mean for healthcare. One thing seems certain, that there will be changes. A lot of what's been focused on so far is what the potential will be for the pharmaceutical companies. But between the choices to lead Health and Human Services, between what you might expect to see from the Department of Government Efficiency, where are you thinking changes will come in the insurance market?
I think in the insurance market, what we've seen over the last 4 or 5 years is a stability in the individual market. Actually, today, the individual market has 22.2 million people, and it has an ongoing cost trend of 3.5%. So that makes the ACA market, the individual market, the largest and most stable market in America. And I think that is where the future lies for healthcare. Getting more people into the individual market that meets the needs of what the Republicans have talked about for a long time, which is how do we get competitive products at affordable prices in ways that people like the products they're buying. So I think we've got a good future, actually.
Well, the Speaker of the House and others have mentioned that they're looking at ways to either change or roll back parts of Obamacare, which is the ACA. How do you think those changes will take place? You point out that it's more than 22 million Americans that are now living there. The reason it didn't get changed probably under the last Trump administration is people like their health care insurance. But there's a lot of problems with health care. It's a huge and expanding part of the federal budget, and there are some serious problems with the entire system, people trying to figure out how to make that system better.
Well, when you look at small group and middle market, which are fully insured products today, Becky, what you have are trends that are in the double digit year over year in rate increases. We have been keeping mid to low single digits in the ACA. So I think that's positive. So I think finding ways that we can change the regulations to actually get more people into the individual market. Things like ICHRA, the Individual Consumer Health Reimbursement Account, built by the prior Trump administration, has a way of moving all those people into the individual market where they can buy what they need instead of being, in most cases, chronically overinsured. In the Medicaid market.
Mark, the problem with that, let's just talk about that for a second. ICHRA had some huge proponents, and there's something to be said for getting gig workers covered when they don't have coverage at this point. But let's just talk about what it is. It's a way that an employer can say, okay, I'm going to give you X amount for this, and you buy health insurance for what you need. If something happens that you are catastrophically injured, you have big bills that come through, you get a cancer diagnosis, something else that comes through, you as an employee think you're covered, but it turns out it is not going to cover the cost overruns on any of those issues. That to me seems like the opposite of what insurance should be. If you don't have a catastrophic component, it means you have coverage for the little stuff, but not any of the big things that might come along.
Well, you do have coverage for the catastrophic component when you buy in the individual market today. So ICHRA, the employer can lay out and say, I'm only going to spend this much. They can only say you can spend this much, but then the person can go shop and buy a policy, which are cheaper in the individual market today, including subsidies. And
but
so
if you know something is bad happening, that's one thing. If you don't realize that you could be in for, let's say, a cancer diagnosis, you could be out of luck.
I think the plans that today are largely zero premium plans are bought by a lot of people who want a safety net whenever they have a catastrophic event. And so we see a lot of people purchasing that way. They like the product. It has deductibles, but with an ICHRA account, if you buy down, you have extra money left in your defined contribution amount that you can buy or pay for those deductibles and extra costs. But it's still, all those policies have catastrophic coverage. And they have out-of-pocket limits.
So everything I've read about ICHRA and the downside of it is that you might be uninsured for if you have some big costs that come through. Is that just not true? Or is it you have the discretion to decide how much to spend? If you want to make sure you're not paying as much, maybe you get caught in that situation?
I think if you buy these, what we call short-term benefit plans or stripped-down benefit plans, you are making a mistake. And so part of what we're launching with ICRA, Becky, is that we're actually going to have plan selection so people are informed about how they pick their products. They can look at what the potential features are. But these plans with very high deductibles and very limited benefits are not good plans. But that's not what we sell today in the individual market.
Mark, where do you think things have gone wrong in healthcare industry? And I talk to a lot of players with it. If you talk to the pharmaceutical players, they'll say it's the pharmacy benefits managers who are having the big problems. They might point to the health insurers. Hospitals will say the insurance companies are raking them over the coals. The one name that keeps coming up again and again is the PBRs, the pharmacy benefit managers. Do they play a good role, or have they gotten to the point where they've been so consolidated at the top and under the care of like a CVS insurance company that it's not the same thing it used to be?
Pharmacy benefit management model has run its course. And I think for a lot of people, what's happening is they're paying more for their drugs through a PBM than they otherwise would if they bought it directly. And that's a problem. And I think what has happened is the profit pools inside of PBMs get very confused, they get moved around. And what some people have done, like Paul Markovich out of Blue Cross Blue Shield of California, is they've disaggregated those profit pools. There are other companies like Rightway who are looking at disaggregating those profit pools so that the money goes back to the consumer or reduces their premium in some way. So I would agree that the PBMs have played and run their course, and they don't really serve the purpose they initially did, which was to get to the drug companies and get some of those costs down through bulk purchasing. It's lost its way with the profit model.
Right, as they've been consolidated into larger organizations.
Yep.
Mark, you are somebody who understands so much about the healthcare system. We don't have enough time today. I would really love to have you back when you're in town with us and come into studio to sit down and talk through all of these things, because it feels like there are some big changes coming. Would you agree with that? That this may be a pretty transformational time?
It has to be. And I think, again, this idea, we could get 110 million people in the individual market with 3.5% trend. We save a lot of money. And we can talk about ICRA the next time, but I'll bring more proof points. But ICRA can work if we get people into the right benefits.
Okay, Mark Bertolini, again, you are somebody who's had such a long career in the healthcare industry. You understand things that most people don't. We would love to have you sit down with us and continue to cover this story as it evolves in the coming weeks and months.
We'll find it. We'll find the time. Thanks, Becky.
Thanks, Mark.
Have a good day.
Coming up, Netflix taking the fight for viewers to a new level. The Tyson-Paul showdown packing a major punch to competitors, but it did have some snares along the way. We'll discuss that with Lightshed's Rich Greenfield when we come back.
welcome back to Squawk Box. I'm Dominic Hsu with some of the biggest pre-market movers on this Monday morning. Supermicro right now, one of the S&P's biggest pre-market gainers, up nearly 13, now 10%, on reports that it will submit a plan to get in compliance with the NASDAQ today. Now, if it doesn't do so, it's at risk of being delisted from the exchange. Supermicro shares hit a record high back of over $122 earlier this past year. On March 8th, they've fallen by around 85% since that high watermark. So keep an eye on Supermicro shares. NVIDIA, meantime, is down roughly just about maybe 2 to 3%, as the information reports that its next-gen AI chips have been part of server systems that potentially overheat. NVIDIA had already delayed its next-gen Blackwell AI-focused chips, reportedly due to some design flaws. The semiconductor giant and most valuable company in the S&P reports earnings after the close on Wednesday. And rounding out things with shares of CVS right now up about 1.5%. After an upgrade to overweight from equal over at Wells Fargo, also raising their target price up to $66 from $60. They predicted that the, quote, negative consequences from its insurance arm, Aetna, have reached their highest point. CVS also announced 4 new board members earlier today. Now, for more on that and other big calls of the day, just head over to cnbc.com/pro. Subscribers can get more access to the detail and analysis behind those big stories. Now, stick around. Former New York Fed President William Dudley joins us after the break for a big conversation about what's happening with rates and everything else in the economy. Keep it right here. Well, Fed Chair Powell threw some cold water on chances for more near-term rate cuts last week. The 10-year yield continues to tick higher. Joining us now, Bill Dudley, former New York Fed president. We also, Mr. Former President Bill, we also had Austin Goolsbee on last week talking about core inflation being around 2.8%. Does it make sense to you with the 10-year ticking higher? Does it make sense at this point to continue cutting, or does that
mean we're just moving the goalposts on inflation?
So I think Powell's view is that inflation is going to continue to come down, but it's going to take a little while to be fully realized. He talked about the fact that shelter costs are still going up pretty rapidly, but that's a lag response to the fact that it takes time for rent prices to reprice lower. And he's also concerned that the labor market is, not that strong. So his view is that the policy is still restrictive, the labor market is still vulnerable to weakness, and so heading in the direction of neutral is still the right course. I think the data, though, is obviously causing problems for them because the economy has been persistently stronger than expected and inflation has been stickier than expected. So the big debate in the market now is does the Fed cut in December? The market basically says yes, but not definitively. And then their view is that maybe the Fed will take a pause after that to wait for more information.
So that dual mandate is a total pain, is it not? I mean, really, when you try and the parts of each side seem mutually exclusive. It's not an easy job for anyone to try to navigate.
Well, you're trying to get to the tightest labor market you can without having an inflation problem. So you're sort of balancing these two objectives.
It seems really difficult. What does the move higher in yields on the 10-year? What do you attribute that to? Since that jumbo cut of 50 basis points and the election, a little bit of both. There's still some residual inflation fear, and also, I don't know, maybe some trepidation on what a Trump presidency means for the deficit.
Yeah, I think the big driver is the fact that the economy is stronger than expected, and so people think the Fed's not going to cut rates as far as they thought before. If you go back a few months ago, the markets were priced for the federal funds rate to fall to around 2.9%. Currently, the trough in the federal funds rate looking at in 2026 is 3.8%. So higher level of short rates translate directly to a higher level of 10-year Treasury note yields. But I do think the fiscal is an issue, and the fact that some of the Trump proposals on tariffs and deportations could also be not only disruptive to the economy, but could push up inflation is probably also weighing on the market. If you look at what's happened, it's partly real rates have gone up, but it's also partly inflation expectations. So the market is, I think, rethinking about the idea that the Trump policies are going to be conducive to low inflation. And I think the tariffs are the biggest risk there. If you raise tariffs by 10% across the board, 60% for China, that's going to definitely drive import prices, and the increase is going to be a lot larger than it was last time because the tariffs increases during the first Trump term were very modest. They went from about 1.5% of imports to 3% of imports. Now we're talking about something like 3% of imports to 15% of imports or 20% of imports, much bigger magnitude of increase.
And I just wonder, any comments on the relationship between the president-elect and the Fed chair? I mean, you appointed him. Do you think it's going to be smooth sailing? And can I throw your hat into the Treasury Secretary ring? Do you want me to do that, or no interest?
I think they have no interest. So
that's cold.
I would say that the Powell is basically trying to keep his head down. He was very definitive at the press conferences. No, I'm not going to leave my post early. Plan to serve out my term as chair to May of 2026. And two, Trump doesn't have the legal authority to kick me out sooner. So he's already trying to put that to rest. And then once we get to early 2026, we'll probably see a new Fed chair, and the speculation will start about who that is and how friendly will they be to the Trump administration. There's a reason why we want the Fed to be independent, though, because it's been shown pretty clearly around the world that a more independent central bank leads to better outcomes on inflation and employment. If you don't have an independent central bank, then the monetary policy gets whipsawed based on the election cycle, and that usually doesn't lead to good outcomes.
Right. Nothing's perfect, but it's probably the best we got. Do you have a preference for who would you like to see as Treasury Secretary? Who would you like to see as next Fed chair?
I'm not going to opine on who should be. I just want people that are highly competent.
That might be a problem. No, I'm kidding. All right, Bill Dudley, we appreciate your time today. Thank you.
Thank you.
Okay, coming up, China Select Committee ranking member Raja Krishnamurthy is going to be joining us to talk about U.S.-China relations, the chip sector, and so much more after this. Welcome back to Squawk Box. President Biden and China's President Xi met at the Asia Pacific Economic Corporation in Peru this weekend. She's saying he is ready to work with the new administration to maintain communication, expand cooperation, and manage differences. Joining us right now is Congressman Raja Krishnamoorthi. He is the lead Democrat on the Select China Committee. And given that you're a Democrat and given that this administration obviously is a Republican-led group, how do you think the dynamic fundamentally changes at this point?
Well, I think there's going to be a lot of continuity between the Biden and the Trump administration.
You do?
And people like Marco. I'm sorry?
I said you do? You think there's going to be continuity? That's fascinating.
I think so. I think people like Marco Rubio and Michael Walls, who are colleagues of mine with whom I work closely, know that we have to work in a bipartisan manner. However, with regard to this tariff situation, if President Trump decides to unleash 20% across-the-board tariff increases on all products from every country, and then 60% tariffs on Chinese goods, regardless of whether they pose economic or security concerns, I think that would be a big problem. It would disrupt our ties with friends, partners, and allies with whom we are working together to counter Chinese aggression right now.
You know, the prevailing view, though, had been that President Xi preferred President Trump. Why do you think that would be?
Well, I think that part of the reason or part of the notion, obviously I don't know Xi Jinping myself personally. However, there was speculation that to the extent that President Trump creates instability, to the extent that there's some chaos in his policymaking that benefits Xi Jinping. Sometimes the rhetoric is tougher than the actual actions that follow. All that being said, now we have to make sure that we succeed in our policy toward China because they are pursuing an aggressive tack economically, militarily, and technologically.
I think the view, by the way, on the other side is that President Xi, to the extent he wanted President Trump with it, was that he thought he was a deal maker and that there was there was a deal to be made. And the question then gets to tariffs and whether you think there is a deal to be made and what that looks like.
Potentially. However, I think that what's really important is to talk about strategic tariffing with regard to those areas where there's economic aggression, such as, for instance, dumping of paper or steel or aluminum or solar panels or electric vehicles. I think there we absolutely should come to an understanding and a deal, so to speak. Also, the purchase of increased agricultural goods from places like Illinois, for instance. I think those are important steps that the Trump administration should work on.
What do you think is a fair tax? If there were to be an across-the-board tax, is there any number that makes sense to you?
Across the board, regardless of which country? No, it doesn't make sense. I think it's super inflationary, and then it hurts our exporters, like our farmers, and then it disrupts those relationships. You know, the last time we adopted across-the-board tariffs was during the Hoover administration in 1930 with the Smoot-Hawley tariffs, and that did not end well. And I don't think we should repeat history in that regard.
When you think about the national security implications of our relationship with China and technology and the like, how worried are you about the relationship that they have now with Iran and how you think, and potentially with Russia, and to the extent you think that this new administration is going to have any leverage over them or not?
I'm very concerned, and you're absolutely right to, for instance, talk about the relationship with Iran and Russia, to the extent, for instance, that we are exporting high-end semiconductors or even equipment to companies that are making semiconductors in China. That ends up, for instance, in the war machine that is pursuing this criminal invasion of Ukraine through Russia. Same goes for Iran. And so that's why, for instance, on a bipartisan basis, John Molinar, the chair, and myself wrote a letter this week to various companies in the United States who are selling semiconductor manufacturing equipment to what we call front companies for Huawei and others who are really should not be using our equipment to make technology such as semiconductors, because it's used to modernize the People's Liberation Army or perpetrate human rights abuses against the Uyghurs.
Congressman, we got to leave it there. We appreciate your time this morning. Thank you. Hope to see you soon.
Thank you so much.
When we come back, we've got much more on what to watch in the markets this week as we get ready for some key earnings reports. Right now, though, as we head to a break, let's take a look at the pre-market winners and losers in the S&P 500. You'll see right now, Super Micro Computer up by more than 10%. It's leading the way. Squawk Box will be right back. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Spirit Airlines filing for bankruptcy protection after years of losses, though the carrier says it expects to continue operating normally and said customers can keep booking flights. Members of the Trump transition team want the Transportation Department in the next administration to make rules for self-driving cars a top priority. That's according to Bloomberg. Tesla shares are up sharply this morning on that news. CEO Elon Musk has been advising the president-elect on a broad range of issues. You can see Tesla shares right now up by about 8%. And Netflix says 60 million households around the world joined the Mike Tyson-Jake Paul boxing match live stream over the weekend, despite some technical glitches early on. We're going to talk about this fight a little later this morning with LightShed's Rich Greenfield.
Meantime, Roblox announcing a series of new safety updates to its platform. This comes following that Hindenburg research that we've discussed, disclosing a short position of the company. Last month, they alleged that the company was both inflating user metrics and claiming to find games on the site such as Escape to Epstein Island and Diddy Party and other things that I think raise lots of questions for parents. Roblox has rejected all the implications of that report. The update that Roblox is now rolling out this morning includes the ability for parents to adjust controls and review their child's activity remotely. Also, users under the age of 13 will no longer be able to message with others directly outside of games or experiences. And tomorrow we're going to have the opportunity to talk to the company's CEO, Dave Baszucki, in the 8 o'clock hour about it all.
All right, let's get back to the markets. The futures this morning, as you can see, have improved. The Dow is down triple digits and then some, and the NASDAQ has maintained its positive bias this morning. There's the 10-year all the way at 447 now. Mike Santoli joins us now from the New York Stock Exchange. Morning, Mike.
Morning, Joe. Yeah, pretty quiet on the index level. Last week, of course, the S&P 500 pulled back about 2%. A week ago, noted it got a little bit stretched after that reflex rally following the election, even preceding the election a little bit, and it looks pretty normal here. What we've done is come back to the October highs, right about October 18th. You had the pre-election high curl back underneath it. The 50-day moving average is still below it. Another couple percent down would probably still be in the routine pullback zone, but within the index, of course, a lot of back and forth movement based on policy expectations. Of course, the cyclical parts of the market doing better. Since that point in October when we were at this level in the S&P, small caps are up a little bit, banks are up 10%, so clearly winners versus losers. Take a look at a couple of those, transports versus healthcare. Now, looked at it, they were in a pretty similar position here not that long ago, right there, right around at the start of October. You see, you got this real jolt higher in the transports. Again, economically sensitive stocks, energy prices have been going down. And then, of course, healthcare on a lot of those policy concerns. It's been really a struggling group, some things like biotech within it, as we know. So kind of a noisy situation underneath. Take a look at small caps. I mentioned they've had this move higher. A lot of folks feel like the playbook is Fed cutting, tax cuts, whatever the policy implications are of the election would benefit small caps. They've been moving along with emerging markets for a long time now, and you see they've had this big divergence, U.S. over the rest of the world. It's also been a pattern of the last couple of weeks, but the Russell 2000 has given back most of that pop. It's right back to where it was around November 5th, so we'll see how that develops as you mentioned, Treasury yields continue to tick higher.
Okay, thank you for that, Mike. For more on the markets, I want to bring in Gabriela Santos, Chief Market Strategist for the Americas at JP Morgan Asset Management. Good morning to you.
Good morning.
And we've been on quite a ride, and so the question is, does the ride continue? Upward at a pace or not?
We have been in quite a ride for markets really over the past 2 years. Very strong performance for U.S. equities. We do still think this is a good environment for risk. That includes equities, that includes corporate credit. I just think there are two important questions for us that investors are already paying attention to. Number one is we seem to be out of the cyclical storm, all of the distortions from the pandemic, but now we're in the short term in a little bit of a policy fog environment that can lead to a bit more choppy performance. So it's really all about the 3 S's. What's the scale, the scope, the sequencing of the policies of the new administration, and how do we counteract headwinds and tailwinds? The second big question, I think, is much more beneath the surface. If anything, it actually gives us more conviction that we'll continue to see some broadening out here from those early winners from the first 18 months of this rally. But I think it's less about painting things with one big brush stroke, and it's much more thinking about positives and negatives, which companies actually
The multiple has expanded, though. We're at 23 times.
Exactly.
And so the question is, what is the upper limit of that multiple in your mind?
So I think there are two interesting questions here. In terms of the multiple, it's easy to just say, well, we're at 22 times, the long run average is 16 times, and so here we have a big multiple contraction to come. The truth is the index has changed a lot over time, 37%, very growthy, high quality companies. So the equilibrium multiple is higher now. That's a good thing. Okay. It helps provide a floor. The second thing is, of course, earnings, and you can grow into a multiple. And I think recently in October, we've seen some downward revision to earnings estimates, but so far nothing abnormal. And if anything, there could be some upward revisions to next 12-month earnings based on different policies from the new administration, whether it's a little bit more consolidation in different industries, or whether it's corporate tax cuts that impact certain industries, and of course, the continuation of the soft landing that we have at the moment.
Political question. do you have a view about what kind of Treasury Secretary the United States needs and wants, and how the market will react? And I was thinking about this earlier because in many ways, a Howard Lutnick kind of figure that like the tech world, like an Elon Musk might like, would be like an equity guy on the equity side. It could be, right? But in a way, Donald Trump ultimately is a credit guy. He's a debt guy. And you actually have to care about that piece of this. In some ways, I would argue potentially even more. And maybe that's where like a Kevin Warsh or a Mark Rowan comes in. But how does somebody who's sitting in your seat think about this?
So I think you've been seeing different reactions in different parts of the markets, all right? So far we've been talking about US equities, but we've also had a reaction to some of the fiscal and potentially tariffs and inflationary impacts on bond markets, which are up 70 basis points since we started pricing in a Republican sweep, and the dollar, which is up, depending on the currency, 5 to 9% since mid-September. So I think for equities, now is when there's a little bit of catch-up happening to the bond and the currency markets of starting to think through, all right, maybe there are some pro-real economic growth policies, but maybe there's also some uncertainty coming from other angles. All of this brings to last week when the market did start to react to a little bit of this policy fog. And here I think the markets, A, would just like an answer
Right.
to start pricing in. And number two, what kind of Treasury Secretary and economic, in general, appointments, and what does that signal between the balance of the tailwinds and the headwinds? And here specifically thinking about tariffs, which is something that the equity market hasn't paid attention to. So I think equities would prefer more steady as you go, a little bit more predictability versus the tariff uncertainty.
Do you worry about the inflows? I mean, Joe was referencing this front page article on the Wall Street Journal, and always the curse of these sort of super positive articles about the market. Does that, meaning, you know, folks who haven't been on the train, get on the train, they get on the train now, and whether this is late to be on the train?
And this is what we've been talking about even before the election, right? We were talking about the train had been the Magnificent Seven and tech, and that was an area that was becoming extremely crowded. And that was an area we said could be ripe for a bit of a correction, normal. And that's why we were really banging the table on really focusing on other sectors and other companies. I think when it comes to equities overall, yes, there is a risk of, at times, a little bit too much bullishness for certain investors that already had quite a sizable overweight to equities versus bonds, but it all depends what the starting point is. And we still think an overweight to equities is justified kind of from a baseline level, but I think it's up to each investor how much of an overweight do they have and in what exactly in the market here.
Thank you.
Thank
Great
you.
to see you this morning.
All right, when we come back, investor and Trump 2024 donor Omid Malik is going to be joining us to talk about the state of the White House transition and top priorities for the president-elect when he takes office in January. Stay tuned. You're watching Squawk Box, and this is CNBC.
President-elect Trump's transition team is working to put together the next White House administration. Among the latest picks announced, oil industry executive Chris Wright for Energy Secretary and FCC Commissioner Brendan Carr for chair of the FCC. On the position of Treasury Secretary, Weekend Reports detailed some drama among the top contenders. Our next guest has had a front row seat to what's happening behind the scenes. Joining us now, Omid Malik, president, founder of 1789 Capital. It's good to have you on, Omid. And are you actually, where are you right now? Are you on, is this a Zoom?
This is Zoom in my office, but yeah, I think you're implying I'm about 5 minutes away from Mar-a-Lago.
About 5 minutes away from Mar-a-Lago. Former Democrat, I think you have a famous employee named DJT Jr., is that true?
That is true. The junior being the operative word there, not the president, his son, yeah. So, but that's just a formality. He and I have been business partners for almost 4 years now, investing in what we call the EIG economy, which stands for Entrepreneurship, Innovation, and Growth. And that's our acronym that stands totally counter to ESG.
Right, and even when a publication tries to describe 1789 or you, they say anti-woke. You comfortable with that?
You're picking up on something pretty important. You know, when we were the loyal opposition, maybe it's okay to have an anti in front of your name, but I think we were validated in our thesis with what happened a few weeks ago. We prefer a much more positive vision, to your point, which is focusing on how to spur innovation. But what we clearly do not support are ESG or DEI policies that we think have destroyed shareholder value, really, which is factual now that you can map that performance out over the last 15 years. We also want to make sure that we're providing choice to customers. And it's all predicated in data, by the way. If you look at 2020 voting patterns, the folks that voted for Biden in 2020 represented 70% of American GDP, and Trump voters were 30% of American GDP. So at first blush, you might say, oh, that's not that great. Well, 30% of American GDP is $7 trillion. That's the third largest economy in the world, and I think it's stipulated that for a long time, corporate America was not only ignoring them, but alienating them. We want to play in those areas, and you can have an emerging market south of the Mason-Dixon line.
It's all six things, and I'm talking about entrepreneurship, innovation, growth, equity, social, government. It seems like any decent startup or company, by definition, has components of all those things. I guess it's just how you emphasize things where we went awry. I mean, who starts a company that doesn't think about entrepreneurship, innovation, and growth, as well as governance and everything else, Omid?
It's so much more complicated than that, unfortunately. You guys have been spending a few years talking to Vivek about it. It starts with the asset management arena. So you have to look at the capital flows that are informing behavior. So you've seen the conduct of public companies. I don't think that Exxon wants to get out of fossil fuels, but they're pressured to do so. That kind of conduct and behavior trickles all the way down to Silicon Valley. You had, until very recently, some of the biggest Silicon Valley firms refusing to invest in any areas of defense tech. That's an area that we have stepped into because their employees, and for whatever reasons, they didn't want to support the US government. At the same time, they were more than comfortable going and investing in China, which is our #1 enemy or adversary, if you will, as well as starting Chinese-only funds where they would receive money from Chinese investors. I try to equate that to someone starting a fund during the Cold War and going over to the Soviet Union and raising capital, but not at the same time investing in America. So that kind of absurdity presented us with the opportunity to fill in over a couple of years ago.
Reportedly, you had something to do with Tulsi Gabbard and maybe RFK Jr. Beginning to warm up to the president-elect early on and eventually endorsing, and I guess even J.D. Vance. You had relationships with these individuals as well, and you would say that you sort of helped in that regard?
Yeah, well, with respect to J.D. Vance, he comes from the same area, so we had a previous relationship, and I was one of his first donors when he was still running in the primary in the state in Ohio. So I've just known him for a while, and was.
Where are you from in Ohio, man?
No. I'm from New Jersey.
Okay.
But to be clear, when he was running for Senate in Ohio, that's when we were supporting him. So back then.
Okay, because I actually am from Cincinnati, and Middletown is right, I mean, it's almost the same thing. But yeah, go ahead. So
My college friend was from Chillicothe, Ohio, so that's right outside of Columbus, if that counts. But yeah, so I have something
That
in
counts.
Ohio. Okay, so
Kind of.
yeah, kind of. So that's JD Vance. As it relates to Tulsi Gabbard, I was one of her first donors in 2019 when she ran for president and maintained a strong relationship with her throughout that process. And then same with Robert Kennedy. I think the more important point, and I can obviously go into details of those endorsements, but the reality is with respect to with RFK and Tulsi, they represented a much broader point, I think, what's happened in the country, which are both former Democrats who went through either a metamorphosis or an awakening, however you want to put it, and felt like the Democratic Party they knew had moved away from them. I had that awakening, I'll put it, more around 2019 or 2020. But whether you're talking about Kennedy or Tulsi or even Musk, all three of whom voted for Biden in 2020, you kind of knew that if those iconoclasts were shifting, there were going to be millions of people behind them because they represented that. And that's why I was so bullish on the election heading into it. And in contrast, what did the Democrats bring over? Lynn Cheney. I'm not sure she had a huge constituency.
I mean, what do you think about the race for this Treasury Secretary role, and clearly what's now spilling out into the public just about the sort of internal debate about some of these names, whether it be the CEO of Cantor Fitzgerald or Scott Bessent, or now Mark Rowan, who apparently is flying in from Asia to meet with the president-elect, or Kevin Warsh, or perhaps other names that you want to throw out there?
Look, at a high level with the first two, Lutnick, I was a client of his for a D-SPAC. I know him well in business. And with Scott, he was a client of mine when I was at Bank of America when he was starting his hedge fund. So I have relationships on the business side with both of these folks who are extremely accomplished in their own way. I would look at what the Journal put out last night. I'm not sure if you guys saw it, about the kind of person you need for Treasury. And I think they were spot on, which is, to one extent, you don't want to do what Musk is saying, which is to go in there and blow things up. That's one department that I probably don't feel that way as a market participant. You're going to need someone that's going to create confidence with their abilities from a macroeconomic perspective and their credibility. So that's a quality I would look for. But at the same time, and this is what's really important and it needs to inform almost every pick the president makes, is how do you take someone that is accomplished in the field, but at the same time is going to incorporate some of the more innovative, I'd say, elements of this America First Trump policy. And so specifically with respect to Treasury, you're going to have somebody who has all the things I described, but at the same time is going to get on board with DOGE and the cutting as well as the tariffs. So that is why sometimes it takes us longer to find people, because I think we're carving out a third way.
Well, so when you think about, so if you take out Lutnick from that group, then you're talking about a Bessent. I don't know if a Bessent, you would know better than I, whether a Bessent or a Kevin Warsh is demonstrably on board with tariffs, or by the way, similarly with a Mark Rowan.
But again, that's going to be what they have to prove to the president. And, my knowledge of Scott and Howard is that they both are completely on board with that. I don't have a personal relationship with the other two. They're obviously extremely accomplished. So I'm not questioning anything about the ability or acumen. But through the interview process, that's what they're going to have to demonstrate to President Trump.
You're investing in media, but
Yes.
Tucker Carlson's media company. Do you think that they're... What is the current state, in your view, after this election of legacy media? And do you think it's ripe for disruption? And what's it look like? I mean, all media is going through these gut-wrenching changes right now. I don't know, has mainstream media really come to grips with who they are and what the country thinks at this point of mainstream media after this election?
I mean, look, there's clearly going to be a change about on the economic side. Yeah, that's what I focus on. Just a moment with the new FCC chairman, you clearly have a very strong view about something that's upset a lot of us. I mean, my galvanizing moment was really what I saw was kind of suppression of speech at the hands of either big tech monopolies or the mainstream media. What that has caused, particularly during the COVID period, is a capitalistic desire to fuel options And that's exactly what either the Tucker Carlson network that we invested in or Substack that we've invested in was fueled by. So there was a demand for these other platforms. And then you see it manifest in this last election, to your point, Joe. And it had a big impact with Joe Rogan and the fact that the entire strategy of both RFK before he dropped out and then Trump was to go to these platforms. And you see that they actually have a lot more people watching them in many cases than the mainstream media. So I think there's going to be a reckoning. I heard that Joe Scarborough and Mika went to come and see the president. That was after 7 years.
Yeah, they said that themselves.
Right, I think they said that this morning. So that is clearly, I think, a microcosm of what you're going to see as a change in behavior. I don't think, regardless of what side of the aisle you're on, the last 8 years was productive. To have this acrimonious relationship between those of us that are affiliated with this administration and the media writ large. I think if you can get something a little bit more straight, hopefully in response to the challenges that they face, you're going to have something come a little bit more in the middle. And I have seen that to a certain extent with, obviously you guys do it, and some of the other platforms have dissenting voices on. I think that's extremely necessary.
I mean, one of the other names talking about dissension among Republicans, Matt Gaetz. Where do you land on that? And at a time when clearly the president and president-elect has a huge number of priorities to get through, whether you think that scrambles and creates an additional challenge or headwind that maybe he doesn't need, that's one perspective. Other people, clearly the president thinks that this is the right man who's going to shake things up.
Yeah, I'll always tell you guys, as I've already done in this interview, when I have a personal relationship with someone, which is usually most of the time, but I don't know him personally, but obviously I know him by reputation. I think, speaking candidly, there are areas I think he's done great work on. Other parts he's controversial. The point of the exercise, obviously, is for him to go through the confirmation process and see what comes out. So I would say, though, that there is a concern, and you guys are aware of this on our side, that the last 4 years you saw the weaponization of a lot of the legal system. And I think this is clearly a pick to counteract that in the president's mind. And so, I'd probably leave it at that.
Very good. All right, Omid, I don't know, where are we? About halfway. I don't even know if we're halfway finished, going very quickly, and every day gives us plenty to talk about. And I think we'd probably like to talk to you again at some point if you're open to it, but appreciate your time this morning.
Yeah, anytime. Enjoy what you do, and it was a pleasure to speak with all of you. I hope you have a great day.
Thank you.
Thanks for coming on. When we come back, it has been a year since Sam Altman was forced out, then rehired at OpenAI. After break, we're going to take stock of what has been a wild year for the company and the entire world of AI technology. And then later, the CEO of Perplexity AI will join us. Stay tuned. You're watching Squawk Box, and this is CNBC.
All right, welcome back to Squawk Box, everybody. We've been watching the futures this morning, and the weakness in the Dow has continued. We were down about 100 points below fair value at the start of the show 2.5 hours ago. Now we're down by 130. S&P futures have turned negative. They're down by about 6.5 points. NASDAQ still indicated up, but just barely. Earlier, it was up by about 100 points. Now it's up by 9.
Tom, it has been a year since Sam Altman, if you remember, made that dramatic comeback at OpenAI right after the board had pushed him out. Joining us now for more on what has changed at OpenAI in the past 12 months, challenges ahead, and where it all goes. Kate Rooney is on the West Coast in San Francisco this morning. Good morning.
Good morning, Andrew. Yeah, great to see you. So it has been a dramatic year for OpenAI since that board coup. There have been some major successes, like raising billions of dollars, for example. But that tension over that weekend revealed, and that it did reveal, it does continue to weigh on OpenAI. Whistleblowers have rung alarm bells about AI safety, essentially checks on how some of that powerful new technology is deployed. And then Sam Altman is in the process of transforming the company into a for-profit entity, which I'm told is making investors happy and normalizing governance, but it could also exacerbate safety concerns. OpenAI's loudest proponents of safety have left that company in the past year. What's now a $157 billion startup started as a nonprofit research lab. One of Altman's top advisors telling me a lot of the tension internally has come from its deep tech roots, clashing with some of the commercial opportunity. For example, its investments from Microsoft and then partnership with Apple. Some of its academic-focused founders worried OpenAI was moving too fast, felt safety was on the back burner at certain points, and that was one reason the board justified firing Altman. Altman and some of his top advisors have publicly said that they are building appropriate guardrails of an independent oversight committee when it comes to safety too, and they compare this technology to nuclear energy. It can be used for good or for mass destruction. Amid all of this, Altman is in the process of transitioning that company to a for-profit, going to have a more traditional governance structure. I'm also told by sources it's looking to become a public benefit corporation, which would give it a dual mandate. So instead of just serving the benefit of humanity, which was its original mission, it would have an obligation as well to increase shareholder value, which is what investors I'm talking to are expecting, guys. Back over to you.
Kate Rooney, it's been fascinating to watch. Here's the question I was going to ask you, which is just in terms of where you think the leaderboard is right now, meaning OpenAI versus Anthropic versus where you think Google really is right now. We're still waiting to hear where Amazon's going to go with all of this. What's your sort of, in terms of where this all going on, and there's also a sense that maybe they're all going to the same place. I don't know if you saw Mark Andreessen on a podcast recently saying that there might be some kind of, not headwind, and then Sam Altman came out publicly and said there is no wall in terms of how quickly and fast this can all go, I think.
Totally. Well, it's subjective, so depending on who you ask, you're going to get a different answer. The consensus, at least in Silicon Valley, is that OpenAI is ahead at this point, that they are the top leading language model with ChatGPT. They have the first mover advantage, and it's sort of the post-it effect where you say, oh, if you're going to use AI, you're going to go to ChatGPT, you're going to ask ChatGPT, so they have that advantage. The worry and the bear case really is that they don't have much of a moat, and they have to spend billions to maintain that moat. You have others like Anthropic, you mentioned, there's Google, there's Amazon nipping at their heels. OpenAI, I would say, right now is ahead, but they're going to have to prove that, and they're going to have to continue to spend to get there and to maintain that position while still balancing, like I said, safety and some of the concerns out there. But right now, they're top dog, at least based on what Silicon Valley would say.
Kate, thank you. Appreciate it.
All right, when we come back, media industry takeaways from the big Mike Tyson-Jake Paul fight. Netflix drawing tens of millions of viewers and a telecast peppered with some technical glitches. And Warner Brothers Discovery reportedly settling its lawsuit against the NBA. We've got Lightshed's Rich Greenfield. He's going to be joining us on all of this. And a reminder for you, as we head to a break, don't miss an interview tomorrow morning at 7 a.m. Eastern Time with none other than Martha Stewart. Stay tuned. You're watching Squawk Box, and this is CNBC.
Thanks.
Netflix announcing Beyonce will perform at halftime during the second of two of its Christmas Day games this year.
Wow.
The Houston Texans are taking on the Baltimore Ravens. Netflix says the show will include the first live performance of songs from Beyonce's country album, Cowboy Carter. It will also include some special guests.
And Netflix reporting 60 million households watched this past weekend's main event boxing match between Mike Tyson and Jake Paul. But the experience was marred by streaming glitches for many viewers, Netflix even acknowledging that. Joining us right now to talk about it is Rich Greenfield. Of course, he comes to us from Lightshed Partners. And Rich, we're also going to get you to weigh in on Warner Brothers Discovery, reportedly settling that lawsuit against the NBA and keeping some basketball content. But let's start with the Netflix game, or the Netflix match. This was a really big deal. 60 million, a ton of viewers. Obviously, we'll be getting more stuff like this down the road, but how significant was the issues they have with streaming to all households?
I mean, the content was a snore fest. I mean, I went to my first UFC fight at MSG on Saturday night, and it was electric relative to watching the Netflix match. But look, what did the Netflix match show you, Becky? It showed you the power of scale. Like, when you reach 280 million households around the world, bringing in, 60, it's like, 20% of Netflix households worldwide tuned in. It's a huge number for television, yet still a small number for Netflix, given how big the platform is. And I think it just shows you that their live strategy is working. They can make events. Like, when you have the reach and engagement, you can drive excitement and build enthusiasm for a live event unlike any other platform. And I think it just shows you Netflix is going to do more and more live events like this.
I had two thoughts that came out of this. One is, if you are the NFL or one of the big leagues, you're looking at this saying, they've got to make sure that this is not going to have any technical issues before we go along with that. And the second was, what happens with the carriage laws? If you look at the FCC and try to get to this point of, will a new incoming FCC look a little differently than Democrat FCCs have, just in terms of who we're going to favor? If this is going to be a forced issue where, the small tech companies that are no longer so small still get a free ride from, whether it be the cable companies or any of the companies that have built these networks that are now creating such a drain on the industry.
Look, tech is hard. There's no doubt tech is hard. If you think about what Comcast and the Peacock team were able to accomplish with the Olympics, there's no doubt this is very hard. On the flip side, I mean, I watched the fight on Friday night, Becky. I didn't have any problems. I know lots of people that didn't have problems. There were definitely issues, but I think the overwhelming majority of people did not have problems. And look, this is crawl, walk, run, right? Like, I think they are working on building up scale for live. This was important as a building block to getting to the NFL. And I think to the extent that the NFL goes better, it may not be perfect, but it goes even better than this. It's two games. Like, they're building up expertise for live. And in terms of, like, from a industry standpoint, meaning from an FCC, I think the FCC is going to want more competition going forward. And so more bidders and more platforms making content. I mean, Netflix making this available reaches more homes than even have, pay TV anymore. I mean, there's more Netflix households in the US than people paying for cable television. So I think from making access to content, putting things on, whether it's Netflix or Amazon Prime, I think is good for American consumers, not bad.
In terms of the tech, real quick, before we go to Warner, do you think, I mean, if you're Roger Goodell, it's to Becky's point, you're having a heart attack thinking, what's it going to look like on Christmas Day? And so since we haven't heard what the actual technical problems were, do you think it's a production issue? Do you think it was a server issue?
My suspicion, Andrew, is just complete simultaneous scale. Like, just the amount of people, those numbers are just, I mean, there's been nothing on Netflix that's even in the ballpark for live of what just happened. I'm not even sure the NFL will be as big as what this was, just knowing what an NFL game does in terms of, traditional household reach. Now, yes, it's Christmas
That's
Day,
a
it's
fair
2
point.
games, that's the only thing on, but those were pretty astounding numbers. 60 million households tuning in for the whole fight on average. That's a pretty crazy number.
Rich, let's talk about Warner Brothers and this settlement
Yeah.
that we think has happened or is happening with the NBA. Is this a great deal for Warner Brothers to have this still there? What's this? I guess from the stock implications, that'd be the first place we look.
Look, I never thought David Zaslav and Warner Brothers should have been suing the NBA. I thought suing partners or, suing sports leagues is not a great long-term strategy. But you know what? Zaslav actually got more than he would have gotten if he hadn't sued. So, I think he walks away with a win here. There's no doubt he got incremental highlight content rights that he would never have gotten. He got overseas content. He can make documentaries like Hard Knocks, NBA without paying incrementally. Like, he definitely got things for fighting the matching rights. But the biggest piece of this, that and inside the NBA swap with Bob Iger and the team over at ESPN, that is
Just
a
for those who
wow,
don't know, it's a
Becky.
licensing deal where they're going to license it out to ESPN and ABC over the next year.
But Becky, they're not paying because they're swapping. So what's going to happen is they're going to get inside the NBA on ESPN. Great, keeps the show going. But on the flip side, Zaslav and WBD Turner, they're going to get a bunch of sports rights from the Big 12. Not the best matches, not the best college or football rights, but incremental sports rights. And all that matters for WBD stock, you look at what investors are worried about. It's, can they get their deals done with Comcast and other distributors for carriage of TNT after losing the NBA? I think this is yet another signal that they're going to have enough content to keep their carriage and not get destroyed by distributors. So my guess is WBD investors are pretty happy today.
All right. Rich, thank you. We're watching that stock. It does look like it's up about 2.8%, but it's great talking to you. Thanks for your time.
Thanks, Becky.
By the way, folks, in light of the NBA news, we want to mention a special interview we have lined up for tomorrow. Composer John Tesh will be joining us. If you don't know already, he was the composer behind the NBA on NBC's theme, Round Ball Rock. Fans are hoping that they're going to hear it when the NBA returns to NBC in the 2025-26 season. But as CNBC's Alex Sherman reported last week, NBC hasn't yet reached a deal to feature the song. We talked about it last week. John Tesh was listening. He's going to join us live tomorrow to talk more about this.
He's the host of Entertainment Tonight to me.
Me too.
I just
You
want
remember his
Very hard,
Very
of
hard.
course. Of course.
Very hard. Not very hard, but very hard, yeah.
100%.
I couldn't believe he was like a musician and composer. It's like,
At the same time, it was amazing.
guy?
Yeah. Remarkable. We look forward to that tomorrow. Coming up, the CEO Perplexity is going to join us on the state of competition in the AI search and assistant market. Do not go anywhere for that important conversation. Squawk Box returns after this. Welcome back to Squawk Box. Got some news from Perplexity AI this morning. The company launching an AI-powered shopping assistant that should help it with consumers as holiday bargain hunting ramps up. Joining us right now to talk about this and the broader competition in AI, Arvind Srivastava is the CEO of Perplexity AI, and we love having you on the broadcast. Congratulations on the new launch. Let's talk about that piece of it, and then let's get into the broader sort of question of where things are. OpenAI recently releasing its own search product. How important is the shopping piece for you?
Yeah, thank you for having me again here, Andrew. So shopping is really essential because it's just one of these verticals where strongly you convey that all these AI products are moving beyond just giving you answers, right? A lot of people say, oh, which AI product should I really use? They're all looking like the same. They're all giving me answers. Some use the web, some don't. But you need to actually enable actions. What do you do after an answer? Purchase, a transaction. So all these products need to get there. So shopping is the first step for us to actually get there, and we're very happy to be the first to do that. Where at Perplexity now becomes a one-stop solution to not just research your products on what to buy, but you can actually go and buy it right there natively on the app. So with one-click buy, which is revolutionary in e-commerce even 20, 30 years ago, we're bringing into AI products, and we're giving free shipping for all people, and they can just take their phone and like point it at some product that they want to buy and just ask, where can I buy this? And they can just get it right there. And this is really powerful. So people can just compare, ask questions they could never ask before, like help me build a library or help me host a disco party. What all do I need to buy? And you just get all the products right there and compare, and all the reviews are surfaced from so many different parts of the web, and you just fulfill your transactions right there.
Well, that's what I was going to ask about. What products you surface, what products you don't surface. Obviously, Amazon has its own search business inside its own platform. Can you get Amazon products on it? Are you know, I hate to use the word scraping, but you know, when you look at reviews on other sites and you're pulling that, is everybody allowing all of this to happen? Are some going to block you? How's it going to work?
Yeah, so we are also introducing this thing called the merchant program, the Perplexity merchant program. And we're inviting merchants to work with us because we think consumers love this, and that's always the long-term correct direction. And so if we can collaboratively build this next generation shopping assistant for all customers, where merchants can bring their catalog to us and product specs and help in the checkout flow, that way we can provide this experience to everybody. And we're already working with Shopify. We're enabling people to check out products on Shopify through ShopPay and bringing it right into our search results.
I mentioned Amazon because Jeff Bezos is a very high-profile investor in your company. Is Amazon involved, and do you think that they will be?
We're not yet ready to talk about who is currently in the program, but we're happy to work with everybody, and that includes Amazon too.
Let's switch gears for a second and just talk more broadly about the search business, if you will, and how AI relates to it. OpenAI recently announced its own search product. How do you think about that product versus your own product versus what you're seeing now from Google with some of the AI features that it's added?
Yeah, like I said, all these products are currently very similar in the minds of the average consumer, or they're all giving me answers to questions. Right, I think you need to go beyond that. You need to provide real-time information on verticals that matter in everyone's lives. Sports, finance, we did the election hub when the elections were going on. Today we're doing shopping. We're enabling not just information, but actions, transactions. So AI products need to move to a direction where commerce and businesses and consumers transact with each other, and everyday information is provided in a much more end-to-end workflow and custom UIs. So that's what we are working on, and we feel like we are ahead of everybody else in that direction. And I think that's what we need to keep doing more of. More verticals, travel, finance, a lot of things need to be done here.
Do you feel like you have more leeway perhaps to do certain things that some of the maybe bigger companies don't? I ask because, interestingly, if you went to OpenAI and asked political questions the night of the election, as you know so well, it would send you off to other places. It did not want to answer those questions. That was a choice that they made. You made a very different choice, which was to lean in fully into the election and create an entire hub around it. How do you think about those two choices and the permission, if you will, that you may have to do something like that maybe OpenAI doesn't feel like it does because of its size and scale?
Well, it's not about necessarily the size and scale. Like, for example, Google also provided the election results on Google search results, right? So it's about your focus. Do you really want to be a search product? Do you really want to like play in the search game? You cannot do 100 things, right? There's a quote of Bruce Lee. It's like, I fear the man who I don't fear the man who does 10,000 kicks once. I fear the man who does one kick 10,000 times. So you have to really focus on one thing and nail it. And there are like a lot of things to do in a company. So that's exactly why our differentiation from OpenAI comes from. OpenAI is an AGI company. They focus on building models. We are a search company focused on building the next generation search experience for consumers.
Hey, I got a big question for you. I was thinking about it all night last night, which is, Google is in the middle of this major lawsuit with the Department of Justice. Owns about 90% of the search business right now. And there is a potential that a judge could ultimately decide to break up the company or do something else to it. Where do you stand on that case and the competition or lack of competition in that space?
I think it's good for American consumers if there are more alternatives in search in general. And we are very interested in not just trying to build the same product as Google and trying to compete for market share on 10 blue links, but provide new experiences to people. And we're doing our part, regardless of what the DOJ rules, we're doing our part to keep pushing the boundaries of what search can be, right? Search can be answers, search can be actions,
right?
And shopping can be redefined. So that's how we're thinking about it.
Do you think about the search business then differently now? Meaning, it used to be in the blue link economy, as I think you've described it, that is one type of search. But now that we are living with AI and what you're doing and what OpenAI is doing and what Anthropic's doing and what others are doing, Amazon with its own search and do you say to yourself that the ecosystem is that much larger and therefore when people use the 90% market share that Google has, you say that's just a small slice of search? Or do you say that really is the business? This goes to market size in a way.
Yeah, I believe so. I would in fact say it's a different market in the sense that the median search query on Google is 2 to 3 words. The median search query on Perplexity is around 10 to 11 words. So people are actually able to ask very detailed questions, much higher intent questions here. And that was not something they were able to do on Google before. So in some sense, that is a new market, that's a new consumer trend that's on the rise. On the other hand, the behavior of people to go and type in Amazon, Instagram, Reddit, TikTok, YouTube, just like these one-word navigational queries on Google, is sort of saturated. Pretty much everybody on the planet knows how to do that, and they do it on a daily basis, right? So we're not competing for those queries, essentially.
Arvind, this is a fascinating conversation. I hope you come on back. We can continue it. Really appreciate it. And I don't have to admit it, I'm a Perplexity user. And happily so. Thanks.
Thank you.
Coming up, top stocks to watch ahead of the opening bell. Squawk Box returning right now.
Just over half an hour now until the opening bell on Wall Street. Don Chu joins us now to look at some of the morning's top pre-market movers. Hey, Don.
Hey, so Joe, let's start things off with the stock of the week. That's computer chip giant NVIDIA, reporting earnings after Wednesday's close. The options market is, by the way, already pricing in what could be a 10% move up or down in those shares after that report. That's slightly more volatile than the 9% move over the last 8 quarters after earnings. We're also keeping an eye on a report out of the information that NVIDIA's next-gen Blackwell AI chips may be part of server systems that can potentially overheat. NVIDIA shares down 2.5%. CVS is another big mover this morning. It's up right now nearly 2% after an upgrade to overweight from equal weight over at Wells Fargo. They're also raising their target price to $66 from $60. They're predicting that the, quote, negative consequences from its insurance arm, Aetna, have reached their highest point. They also announced 4 new board members earlier today. And we'll end on a gain in Roku shares around 2.5% higher after analysts at Baird upgraded the streaming video device maker to an outperform from neutral. They raised the target price to 90 from 70. They're citing improvements to strategy and continued industry trends away from traditional television, amongst other things. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro, guys. Subscribers get the full story. I'll send things back over to you guys.
Thanks, Tom. Final check on the markets. You can see the futures right now are about where they've been. They were down triple digits on the Dow, but the NASDAQ continues to trade up in anticipation. NVIDIA, one of the stragglers, will report later this week. We'll be bringing it to you. Make sure you join us tomorrow. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Take a look at the pre-market. Bulls trying to protect some of this post-election rally, which about half has been undone in the past week or so. Big week for retail earnings, of course, and NVIDIA on Wednesday. Our roadmap is going to begin with some exciting stuff. We'll talk about stocks and the markets and earnings and the Trump trade. David?
Yeah, we will. Elon Musk and the post-election boost for Tesla as well. Those shares are up sharply in the pre-market, and NVIDIA shares are also under pressure. As you heard Joe just mention, according to tech publication The Information, the company has asked suppliers to change the design of the server racks for its new Blackwell AI chips due to overheating issues. We'll have more on that as well, guys.
Let's begin with Elon Musk in this post-election boost for Tesla. Shares are up sharply in the pre-market. According to Bloomberg, some members of the Trump transition team are looking to create a new federal framework that would essentially ease rules for full self-driving, Jim. The report goes on to say that they're apparently going to be a top priority for DOT.
Right. I think that we have to recognize that there are a lot of things that are coming out of Washington that sound really authoritative and sound like basically they're layups. And then you have this problem that these were all things that were left to the states and the cities. So suddenly the federal government's trying to claw back something. And David, you can't do that. I mean, unless we're a federalist system, but we have left certain requirements about everything from insurance and vehicle inspection to the states. So you can't just like say, you know what, this is a federal issue and we're going to let people drive these cars. It won't, the government will be sued, it won't happen. It's just something to talk about.
Okay. I feel like we did that a lot during the first Trump administration. We would talk about a lot of things because he tweets something or whatever, and then it would never actually happen. Is that, do you put this in that category?
Well, I think it's a little more firepower because you have Musk in there going for it. But
yeah.
In the end, we do have a regulatory framework, and the regulatory framework cannot be blown up as easily as if we're going to say, you know what, we're going to frack on national land. It's not like that. We're not going to, there's no national land we're going to drive on. Now, remember, I posed to you last week that the interstate highway system is indeed federal, but the lead up to the interstate highway system is controlled by the states and by local government. So you can't just, so yes, I'm going to say that even though this has more authority, this isn't what's going to make it happen.
That said, Mr. Musk seems to have significant influence, at least at this point. Now, whether that will be maintained, grow, diminish, I don't know.
Right.
But certainly he does seem to be involved, based on the reports that we all read, in a lot of the decision-making that is going on, including the appointment of, for example, the Treasury Secretary, the debate for which continues.
Well, look, I had the CEO of Energy on last week. The Energy's got nukes. And we were talking about how great it would be to have like a nuclear power grid and how terrific it would be. And it looks like that the new energy secretary might even like that. But it doesn't matter. It doesn't matter because we're stuck with this system that since like the Federalist Papers that you can't really throw out. I mean, Carl, we can all talk about it as if there is no government other than the federal government, but in the end, I don't know if we're doing our viewers a disservice and just saying, look, this can happen. I do believe that Tesla's self-driving is terrific, and it should have every right to be, but that doesn't make it.
Sounds like you're really underestimating their resolve, Jim, in undoing huge pieces of the administrative state.
I just think that we're not a federalist system when it comes to self-driving. I think that I mean, when you talk to the insurance companies, they would say, listen, this is a federal issue. We, of course, on the highways, on the interstate highway, but it's not locally. And I just keep thinking about what's happening in California, and California is statewide, but it's not federal. And then you got Austin, you have Atlanta, you've got Phoenix. These are all municipalities. And sure, it would be fantastic if we could just wave a wand. But that's not been the way of our government. I don't know whether it can change. There are courts that will.
Well, that's where it's going.
Yeah,
it's going to get tied up in courts.
Yeah, so I mean, then we start saying, oh well, let's say they get a Trump judge, but then it goes to the appellate. Well, then it goes to the Supremes. I'm just saying that these are things. Now you're starting to talk about 4-year processes, and I want to get so excited about it because I really believe in self-driving. I just have to restrain myself in the same way I love nuclear. But you got to restrain yourself. These are no wave wands. You can't wave a wand.
Well, no, you can't wave a wand and build a small modular reactor in a week or 2
now
weeks.
Now put back to 2033 later.
Or even 2 years.
2033.
Unfortunately, we didn't begin on this pace for nuclear in particular years ago, in which case it would certainly have smoothed the transition. Although the potential incoming Secretary of Energy is not a believer necessarily in the transition at all.
Well, the Liberty Energy, the Liberty Energy, which he founded, is up 5 pre-market. He's on the board of Oklo. That's up 10
I saw that on page 12 of the deck. Now, I think that this is something I'm going to ask David to actually stick his neck out here.
Oh, no.
Here's the conclusion tenets of a company, Liberty Energy, a great fracking company. They would frack in your kid's schoolyard if they had a chance. I'm not kidding. I went to Penn Manor. They've closed it, but it would have been a great natural gas fracking area.
Well, in Pennsylvania, of course.
Okay, first conclusion. 1, there is no climate crisis.
Okay.
2, there is no energy transition. But this is my favorite. Net zero, David, 2050, sinister goal.
It's a sinister
goal. And just so we know, wind and solar subsidies, they've been disastrous. Now, this is, I know, David,
let's give them the
he secretly believes in this.
Okay, this is the...
It's called their DAC.
Oh, their DAC from August 19th?
It's their DAC from their company.
Wow.
Yeah, I know. Well, you might like this one, too. Affordable, reliable, secure energy is foundational to successful societies. That is the one that I agree with.
Well, it sounds to me, Carl, like there's going to be a lot more drilling, a lot more fracking.
I love this guy. I mean, this Statue of Liberty, if that had natural gas...
Is this Liberty Energy?
Move over, Sister Liberty. This guy has got game.
You can move the Statue of Liberty.
This thing is like, I think there's a CBS program about him. It's like CBS Climate Control. You know, and they blow up things and stuff. You ever see? I mean, I'm watching all this football, and I see that
it's a new one.
Nations,
it's a new one.
Some states just have fire and fire and fire.
Oh, you mean Fire Country?
Fire Country.
Paramount
This is Fire Country, right? There's no climate control. It's just burn, baby, burn, baby, burn.
We've got 11 fires in the state of New York and New Jersey.
My favorite is Sinister. I like that. Sinister goal.
I had to put out my fire in my fireplace this weekend. All right. Don't you know, we're in New Jersey.
Most likely this, Mr. Wright, will be, I don't know, in the confirmation process. So, and by the way, the Department of Energy was set up to actually deal with the nuclear...
Yeah, I don't know if
nuclear issues overall, in particular, from making the atomic bomb and make sure we're all right. Isn't that where it originally came from?
Granholm, I don't know if she agrees with this. I do think, though, Carl, there is no climate crisis and near net zero 2050 is a sinister goal. These are new for many of the people who thought that things were getting warmer and stuff.
And do you also believe that this, like you said about transportation, will wind up in a state, federal, city, federal fight in the judiciary?
Yes. I mean, I don't think that you can, this is not, we look, hate it or like it, we have a system that gives a lot of power to the states.
All right, but I want to come back to one thing here, which is the investment cases here. Just hold on. That's all right. Let's assume he gets confirmed. Let's assume we can that there's going to be a policy that says more fracking, more drilling, more all over the place.
Right.
What do you buy? What don't you buy?
You buy Liberty Energy, LBRT.
Do you?
Well, no, it's not
sends,
really low.
by
It's
the
also
way,
9 times earnings.
if you, where are we now? 13.3 million a day?
Yeah, we're 13.5.
Okay, 13.5. I mean, if we continue to produce even more, the price comes down.
Yes, that's what happened in 2016.
But then typically, they don't want to produce as much because, I mean, it's not profitable at a certain level. Or not nearly as profitable.
You have to hope that one of the first things that a president like Trump does is get rid of the pause that we have on liquefied natural gas plants that can export, and then you would buy natural gas, betting that at that point it would start being the way that Europe heats itself, and that wean themselves off of Russia.
Unless the war there ends and Russia starts supplying Europe again.
Well, that's point number 9.
War did blow up Nord Stream, so they're not going to be able to use that to get to Germany anymore.
Yeah, David said something interesting. He said, you know, we're going to talk a lot about what happened, just like in 2016, nothing will occur. David, net zero 2050, if you're at the desk with me, we're going to discuss how sinister it was. We're going to look back. Sinister. Odd choice. I would have said maybe ill-advised. I'm going to incorporate sinister. Like, you know, how's...
It's a good word, though.
Yeah, like how's a super micro sinister situation? It's a great word.
Well, it may not get delisted. Let's talk a little NVIDIA.
Speaking
Far
sinister.
from a sinister situation, but the stock is going to be under some pressure.
Okay, let's
According
go
to
there. You wanna go there?
Publication of the information, the company has asked suppliers to change the design of the server racks for its new Blackwell AI chips. They've been overheating, or at least more so than had been anticipated. Reports says word of the repeated design changes has sparked customer worries that it's going to take a little while, and therefore there may be some delays. Michael Dell, though, came out favorably.
Yeah, Michael Dell's the real installer. Michael Dell is saying, listen, we're installing it. Now, we don't have Super Micro, obviously, they got their own issues. HP,
But they say they're installing it for CoreWeave, and it's working fine.
Yes,
72 GPUs per...
Well, it's very hot. I mean, look, I had Rich Tobin from Dover on Friday, and Dover makes the cooling system. Said it's not a problem. They do think ultimately it's got to be cryogenic. They've got that too. But David, I want to talk about the journalism business, okay? If you wanted to create a very negative story about NVIDIA, and you wanted to make it so they couldn't respond, would you pick a few days before they report in order to break that story?
I don't know. I'm not necessarily going to say you would.
No, it was a totally rhetorical question. It was the way I could get the point across. That was it about. I'm saying that this was a devastating piece to write because NVIDIA can't respond because they're in quiet.
Quiet period?
Yeah. And that's why I felt that Michael Dell, who, by the way, there's a speech, you know, there was a big speech today at this Atlanta conference of supercomputers. Michael Dell's basically saying, look, don't worry about this. Now,
Who's giving the big speech today? Sorry.
Jensen.
Oh, Jensen is giving a speech. So, quiet period, but he can still talk.
Well, he can speak in general about the company. He can't address the information's hit job.
Rarely have I seen a chief executive talk more than Jensen does.
Well, he has a lot to say.
Clearly.
Most of us don't have as much to say as Jensen.
I listened to a podcast that he was on this weekend, actually.
How was it?
It was great. I understood about 50% of what he was discussing.
50% more than I thought you would.
Yeah.
You know, Carl, I'm just saying that, you know, if you want... I mean, I read this story and I said, oh my God, this is the second time we've seen something from the information in a similar time frame. Now, I don't know the publication. I know that we have Ms. Lesson on, and I don't know the public. I mean, I was never involved with the publication, but I read it.
I think they do good work.
I think that they can do good
They have
work.
some good
I'm
people.
just saying.
I've, relied on them to a certain extent. I thought they did some good work on talking about Elon Musk's data center in Memphis, for example, that helped me sort of understand when I reported on Friday about the latest capital raise for XAI.
I think that's terrific. And I do think also that when you put this piece out, you're also cognizant that there's no response from NVIDIA, which makes it seem like therefore it's right. And all I'm saying is that if you want to sell it on this piece of information, look how you sold, if you sold the previous piece of information, you got crushed.
What does that even... There's no other competitor to the Blackwell, right? You got to buy Blackwell.
Well, okay, so
what does it matter? Even if the piece is 100% correct, ultimately, what is the difference?
He's right. He's right, and that's what people are doing, is selling it. Now, I don't necessarily know how good the quarter's going to be. I do know that everyone, Jensen Wong told me that this thing runs hot. There are issues when it runs this hot. One of the things that is important is it has to be liquid cooled. Now, the article made it sound like if it's air cooled, it won't work. But anybody who knows these black holes knows they are liquid cooled. That's what Supermicro came home and they were still talking. They told me that. That's what Tobin from Dover, who makes the technology for liquid cooled, Michael Dell has said liquid cooled. So let's just stop acting like this is a crisis. And I will go so far as to say my trust owns AMD. AMD is up 4 points on this. That is not a reason to own AMD.
You really don't like some of these easy narratives, either on the upside with Tesla or the downside on NVIDIA today. You think the picture's a lot muddier.
Yes, I do. And I think it's important that we respect our viewers and tell them, look, this is not necessarily the way the story's going to play out.
When we come back, we'll talk some CVS and Glenview agreeing to some board changes at the healthcare company. In the next hour, an interview with Glenview's Larry Robbins. David's going to be all over that. We'll get to a bunch of other news regarding Netflix and T-Mo and some of the banks and Vertiv and Disney's win streak when we return.
Take a look at shares of CVS this morning. The stock is going to be up on news that it is adding 4 new board members, including Glenview Capital's Larry Robbins, who's been active in the stock. Constructive, perhaps, is the word that he would prefer to use, in the sense that he has been trying to encourage the company to focus not on a split, which of course had sort of engaged some shareholders as an opportunity or a possibility of creating some value there, splitting essentially the healthcare and the retail businesses, but trying to get the company to focus more on its execution, particularly when it comes to Medicare Advantage, where it mispriced, Jim, a lot of policies previously. It has dismissed its former chief executive. It has a new CEO, and now it has 4 new board members, including Mr. Robbins. They are as well Leslie Norwalk, Guy Sansone, currently chairman and CEO of H2 Health, and Doug Schulman. My understanding is 3 of the 4 were essentially recommended by Glenview. The other was mutually acceptable to both companies. The board goes up to 16 members, but my understanding is it will eventually come back down to being 12. So significant board composition change here for Glenview, which really, you know, obviously believes in the company and certainly will believe in it and have to believe in it long term, and thinks that they have to get their house in order when it comes to the way they price things previously, and will do so on the healthcare side of the business, not on what we talk about so often as sort of the challenges that retail faces in terms of those CVS on your corner.
Well, David Joyner sent me, the new CEO, with very positive, convivial comments. And when you need something like when you have Leslie, Larry, Guy, and Doug join the board, I mean, there's a kind of what I regard as being a comedy, but not the COMEDY kind.
Right, comedy as in
and you know, aligned on value of integrated strategy, industry's leading businesses, but addressing the challenges. New leader at Aetna, I think, is really important. So
yes.
I happen to think everything, all my communications with Mr. Joyner are so positive. And I also think that they did close all the underperforming CVSs. Unfortunately, we do know that just may add up to a whole new round of underperforming CVSs, but they're directly adjusting the Aetna.
And to your point on November, I think it was November 6th, but early in the month of November, they did appoint a new leadership team.
Yes.
Right, with Fran Shaw, group president, have responsibility for CVS Caremark, and Steve Nelson, president of Aetna.
Right.
A lot more opportunity to talk to Larry about it when he joins me.
I'd be interested to see what his take is on Mr. Joyner
to talk through this.
Because I think that Mr. Joyner is someone who realizes we screwed up, not on the store side. I mean, I think all of us were
and also some acquisitions that
overpay.
Yeah, they
overpay.
It was not that they overpaid for
I
as
don't know.
well. Again, not during his leadership period, but nonetheless, certainly has been some
I bet you
frustration. If you go back and take a look at a long term on CVS, you'll
this is
see.
very collegial.
Yes,
very collegial.
yes, they've been working behind the scenes for some
That's
time.
good.
And again, the proof will be when the stock does something different than what you see right there.
Well, already Wells
not great.
Wells ups to overweight today, Jim.
Yes.
66 target.
I think first let me just say I like Karen Lynch. I think she was doing a lot to try to diversify because they did have this period obviously where the brick and mortar is being killed by Amazon. Now they have to address the Aetna. Even though she was from the Aetna side, it was unfortunate the way things shook out. Did she deserve better? I'm not involved with the company, but I do know that I don't think it was. I think it was so summarily done. It does seem tough.
Hey,
but that's right.
It's a lot better than owning Walgreens Boots Alliance.
Well, I think that David's doing a good job. I'm just saying, I'm just sensitive to the idea that here's a person who was on my show like 2 weeks before she was fired, and I thought she was trying to get the brick and mortar part done right, but the Aetna part was probably and the acquisitions were.
You didn't give her a "you can't handle the truth" interview either, so you weren't responsible.
No, I didn't.
What is that?
I've done that.
Oh, I got socks. I just now
We
noticed.
were here for that.
Jim issued the code red.
Yeah.
You're right. I did.
I can't take that job. Larry Kudlow turned it down.
Oh, my good socks.
We'll get Kramer's Man Dash countdown to the opening bell. Plenty of sell-side calls to get to today, including Hood, HPE, Roku, Biogen, Moderna. In a moment.
Oh, they make the good ones. Okay, what time is it?
take a look at some pre-market gainers this morning. Jim mentioned SMCI and his plan to avoid a delisting. We'll talk more about it, along with Tesla. As we mentioned earlier today, this Bloomberg piece about a potential federal framework for full FSD. You can catch us anytime, anywhere. Just listen to it.
Yeah, you little bears.
Opening Bell Podcast.
Good morning, retail traders. It's a little different when you have a switch of administrations, like on Tesla. This Biden regime is supposed to be all green. A better thing about being all green and recycling and innovation. So what did they do? They spent 4 years bashing Elon Musk, probably one of the lead pioneers of AI, EV cars, solar panels. The list goes on. Now that we have a new administration that's going to be a little bit more, I would say, listening to entrepreneurs, to people like Elon Musk, not business people, but people that can look into the future. You know, we're looking ahead 100 years. What is this country going to be like 100 years from now? With Elon Musk at the helm, guiding Trump, it's going to be a great world if we can just get these stupid Democrats to get on board. But there is so much into race baiting and division that the social justice, that they don't give much of a care about innovation and making life cheap again. So I'm excited about Elon with Doge, and then you got the cleaning up, if they can get away with it, which I think they're going to. So there's going to be a lot of good things happening probably in the next 4 years. America's open for business. Just if we can get, and then Biden comes out and wanting to start a World War III. I mean, come on, you got 2 months in office, man. Just give it a frickin' break. We don't need to be nuked or go into World War III. I mean, get Trump in there and let him decide how it works out. We've got 1 minute left. So we've got Mara down under 20 now. Uber's down 184. PLTR's down some here. It could probably come down more. We've got a bottom of the right around 60. Coins down $6. Disney down $1.20. SMCI up $1.80. Tesla's up. Affirm is up. Zim, it's got earnings this week. I figure this is going to be a good stock once we stop these wars. Nile's got earnings this week. DraftKings up a little bit. SPX has opened up flat more or less. See if it wants to come back and retest the shoulder line. We got a 1, 2, 3 top. Oh, 5 for Baba. Spy's pulling back here with a higher low. 3 black crows. Oh, what? Hurry up. God darn it. What is today? The 18th. The 586 strike. The 586. Man, I'm not feeling good today. November. Oh, Baba. I'm in Spy. For Scout. Might not. $17, $18, there's my $100. Out at the VWAP. $118 right there. Off to the beach. Ah, darn. Well, there goes that. uh, 133. 35. Damn it. Randy. I think I should have probably stopped there, but I went ahead and sold him for $100.
Yeah. And yeah, you're still seeing big moves in names like Tesla, but you see names like Palantir making a pullback. So to me, some of these winners that got
250.
really out of control maybe in their
Totally.
round are just easing back.
Yeah, I need to take a little bit of a
DraftKings, nice bank.
2.2, VIX getting to 13.5. If you look at it through the lens of VIX, just that seemed very low for what is still, even if it's a positive situation with all this new policy that people are expecting and stuff, it's still kind of high beta one. So it seemed like VIX at 13.5 was just a little bit low. Like even if we are going to have an uptrend, and still, VIX doesn't have to be at those depths, which just kind of suggests a degree of passiveness to the economy that we don't have right now. Like
We've
states
also
are higher
talked
than that.
about the relationship between DSPX and VIX.
Yeah, dispersion.
DSPX, which is going to be, if you just sort of calculated every individual stock's volatility in the S&P 500 and then use that to do the VIX as opposed to the whole basket, it's in the 30s still.
It is,
and
32.
so when you start to see that relationship get out of whack where it's like 2.5, 3 times higher, that's been a moment where you do get these pullbacks. Now, it's not a perfect timing mechanism, but it's kind of reflective that under the surface, there's still volatility bubbling. There's still moves taking place.
Quite a bit out of the money. I don't know why I did that.
You have NVIDIA down 3%. You have Palantir down 6%. You have Amazon and AMD higher. You have AMD up 3.7%. So there's moves taking place. But if you kind of are pulling in opposite directions, sometimes the basket itself is unchanged. You can see that in the S&Ps. So it's not indicative of the individual equity volatility. DSPX is much more indicative of that. But because there's so much up, so much down, fairly balanced, looking at the advanced declines, basically split 280 to 220. You're looking like you have an unchanged market. If you look into the surface, there's some big movement.
That's a really good point. It's exactly what Jim Kerr
LLY, more drama.
out for as well, even in a low vol environment, to have high dispersion.
Now with FDR at the table, you know, we could see a nice, good big pullback on a lot of these pharmaceuticals because they've been kind of ripping everybody off big time, especially since Obamacare. They've made a boatload of money off your tax dollar. Boatload. I got example after example. Now I got Palo, P-A-N-W this week, earnings. INTU. Got a double bottom on INTU right now. Uber's got a new low. I've been keeping an eye on Uber. If you're an Uber fan, I don't trade it too much. Mister's up today. CLSK's up this morning, hit resistance. We got a pull back on Coin, and we pulled back on Mara. And then we got Baba China. I'm gonna break out on K-Web, double top on JD. China. PDD is at the 200 on the 1 hour. And then I'm in Baba long for December. George.
Raising it up on something, it's like, oh boy, I'm screwed.
Well, look, if you like I said, these are NVIDIA's custom servers. This is again what I infer from what's been reported.
All right, but the way they've got them set up.
I'd have dinner with George.
Yeah, or basically the way they're designed. So you can see that eventually, NVIDIA will be vertically integrated in all their hardware, and this may include servers, but also software. So. It looks like they're having a problem with the server component, their customized servers versus the outsourced servers. This is what I.
Nike's got a big knife.
Okay, so the other report actually I see too that's important is that the spokesperson for NVIDIA said
got earnings this week on TJX.
They declined to comment if they finalized the Blackwell actual racks. So. They should be making something new on top of it, sounds like. So they might be a little bit just kind of moving slow. Because now people are asking them if they're going to make new racks for them. So, I mean, it's kind of like they are just the game in town. So they're able to get by with this. Hold on. We're gonna
So they brought down the price. That's kind of strange. TD Cohen just price target on Nike to 73 from 78. So he's buying at 73. He wants to get in this trade. That or he's shorting it, and he wants to make sure he can get every penny he can get out of it. I don't trust Cohen, period. Nike needs 90 like innovations to counter current competitive challenges. They didn't get it. Nike's biggest mistake, one, going woke, sponsoring athletes that hate America. Number two, number three is competition. I got 3 different brands of shoes back there on my camp that I wear. I can't remember ever buying a pair of Nike. I probably did once, but I just don't remember. They were too political for me. I didn't want to buy them. What was another one? Target. Snow. Ooh, Target's nice. Then we got snow earnings this week. Okay, SPY's pulling back here. Oh, yeah. SPX. 1, 2, 3 on the SPX. Okay, SPX. Oh, did I trade the SPY on the 18th? I sure did, didn't I? Wow. That's something I'd never do. So I'm watching SPX right here. We could come down and hit this other support. And that'd be number 5 candle, or we pull right here and we jump in. So I'm going to grab one. Hmm, 58.90s. Yeah. There we go, baby. It's debt. Dadgummit. I was up. Hmm. Yeah. I knew it would go down there. Now that makes... Hey. Got a double bottom. I really want this year to get over with. I determined this is the year of 2024 where I broke about everything I own. I mean, I can't believe how much shit I broke this year. I hardly ever break anything. Anything I've ever had, I made it last as long as I could, or there's so many things that broke on me this year. I don't know if it's normal or not. Like, if you had a year where you just said, God, does it ever stop? Or is it just me? It's having one heck of a year. I mean, my mop bucket broke yesterday. Something else broke. I had to go get a new phone. I've cracked it twice this year. Yep, I've hardly ever broke anything. So it is natural, I guess. I told the guy at the cell phone place, I said, I don't want to program this phone. I'm afraid I'm going to break it. I'll pay you $30, whatever. Get this sucker working again. Come on, baby. I don't know if I should. I'm at 350. I need 375. Break it. I got 2 contracts. Double bottom, higher low. I'm almost going to decide to become a minimalist. Do it my way. I need it to break. Pot stocks are down. Got a double bottom on Meta. Damn it.
It's going to go higher post earnings. This strategy takes advantage of that. So it went out to the November 29th weekly series, so just 11 days to expiration, and buying the slightly out of the money or the 140 strike calls. just out of the money to the upside. And then again, the near term, November 22nd weekly options that expire on Friday, and has that implied volatility bubble there, sell on 150 strike call. So in essence, you're creating a bullish $10 wide call diagonal, only 1 week wide, so it's basically an earnings type of position. $10 wide, you're paying roughly about $4.10 for that. So there's going to be your risk. You're paying less than half the width of this call diagonal. And why is that? Well, because you're buying about an 85% implied volatility on aggregate in those November 29th options where you bought the 140 calls, and selling about 125% in the near term November 22nd weekly 150 calls that you sold. So that's why it's less than half the width of this call diagonal. Break even about 142 on this, so you don't need that big of a move, about 3% move higher to get above that break even. You'll have the ability to roll that short call, also collecting credits, but you can see here from the risk profile, you just want it to kind of grind higher, go up towards 150. That's going to be about that 1 standard deviation move to the upside, but because you're paying less in the width of it, yeah, anything above that break even of about 142 is going to be.
I'm green.
So, taking
Oh no, I'm not.
that dispersion between implied volatility
Wrong one.
we talk about going into earnings because vol is so high in those near-term options.
Wow. Yeah. Okay. So bottom
Nope.
line is if you're trading Nvidia around
Not green. It's
the
break.
earnings still, you probably don't want to go like purely directional. There's just too
I'm gonna go
much
get some
juice in
coffee
the options
made.
to pass up to try and give yourself some kind of.
But that's the thing. I mean, you can be directional.
Yeah.
Advantage of the
Like, I mean,
implied
like
volatility.
pure, just like
Yeah.
owning an option around the.
Right,
It
buying
doesn't seem like.
buying the 140 call without offsetting some of the costs and taking advantage of that high implied volatility. Probably not the right way that you want to look at this. And then because you're doing the call diagonal instead of just buying like the 140 call, it's going to cost you a lot more option premium on that also, and that's going to raise your break even to the upside. Now, this is a strategy that, hey, if you are bearish, think Nvidia is going down, hey, still take advantage of that vol dispersion. Just buy a put diagonal to the downside where you buy the 140 put and sell the 130 put in the near-term options. You're going to pay a lot less than the width of the diagonal that you put on, whether it's bullish in this, like this example, or bearish if you want to do the put side.
The market maker move, I mean, at $13.5 is big. So obviously looking for more than 10%. The fact that you've got some pretty clear levels on the chart that are within that range, I feel like make it particularly tradable this time around. Like clearly you've got resistance somewhere up at like 147-ish, 148, which is where we just spent the past week. That's within the market maker move. So you're getting pretty good juice to collect that if you're selling, beyond there. Same thing with kind of 134 to the downside, which was a support from earlier this week too. That's all within the market maker expectations. So there's a lot of tradable stuff in here with high odds.
Those 150 strike calls in the near-term options that expire in 4 days, there's over $3 worth of option premium in those, and they're over $12 out of the money to the upside. So it tells you how high implied volatility is.
All right, thanks Tom, appreciate the trade. Nvidia down about 2.7%. Coming back for an hour or two, we're going to talk some consumer, another big story this week. We'll look at Walmart ahead of earnings, Target.
Walmart earnings.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
Okay, I'm at 380.
Up to the minute news and insights.
I'm up $10.
Trade brilliantly with Schwab.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
390.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab.
420. Randy.
Schwab Bank Investor Checking
Randy.
account built for investors, named highest in client satisfaction by
Okay.
J.D. Power for 6 years in a row. With
Get ready,
Checking,
450.
you get the
Take it.
award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With
I risked my case.
withdrawals worldwide, no overdraft fees, enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
480.
Moving funds between your accounts is easy. Cash moved to your brokerage account
Okay, that's it.
in seconds. That means you can stop waiting and start investing
That's
in
it.
stocks, bonds, money market funds, and more.
Make a business decision now. Make a business decision now. You mess with me, you mess around, man. Don't be messing around with Bobo. Out at 5'10", nigga. Out at 5'10", nigga. Oh, heck, I put that in the wrong room. Oh my God. $550, $60. Woo! How's that go again? Let me see if I can get this right. The Trump dance. Oh, I don't think I've been on here, have I? I got to redo this. You got to see me do the Trump dance. $6. I'm out of it now, though. Trump dance.
Now, in an open letter to its customers, Spirit CEO Ted Christie said the most important thing to know is you can continue to book and fly now and in the future. adding that you can continue to benefit from free Spirit loyalty program, the Savers Club perks, and the credit card terms. So I think that's important, obviously, heading into the business.
Spirit Airlines files for
period.
bankruptcy.
Also, Spirit pointed out in the letter that other airlines are operating successfully after undertaking a similar process, although this is the first time we've seen an airline declare Chapter 11 or file for Chapter 11 since American Airlines did it some 13 years ago. So it's been a while. Spirit shares halted. They will be delisted from the New York Stock Exchange according to the airline. But if you take a look at shares of some of the competitors, Frontier Group down 13% today. JetBlue, obviously the majority of those losses due in large part because of the failed merger attempt with JetBlue. JetBlue shares down 7% today, but American, United, Delta, all lower today as well. Seeing some weakness in the travel trade overall, aside from Trip.com, which it reports later today. So a bad day for the airlines, and obviously this is
we'll get delisted.
The first step, and first of many steps that Spirit has had to, tried to take to correct itself, and we'll see how this all plays out, but can still continue flying Spirit.
Another meme stock bites the dust. Remember when Spirit was a meme stock for a minute? People were.
That, yeah.
Yeah, in fact, I think that we were on the clip that went viral from Dave Portnoy because he was a big Spirit guy when he was trading stocks. I don't know if he still is. And literally, and I think I got more messages
Probably
about that.
not admitting to it if he
Yeah.
is.
Yeah, we were in that for sure, talking about Spirit. Okay. That kind of montage. All right, so, look, it's pretty rough. Kind of seems like it was written on the wall for a while, though. And generally, the industry's been pretty robust. So I can kind of see why there's a little bit of a chill in the sector this morning because, ultimately, there's a lot of airline-specific things that each company can change and work on their own, and it seems they're just the discount market wasn't as big as people thought, and especially because some of the big airlines also were able to compete as well. So stock specific, but at the same time, I can get why the rest of the stuff is down too because it's it's a big company. A lot of people interact with it.
The competition. The increased competition, it was one of the big headwinds for Spirit, the fact that other airlines were able to offer low costs. And then, of course, from the United
Low
States
cost.
the world, with the more international exposure, we saw that people don't necessarily need the low-cost carriers either. They're willing to pay up for the
Oh, God.
experience, if you will, but also facing high labor costs. They've been dealing with engine issues that kept some planes on the ground, which of course other airlines have been dealing with.
There's no low cost in
That's all
airline flights. Period, honey. They're up $200 or $300 each. No matter wherever I want to go, it's going to cost me $200 or $300 more than it did 3 or 4 years ago.
sold aircraft. None of it was enough, and obviously didn't prevent it from having to file for Chapter 11. So some of those headwinds still very much exist in the industry as well, which why we could see a Frontier, for example, down quite a bit. There was talk that after that JetBlue deal failed, that they might revive the merger talk with Frontier. But then last week said Frontier wasn't interested at this time in terms of a merger as well. So
their stock's down 14% this morning now. I'm looking at it right now.
So we're seeing
airlines are down because of this.
Because it's the closest
For sure.
competitor
The only other
in the group.
airline that requires you to click 14,000 buttons when you book something. It's like, I don't know how people figure that out. Like, it's insane trying to book something on these, especially since they try to offer more premium offerings and seats. That's one lesson.
That's right, man. They're up. I don't know what she comes in saying they're cheap.
Regular to business airline down to cheap, right? Where like American and United and the other ones, they could put in some extra seats, sell them for less, keep the first class and business, all that. But when you're Spirit or you're Frontier, then you try and start offering premium. It's like too late, man. You don't get to go in that direction.
I was tasked with booking multiple family members' flights to the same destination, but we all had to fly different airlines and different points and whatever. And it was very hard to find the basic economy, the cheapest fares. I think it was on United or American. I had to go through Google Flights to actually try to book the cheapest flight because they hit it so much that you couldn't even find the option to do the cheapest option. So it was an interesting, kind of discovery there as I was trying to manage, playing travel agent in my after-hours life here.
Yeah, it's painful. It's painful. I don't envy you. All right. Well, Frontier down 14%. Pretty big move there. Because obviously, if there's overlap, then maybe they would get some of the market share, but maybe they will just get eaten up too. So streamline the booking process, please, folks. Thanks, Caroline. Appreciate that.
Sure.
And Spirit, no mas. Jeff Pierce joins us. Let's talk a different side of the consumer. Discounts, though, as well, Jeff, at Walmart, but also just everything you need, one-stop shop. I guess this is, there's no airline that's really as encompassing as Walmart is for everything.
No, certainly not, and especially if you consider what Walmart's been able to do over the last few years on top of keeping those lower prices, which has really positioned them very well for the economy we're in right now. And we've got earnings coming up before the market tomorrow. Q3 earnings expected to come in around 53 cents on earnings revenue, about 167.49 billion. Both of those numbers roughly up 4% year over year. Net income expected around 4.24 billion, up from the 453 million we saw a year ago, and adjusted profits expected to be up as well at about 4.26 billion. If we look at what some of the analysts have been weighing in on, and some of this might be catching up on price targets now that the stock is, coming just off all-time highs, but Piper Sandler raised their price target to 93 from 83, kept an overweight rating on the shares. The firm said that they raised their Q3 comp sales estimates to plus 4% year over year, as they think falling gas prices during the quarter likely helped look.
Well, Jimmy made it to the double top this morning. Exit idea. So I'm done for the day when it comes to trades, if I want to be. If I want to be. Like, you're going to make me lunch here in a second. Hope Mike had a great weekend this weekend. We got a bull flag here on the SPY. We're going to find out if we break out or not here, or come back to a triple bottom, or stop at the pivot point at the 200 here on SPY.
This morning, Chief Market Strategist, BullseyeOption.com. Buying in the money calls. Alan, in this market, reliable as investing in a Walmart?
That's a tough question. I'm here to make money, and that's what I try and do, is a high probability of success over the long term, regardless of what the markets give us. There's that opportunity every single day. Now, let's talk about what happened last week a little bit.
Okay.
The market's had, I would look at it as kind of a blow-off top. If you look at things technically, if you look at the S&P, we made new highs and had a lower weekly close. But, let's see how we react when we come back to that breakout. And if we stabilize here, then we could get this continued stair-step higher like you've been talking about this morning. You can look at the lower left, upper right S&P chart. Really, if you want to tie it to Walmart, it's very much the same.
True, and kind of some wider swings, but up and to the right for sure. We are basically at the post-election
SPX breaking out.
Gap, essentially, right? Yep. That's 58.80-ish or so. Is that kind
Jimmy
of
called bull flag.
Well, we'll want to see where we are on a weekly basis. If we can hold that true.
Jimmy called the bull flag here on a SPY. SPX just jumped up $150.
we use those to take 100% profits, and now they come back. Maybe there'll be another opportunity because I still believe in those stocks over the long term. But when you have it, you gotta take it. I cannot stress that lesson enough that I had to learn the hard way over the last 35 years of trading. And another example is we need to talk about a stock that went from 22 to 28 over a period of a couple weeks that had that money flow that I was looking for. In the money option, gained 116%. And again, it stresses, I don't care what I trade as long as there are a lot of buyers and sellers. What was that stock that we talked about?
I don't know. You tell me.
It's GameStop.
Nice.
GME. I don't want to trade GameStop because I'm that guy. I just saw what we saw in the charts, and we talked about this a couple weeks ago. And so, last week it broke out, rallied 28. Now it can go a lot higher, but that's not my game. That's not what I look for. I just look for consistency. It had traded between 20 and 25 for a long period of time. A breakout in the range says for 30, but when it got to 28, the option had gained in value so nicely. It's about controlling risk and asymmetrical trades, and take it when you've got it. That's the theme.
Which is what for you? What's your profit-taking baseline, the first chunk? What, a double?
Yeah, the first chunk when you hit that 100%.
Okay.
If you're not happy with 100%, we got to talk about your money management.
Otherwise, you hold it till it's dead if it don't double. So you're at a double minimum.
So we hold it to, but again, they're deep in the money options. So if it just stays the same, I'm going to lose $1 or maybe, because my expiration break even is usually $1 or $1.50 away. So there's a lot of opportunities. I'm looking at 3 months. I'm not a short-term trader, and again, I use my lifestyle options, that at my age to trade without having to watch the meme stocks do their thing.
Give me the strike and the date you want for Mobileye, because we know the approach. So what are we looking at here for the strike?
Same idea here. This is a stock that's down 66% from its 2023 top. So that's maybe a sign of the something. But Mobileye's been between 10 and 20, made a bottom base here. It's popped above that 15 midpoint. So that just sent it to the range top at 20. There's a gap at 20, and guess what? There's a gap at 33. There's a gap at 40 up above as well. So I'm looking at in the money option. In the money 14 call gives me my delta of about 70-75% is what I look for. And so that option's trade for about 375 or 4. It's $2 in the money. And it's a February option. It's got 3 months of time. So it's the same setup, but I'm seeing that money flow. Money flow is what I look for, is leverage long positioning by smarter money than me. And you also see a bullish divergence bottom where it made a new low, but not new highs and implied volatility. So it fits my criteria, and I can rest easy. We got a breakout here today. So I was looking at this last week, but it still has so much more upside that I don't feel like I'm chasing it.
All right, good timing on the day, 7.5% almost. Find any money calls on Mobileye. Thanks, Alan. Nothing. Looking for a double or nothing. Love it.
It's not a double or nothing, bro. It's double, or you're gonna exit when the option in the money option is at
well, assuming it doesn't go down.
Well, it's in the money now.
Right.
Why would it be?
All right. Well, you still got time. That's the whole point of owning the time. All right, thanks, Alan. Appreciate it.
All right. Thanks.
Two-market strategist, bullsoption.com. When we come back, let's look at the AI trade in some detail, how to structure themes within themes. AI, big subject that so far has largely been consigned to hardware, but with chips down the last week, maybe it's software's time to shine into earnings. We'll be right back.
JP Morgan's had a good run. ARM's pulled back to the 200. JP Morgan had a nice breakout. Lulu down $4. It hit the 200. Then boom, Boeing. Where'd you go, Boeing? You want to get clocked?
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from
On
down south
Netflix.
and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. Let's talk some more AI and let's talk ETFs. Evan Fagans joins us from TCW, portfolio manager and senior equities analyst. Evan, thanks for being here on the Schwab Network this morning.
It's great to be here, Oliver.
All right, so let's talk about the fund AIFD. What's the process?
Sure. So the process is, we were early to the AI trade. We launched the mutual fund predecessor back in 2017. And, for us, it's not just about the rollout of generative AI, it's about predictive AI and where, AI can add value across the technology stack, both in hardware, software, and even for some non-AI companies that are using it and are customers of AI to really gain a competitive advantage in their respective markets. So it's really anywhere where AI touches and adds value.
Semiconductor is a big chunk of it, roughly around 25% or so. NVIDIA, big chunk in there. You got Arista along with some of the other big Mag 7, Meta, Amazon, Palo Alto's in there. When you look at the kind of breakdown of which part of the kind of AI stack, is it mostly hardware and just the brains, the power behind it?
Right now, it certainly leans towards hardware because we think in the near term, but that's still where the opportunity lies. Since the launch of ChatGPT, about 2 years ago now, it really was an arms race or a gold rush, whatever metaphor you want to use, for large technology companies to really arm themselves and build out their AI capabilities. That still persists today. I think that was one of the biggest takeaways of the earnings season was CapEx continues to go up, spending on this hardware to continue to build these AI data centers. So I think we definitely lean that direction now, but I do think, as time goes on, in our view, this is a decades-long trade, not just a couple of years. And we still have, in the near term, hardware still will lead the AI trade. But over time, we will shift more towards, software and AI adopters.
You got some of the other parts of the supply chain in there with the Aristanet taking a big holding. That one seems the most kind of unique in some ways relative to how it shows up in other funds. And tell me about that firstly, is that kind of networking side of it.
Yeah, Arista has been great. I think that there's a lot of attention that goes on the computing power side of AI, but really you need a tremendous amount of high capacity networking to link this all together, to make the computer work as one and train these enormous models. So it's really fundamental to training and inferencing in AI. And we think Arista has a great opportunity ahead of it as these models just continue to get larger and larger.
What's the issue with NVIDIA's Blackwell heat? Did you see that story that they're getting pretty hot and they're telling people to move the servers around? Any thoughts on that?
Yeah, we've seen a few concerns about the supply chain this quarter around Blackwell. Something we're watching closely. I'm not sure the source is always right, so I'm not. You always need to take things with a grain of salt sometimes on these rumors.
Really?
It matters a lot. This is a transition quarter for NVIDIA. They're moving to Blackwell. Even just a few weeks delay would be enough to
Meta bounced off the double bottom.
So I think they'll probably be conservative and make sure that, they have room to make the numbers. But, the investors might not like that conservatism in the short term.
Okay. Is there any super micro risk in any of this? Does it look like that's a contained, isolated situation? Because they've been pricing in the market super micro like it's, hero to zero pretty quick, and they obviously are linked through direct sales to companies like NVIDIA. I mean, maybe not the majority, but non-zero.
Yeah, no, that is a great concern. That's something that we've been watching. It's been remarkable seeing the fall of Supermicro from, all within a year. Really, star stock to now, accounting problems and a lot of issues. The good thing for NVIDIA is that they have, they are not demand constrained. They do a lot of managing their customer base, making sure that those people who take, delivery of their chips are ready to deploy them immediately. So I think that if Supermicro can't take, this month's shipment, I think they'll find someone else pretty easily to fill that slot.
Okay, fair enough. Another one in there, 5%, Palo Alto. Appreciate you running down the list for me because some of these have had some pretty fun moves. Last couple days, Palo Alto softened up. They just got to a fresh one-year high in the last month. It looks like the market might be kind of taking Palo Alto to usher in maybe more of like a software security side of this AI trade. Is it a gate to other stuff in that category?
Yeah, absolutely. I think there's two main points here. First is the security is, AI really just fundamentally takes the need for security, up another notch. It's, unfortunately quite easy for generative AI to create malware. But it's also, it's a good aspect to it where AI can help detect malware much better. So it just takes the cat and mouse game of cybersecurity up to another level. It's very fundamental, to all technology is making sure it's secure. And then, on the software side, software's been a laggard for the past, call it two-ish years, with hardware really racing ahead. So I do think we're finally starting to see some life out of that subsector. And, I think we're optimistic that it can continue.
All right, great stuff. Appreciate it, Evan. A fun chat. Thanks for taking us through the list there. And also, I see Tesla in there. We'll have to save that for another day, though. Appreciate it very much.
Yeah. Thanks, Oliver.
Sure thing. Evan Fagans, portfolio manager and senior equity analyst at AI. FB is the ticker.
Yeehaw! Mike's a yabba dabba doing.
Let's look at some tech. Nicole's charts and analyst notes. CVS up pretty big for CVS. CrowdStrike higher, Nike down. More negativity on Nike, more positivity on CrowdStrike.
CRWD.
Trading at Schwab is now powered by Ameritrade, giving you even
Oh my
more
God.
specialized trading support. Connect with the Schwab Trade Desk. Our team of
There's a 100%er. $8.60.
Checkmate.
Yes. $9. Trump, Trump, baby. God. I did it again. The $1,000 on the table almost. Oh, really? It could run up to $28. Triple top. Jenny. Wow, you look different today. This girl has a different look all the time. I've never seen a woman that looks so different every time I looked at her.
295 with an overweight rating, saying that overall third quarter they'll see this trough in net new annual recurring revenue post that outage. They also do wonder if the bull case returns to the long-term path to $10 billion and annual recurring revenue reacceleration could be seen in the second half of 2026. Morgan Stanley also did raise its price target to $355 with an overweight rating. They think the company is recovering quite well post-outage based on their overall checks, and noted that while the stock has nearly returned to pre-outage levels sooner than expected, they do think that investor sentiment remains largely negative, and for that reason they do see further upside post better than expected third quarter results. So I do think that is huge. I mean, not only will they have to continue to deliver on what we're expecting of the third quarter, they're going to have to, I think, see continued optimism to continue to see this nice momentum of a rally. I mean, we've risen about 14% for this month and now up almost 34% on the year for a name that, again, had like as many PR nightmares as you could think regarding that outage. I will say that, amazingly so, I know that the fear of these analysts was that there's too much negative conviction. 51 analysts currently cover this name, and of those 51, there are, 4 buys. So, it just still skews extremely optimistic. Average price target is $327, which doesn't imply any upside, but straight high still remains $540. So there's still those that truly believe in this name.
Hey, speaking of which, this week, Market Overtime, Dan Ives and the vision of the future coming up. All right, so upgrades, a lot of love for CrowdStrike still. 2 a day, that's a pretty decent little pop in terms of sentiment.
Yeah, it is.
Up about 2% in a market that's pretty much flat, Rick, so it looks pretty solid.
Was it all just a bad dream? Was the 50% drop? Did it even happen? Because we're right
those
there.
airlines.
There's 1090.
What's a few global computing outages between friends?
Get it, Randy?
Graphic system. Oh, that was probably on us.
Well, but it's just interesting. It's and a little tongue in cheek there, but it's a good reminder that when you get some kind of big fundamental news or some kind of big news event, a lot of times it can reverse. It can go back to where it was after the initial kind of panic reaction or euphoric reaction the other way. A lot of times it can kind of moderate and go back to where we were before. So that's kind of where we're at now. 70% rally off of these lows near 201. Kind of a rising wedge type shape here. You can see our two white trend lines converging toward each other. A little bit of a breakout that tested our yellow 21-day exponential moving average, but we righted the ship, and now we're back within the boundaries of our wedge shape here. We can see that RSI is kind of interesting because even though we've made our way into the overbought area, numerous times we can see that RSI really has struggled to make its way above that 72 mark, that red dashed line there. Repeated failures over and over again, once again, last week. So momentum still quite bullish here, still very high, but kind of an interesting quirk about what keeps happening here repeatedly. Now, if we were to zoom in a little bit and look at our support and resistance here, first recall this area right here. It's this gap, kind of this almost an island type reversal where we had a gap up, consolidation, then gap down. So note as well, these two blue lines are kind of the price targets we were talking about. 355 and 372 matches up pretty closely with that gap level. So now when we do zoom in and take a closer look here, this is kind of the area in question. So between like 355 to 359,
1140,
368 to 372. Those are would be some general areas to watch for resistance zones. To the downside,
okay, I'm gonna get out of this again.
Green line 336.34 represents the.
Are we going to break it? We have an expansion resistance right now at 1140. Randy. $9.10 to 1150. There we go. $240. Magnificent get a grade? Who gets the grade? Who first called the trade out? That is the question. Who called it down here? Magnificent. Friday. That don't count. Friday doesn't count. Just a secondary A+ for calling the direction. Okay. Well deserved. Shared experience. No, for that, I'm going to go into the bathroom and grab a Q-tip and stick it up my butt. That was just way too much information. After watching the Tyson fight this weekend, I don't think I ever want to watch another boxing match in my life. If I was up there fighting Tyson, I would have done the same thing as Jake. I would have backed off. There's no way I would have hit that old man. Not the way he was acting. If he'd come after me and we'd have had at it, it'd been a different story, but no. There's no way you can fight something like that. Tyson, I don't know, I feel like slapped him myself. But that's that. I lost a lot of respect for that man the other night. I still love him, but he's not my favorite boxer anymore.
Trend line to consider here. The much more obvious shorter term trend is this sharper red trend line here. We are below the 50 midline, so momentum more geared toward the bearish side despite today's green candle here.
CVS.
If we were to kind of consider, standard deviation channels, if we do wind up making some new lows, we would take our blue linear regression line. Happens to be right around where we've been trading the past few days. That's a line of best fit through all our closing data, kind of the idea of fair value. If we were to break through all these lows, the -1 channel, one standard deviation below that, 45.38, that would be a painful, fall there. If we were to move to the upside, there's a bit here. There's our volume profile, point of control, our two moving averages, etc. here. But this is the level that kind of catches my eye. 60.46, that was the high point after the gap down. Notice that we failed to close above that level. We were actually very sharply rejected a couple times there. And then all the way up here, blue line, $66 price target we were talking about, matches up fairly closely with the level that I had my eye on, series of old lows, around 67. So 66 to 67 is a key resistance area to overcome.
All right, it's like a meteor shower of overhead resistance.
Yeah.
Everything crashing down on CVS, all the long-term moving averages, every trend line. It's just like this storm of negative price pressure. So good luck, I guess, trading CVS to the upside, for sure. Tough chart. All right, Nike, kind of similar. More negativity this time from TD Cowen. Price target cut. How deep, Jenny?
I mean, so this is negative as a note, as we'll see. TD Cowen cuts its price target to 73 from 78. So it's not really. No, it's not bad. I mean, because it's only slightly.
It's a flesh wound.
Especially because like they had a 78.
It's $75.
Yeah, I mean, this is. I mean, but okay. When did we see though analysts lowering their price target on Nike? I do feel like sentiment has at least kind of improved going into this earnings. I mean, maybe I'm looking at it optimistically, but I feel like there's been a lot of the analyst community that actually says like, hey, maybe the selling could actually bottom. We could see some recovery. So this is the first that says, actually, we're not really seeing that much of a recovery. They said that channel context and field work leave them even more cautious on their business. So this is the tone I think that you don't want. They think that the potential for another reset to consensus on earnings expectations is possible in fiscal 2026. They also did highlight the fact that tariffs and China's retaliation are a rising risk post the election, and that Nike has really ceded share in run specifically, especially when you consider like the various competitors, Hoka, On, ASICS, Saucony.
There's another $200 bounce.
Perform quite well in both lifestyle and performance running. Whereas right now,
I didn't take
more
that
so
one,
in
no.
lifestyle, that seems to be Nike's niche. But if you're the largest shoe provider, I mean, in terms of athletic wear in the world, you've got to be basically owning every space, which right now, in this analyst opinion, they're not. So they do also see the Jordan retro fatigue along with some of these over-distributed
Ginny, I don't like this look.
that Nike is currently involved in managing down.
I don't ever want to see you dressed like this ever again.
$20 buys, 19 holds, 2 underperforms, no outright sells. Average price target right now is $92 a share, which then illustrates really, I guess, how, I mean, the lowest. Yeah, the low's 57, but I think that illustrates then how really negative maybe 73 is when they're so much below even the average. So either this analyst is taking on a completely controversial take and thinking that this weakness will persist, or the rest of the bulls in this name have just not caught up to like what they see as far as the demand story into the new year.
Yeah, boy, a lot of lingering hope for Nike too. Super bullish price targets on average. I kind of see why this is hitting the shares though, because it is just sort of a hopeless commentary for a price, even though the target's where we're at basically, $1.50 below here. That just generally is still a lot of negative commentary.
Kind of reminds me of our last chart, just really struggling. We haven't quite hit those 52-week lows, but we're pretty close at this point here. And once again, the prevailing trend has progressed from being a more moderately sloping blue trend line, pretty consistent going across these highs, but then it started to steepen here. Now we have a sharper white trend line that has kind of been broken here. We've moved beyond it here, but we are in danger of crossing back below it today. Right now, we're just hanging on near 75. We had this range back here. The green line is about where we topped out a few times, so around 75 would be an interesting spot to keep an eye on for traders here. From our RSI study, we can see that green trend line still kind of in play, very brief dip into that oversold area, but our red, sharper downward trend line has been broken as well here. So perhaps there are some signs of a potential turnaround here that are starting to develop here. But if we were to take a closer look at our zoomed in chart in a second here, this area is important to consider to the downside, kind of this range here, and then this area to the upside. So once we zoom in and get a closer look here, we can see that we've got, once again, our linear regression line, our teal colored line there, lines up pretty close with that price target near 73. That's our blue horizontal line there. So that could be a kind of a tipping point there. But really, once we start getting below 70, 75, those 52-week lows, -1 standard deviation channel could come into play near 60 to the upside. Our green line, we're trying to hold on there. But beyond that, we have this gap here and then these highs and lows. So 79 and 85 would be other notable upside points.
It's similar to the CVS totally in that the longer term moving averages are all negative, though there's a lot more horizontal energy on this chart too.
Randy, you might be right, man.
A lot of this back here, that's a really good base.
$12.
I think when you've got so much
$12.40 high.
Forth for better
volume nodes here too. So there's heavy lines there. Yeah.
So it seems pretty decent to assume that Nike, or hope that Nike can hold the mid 70s, and if not, then at worst low 70s. It seems like you'd have to have something really negative come through there. But as far as upside,
Right back. I'm gonna get my lunch started.
Yeah, I mean, it's we're seeing some very modest signs of potential
still got
turnaround,
3
kind of just
minutes. We'll go
drifting
get my coffee.
sideways beyond the trend line and for RSI, rather than an energetic breakout, like kind of just meandering along here, and actually in danger of even slipping below once again.
Yeah. All right. So maybe if I don't hate the stock, then I sell some put spreads or something. You know, maybe collect some dimes. I don't know if you're going to get a bunch, but seems like there should be good support down here. All right. Thanks, Rick, for the charts. Thanks, Jenny, for the analysis. Coming up, markets are moving higher. Got a nice little pop in the NASDAQ. Russell alongside it too. Bitcoin flipped green. And, yeah, looking pretty good in big tech here.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trading.
1260, baby.
Power of trading. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market. Weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, we got a nice little bid going on here. Caroline Woods joins me alongside Joe Mazzola. As we look at these sessions so far, we got some strength. Caroline is senior market correspondent in New York. Joe's director of trading services at Charles Schwab. Joe, a nice little pop here. Get us started in our combo. S&P's now about 0.5% coming from big tech.
Yeah, so, you know, the post-election rally fizzled a little bit last week, and you saw that primarily in the Russell, down about 4%, and S&P was down a little over 2%, but we're getting a little bit of a bid back today. As you mentioned, Oliver, I think a lot of that has to do with the tech bump that we're seeing. Maybe not participating is NVIDIA. That's down a little bit over some of the news over the weekend about excessive heating in the Blackwell chip. But, you know, look, that is the big event this week, Wednesday's NVIDIA earnings. And I think markets are just kind of taking a little bit of a breather from some of the excessive movements that we've seen over the last 2 weeks, and just kind of catching a little bit of a minor bid heading into Wednesday.
Okay. Caroline, a lot of the key names that we need to work are up this morning.
Yes, aside from NVIDIA, as Joe said, but it's really, if you take a look at the NASDAQ, which fell about 3% last week, it's up about 1% today in the lead, although the Russell is pretty close. And that's thanks in large part to Tesla, which took a breather last week, but is back in rally mode today. Supermicro actually also bouncing back. But, you know, if you take a look at Tesla shares, they're up over 8% right now on that Bloomberg report that President-elect Trump's transition team is planning to make the national regulatory framework for full self-driving vehicles a top priority for the U.S. Transportation Department. So we've seen some analysts weigh in. Dan Ives, who of course is on
Finally, someone with a brain.
has the highest price target on the street with $400 price target, said this would be a huge step forward in easing U.S. rules for self-driving cars and be a significant tailwind for Tesla's autonomous and AI vision heading into 2025. Barclays, less bullish on shares, has an equal weight rating and raised its price target to 270 from 235, so below where Tesla's currently trading by quite a bit. Said the post-election rally in shares is largely on the stronger narrative and technical factors, as Tesla's fundamentals are largely unchanged. Did talk about the Elon premium, said that's a key portion of the share rally, exacerbating key man risk, but that the Trump policy changes are likely negative to neutral for Tesla's business, but beneficial to autonomous vehicle efforts. And then Bernstein stuck with the sell rating, left their price target unchanged at 120. Basically said technology is more important than regulation at this point. Get the cars to actually drive themselves, and then you can worry about the framework for them. So
yeah, I'm telling you, it's the thing with Elon. It's like going to be like day and night. The difference between Trump and Biden. Biden surrounded himself with a bunch of stupid people. Trump's surrounding himself with a bunch of innovators. That's a whole different realm there. Innovators.
The Tesla rally, though, is a big one, 8.5% back under 350 just by a hair. Guess we're getting some idea how this is going to work. And ultimately, the vision of the future, maybe a step closer with the right policies.
Let's send AOC a message.
The fact that market is getting some justification maybe from this report already. Obviously, a lot of step.
Hey, AOC, I heard you dropped your pronoun, baby. You're a woman.
I don't even know if the market needed that report. Because, I mean, if you look at some of the equity inflows that we've seen over the last 2 weeks, really post-election.
A real woman.
Investor exposure, this is Bank of America's report this morning. It's at its highest level right now since 2013. And then if you look at things like the CFTC, right there, so basically the long futures or the long equity futures report that the CFTC puts out, it's the most bullish since 2022. So investors have started to pile money in.
I thought I just saw Morgan's. There it is.
And on, when we get pullbacks like last week, I think it gives them an opportunity to add.
Meta bounced off the triple bottom here.
But there's two ways to look at that, Oliver. Either A, all the money's in, which could be looking like. But I think the other way to look at that is, as we start to see if we do get dips along the way, and then kind of tracking that post-election euphoria that tends to carry forward at least through the end of the year. There probably is some room for maybe us to go ahead and test those tops again.
Yeah, I love that point, and I think that when we look at kind of milestones ahead of us, that we've got the big one kind of still cleared out and functioning as a positive. That's what's important about these things connecting, is that there's a lot of speculation, a lot of money flowing, but little stories that kind of pave the way for us, kind of lay down the track. We are maybe driving the railroad while we're laying down the track, but at least some of the tracks are falling into place here, Caroline.
Yeah, but one other thing to note just on that story could be because of it is Uber and Lyft shares down sharply today. Uber shares down 7%.
Oh, I didn't put the two together.
Bets on self-driving. So obviously with Elon Musk's premium, as one of the analysts said, and being a fan favorite of President Trump, makes you wonder if it's sending shares of the other companies lower just because he's the favorite. He could be the biggest beneficiary.
It's about time.
That's true. Down 7%.
I'm loving it.
Ouch. All right. Well, so now the power games begin. All right. Appreciate it, guys. Thanks, Caroline. Thanks, Joe. I do think actually that Tesla ripped there. Might even help NVIDIA flip around too. Just a lot of positivity now creeping in this morning for tech. Thanks for tuning in. I'll see you this afternoon. Have a great day.
Have a good day.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamble On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Do-do-do-do-do.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking,
I didn't think about putting that two together. I'd have shorted Uber.
Plus, cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Dee-dee-dee-dee-dee.
Good Monday morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a big show, a big week ahead. Our 360 Spotlight will revisit the post-election rally and discuss what's in store for the markets this week. Our disruptor today, HP Enterprise, after an upgrade over at Raymond James. And in our 360 round, we'll preview retail earnings this week, including names like Walmart, Lowe's, and Target. Here's a look right now at where the indices stand after what was a great post-rally, lots of highs, then a bit of a pullback, but back in the green once again, even the Russell up more than 0.5% for those small caps. S&P 5895, that's up 0.5%. The NASDAQ up 1%. The Dow is up 6 points, and you see the Dow at 43,451. Oil and gold are higher. Gold back in favor again, up almost $50 today. That's a big move there for gold. And you can see that oil is up $1.82 right now, sitting at a level of 68.80. Dollar 106.
Coin and Mister are flying.
Onto the strength, and there's Bitcoin at these new high, record highs that we saw last week, 93,000, up 1.1%. So that's a big level right there.
In the meantime, for top moving stock stories,
Man, I was looking at that.
Markets correspondent here on Schwab Network, taking a look at Tesla rallying this morning. Good morning, Jenny. A little bit about Tesla, please.
Yeah, Jenny.
Very nice session here, Nicole.
You're a bitch about Tesla.
Just over 7.5% here on the day. And this is in regards to some reports we got from the Wall Street Journal. First reported actually Sunday that members of President-elect Donald Trump's transition team have told advisors that they are planning to make a federal framework for this fully self-driving vehicles and technology, and that this could benefit naturally, of course, a name like Tesla. So if these new rules do enable cars without human controls, it will directly impact Tesla and, of course, Elon Musk. And current federal rules do pose significant roadblocks for companies that are looking to deploy vehicles without any of these steering wheels or foot pedals in large quantities, which Tesla does plan to do. So while the Transportation Department can issue rules throughout the National Highway Traffic Safety Administration that would make it easier to deploy this autonomous technology, an act of Congress would make it way easier for the mass adoption of full self-driving cars, according again to Bloomberg as well as Wall Street Journal reports. A bipartisan legislative measure being discussed in early stages would also create federal rules around autonomy, according to several sources. And one candidate under consideration for the transportation secretary right now is a former Uber executive who has spoken with Trump's team about potential staffers. So that's also encouraging. And again, I think there was a lot of hesitation around the narrative with fully self-driving vehicles following that robo-taxi event from Tesla, because many will say the framework is not there. The logistics and the overall infrastructure is still not there. The human component that is still going to be on the road also is a major, major risk. So I think that with federal backing, I mean, this is exactly why Elon Musk has tied himself so closely with Donald Trump in hopes, I think, to clear some of the regulatory hurdles.
Oh, Kava, forgot about Kava.
Right now, Donald Trump is not expected to be a friend to the EV trade. I do think it's going to be a friend to Elon Musk, and this is the first we're hearing where we could see it directly benefit, Tesla stock. So nice move to start off this week after following some really nice days last week. I know we saw that rally fade into the end of the week, but Tesla's on a...
This is one that I wanted to trade today, and I just didn't even think about it. We had a big sell-off last week on Kava, and I like this restaurant. I did a lot of research on this last week, and I wish we had one around here. I'd eat there. There's no doubt in my mind. But we had a pretty good sell-off on this thing. I'm going to come in here and trade this first thing this morning. I just completely forgot about it. It pisses me off that I forgot about it. I had it on my top one priority. $1,300 for Tesla, baby. I'm still got one contract, but that's it. 920, 910. I'm not SPX, I meant. Did I say Tesla? I meant SPX. Stupid. Yeah, it might be a good idea to get out now. We still can go up. Yep, we still go higher. Rodney. I'm gonna go make me a burrito. Hope everybody had a blessed weekend.
More indicative of where we should have been. I think valuation is hard to argue when it's so stretched, but that's just the nature of Tesla, frankly. Now we're up 39% on the year. Like you said, seeing a phenomenal month. We are off of highs for the year by about 3.5%, but off of lows by 150%. So this one, arguably so, has been fun to trade, at least if you're into the risk, because it's so volatile. And when it moves with conviction, Nicole, it moves with velocity. Like, we are just right now in a momentous upswing, which also then the risk is that we could see a momentous downswing, of course.
All right, Jenny Horn, thank you. Good luck there at Tesla today. Appreciate it. And folks, keep it right here. We have a big show ahead, and of course, a slew of earnings due out this week. You'll have NVIDIA and Palo Alto and many retailers as well. Some home sales on the list. We'll be right back.
Peace out, coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on Schwab Network.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single.
Okay. I don't need you celebrities. Now, if I don't hold this bottom trend line on 1, 2, 3 puts. What am I doing here? Oh. Ah, come on. There we go.
To the trades, Don Kaufman of Theo Trade. Thank you both for being with us on this Monday. We're setting up a big week after originally the last 2 weeks started off with some highs and then some volatility. Don, how are you feeling about the market for this week ahead?
Well, you know, one thing is that's really the key factor this week has to be the bond market. The bond market is actually trading right now in the mid like 115 handle. That is specifically the ZB. ZB is the, of course, 30-year bond treasury futures contract. Any lower than this, the ZB is actually going to break down to a degree. Rates are going to actually cruise over 4.5% in the 10-year, and the S&Ps may take quite the hit simply because of their rate fears right now back in this marketplace.
Ah, Yes, that was part of the story late last week, and you're so right to bring it up now to keep it in focus. Let's talk about Caterpillar. Why is this one on your radar today?
Big correction in the S&P said.
Right now is having quite the nice technical breakdown, as Rick will probably show you here in just a moment. But first and foremost, one of the aspects that's surprising about Caterpillar, a huge jump to the upside following the election, but it's been nothing but sell-side activity ever since. It's literally Caterpillar is kind of following, if you will, the emerging markets and or, if you will, the FXI, which is the Chinese large caps. So some pretty strong sell-side activity. And I think if just a little bit further, in sliding under the $375 level, and this thing could actually get absolutely pummeled at that point.
No.
So I am putting on a bearish trade right now. That bearish trade is all the way out to the February 21st expiration. And in this trade, I'm going to be buying 370 puts, selling the 360 puts. So I'm doing a $10 wide put spread. This one is done for a $3.30 debit. Again, a little sell side activity, but looking for follow through right now inside of Caterpillar.
Okay, let's see if we get some here when Rick Ducat takes a look at the chart. Some of your thoughts, Rick.
Nicole, I was just talking with Oliver about CrowdStrike earlier, and oftentimes, they had that big outage with all the computers and everything. Oftentimes when there's a big move, it can kind of moderate and go back to where it started here, and that's kind of what's happened with Caterpillar.
Exactly.
You can see that this was the breakout from Election Day. We're basically right back to where we were, retreating to a key supportive level, this green line, which marks our old 52-week highs from all the way back in March, around 382 or so. So right now, we are kind of testing this key support level. We are breaking downward through our yellow 21-day exponential moving average, as well as this sizable volume node. We're trading below this area of very heavy trading here. And even before that, even when we had this large green candle to the upside, our big breakout, we made 52-week highs the next day, but we formed a Harami type candle where the real body, the red candle, completely contained within the previous larger green candle. So that was a sign of potential reversal here. RSI deteriorating a little bit. We're below the 50 midline. We are in jeopardy of breaking through this green trend line here. So now if we were to zoom in a little bit, think about some support and resistance.
That's an ascending triangle.
If we were to move back to the upside here, there's a confluence right here already near about 390. Our blue linear regression line of best fit based on closing prices, lines up with our volume node that we mentioned a moment ago, and our yellow 21-day EMA. Beyond that, old high right here, and this point as well, red line 402. To the downside, if you're more interested in a bearish view here, we've got this gap here, our green line, and our 63-day EMA between like 377 to 373 or so. Beyond that, this is our shaded area. This is down strike prices between 370 and 360, so that would be the area in question for that more bearish trade.
Okay, thank you for that. So a little reversion to the mean, I guess. When you look at that, what's interesting is how it did hit this record and then pulls back, Don. Final thoughts on this. By the way, we are hearing from John Deere later in the week, I think on Thursday, worth noting as well. Final thought here, Don.
Yeah, one of the things the market's not going to like inside of Caterpillar right now, outside of any of the technicals, outside of everything in the charts, purely a fundamental perspective, and that happens to be none other than, what's the China policy going to be moving forward? And between now and literally until the admin really kind of comes in and we get clarity in terms of, are there going to be tariffs? What are we actually doing in terms of China? I think we're going to see that uncertainty is actually going to continue to put some pressure into Caterpillar shares.
Okay, next up, we're taking a look
China,
at
Why are you
Chevron.
putting
Some of your thoughts here on Chevron today.
Well, on Chevron, here's another one where the new administration coming in is largely responsible for some upside activity in many of the energy complex shares. Specifically inside of Chevron, what am I looking at right here? Just a great upward trend. Now, this one is a rarity for me. I don't necessarily like to hop on trend, but look, you got a ride right now, the drill, baby drill kind of montage in here, and a test above the 165 level should signify a good upside breakout. So as such, look, I'm taking a bullish trade. I got to go with the trend on this one. This is January 17th expiration for me. I'm buying the 165 calls, selling the 175 calls. So it's a $10 wide spread. This one's done for a $2.45 debit. So it's inexpensive versus some of the upside potential, but unequivocally, we need a strong move to the upside. And I think we do have some of that momentum, and obviously we've got the admin behind this. Again, as I said, anything in the energy
man, I'd
complex
wait
right now
a couple
looks
bucks.
decent coming into the next year.
Okay, let's see whether or not we think that Rick has a supporting chart or not.
Nope,
Rick?
it'll drop.
So fun fact, what is a chevron? It's those V-shaped insignias that military, police, firefighters wear on their sleeves here. And, V's seem really important to this chart because we had kind of this inverted head and shoulder shape. So it's kind of 3 V's in a row here that we eventually did break out above that neckline area there. So this is inverse head and shoulders is more bullish. And we've been, cruising to the upside since we kind of retested that neckline once again. Now we have made some nice progress to the upside here. You can see we have broken through our blue downward sloping trend line there with some strength here. We're crossing above some key horizontal areas like our volume profile point of control here. You can see that we have also crossed above this area right here. Kind of a messy range to keep an eye on here, but this red line 160, this pink line 163, those were some important kind of general stopping points for price, and they're also centered around this volume node. You can see as well, looking at RSI, long-term downward sloping red trend line invalidated, trend accelerating here. You can see light green, dark green, much steeper slope here. We have backed off a little bit out of the overbought area, but we're hanging on to that supportive level. So once again, if we were to zoom in and take a closer look here, you can see that there's kind of quite a lot of things to the downside to consider here if we do start breaking lower. +1 standard deviation channel near 159. Then there's our linear regression line, old support, 252-day EMA, all coming together near about 153. And then, beyond that, we've got some other key areas here, this green line, 148. To the upside, though, pink line that I mentioned before, 163. Then our +2 standard deviation channel and those old 52-week highs. And then, once again, our shaded area here, 165 to 175. That's where the trade in question would be looking for price to go here, right around that +3 standard deviation channel.
Yeah, I did see Jeffries has a 182 and a buy rating. They used to put that out on the 11th. Right now oil's still below $70. So thank you for that. Don, final thoughts there.
Yeah, you just mentioned a moment ago, Nicole, that oil, in terms of price of oil, right now there's a disconnect between oil itself and obviously some of the oil companies, the oil complex in here. And I would look for that to also kind of continue. So, you can make an argument with all of the drilling and the oil that's going to be plentiful in the future that you're going to get some lower oil prices. Not to mention, obviously, an incredibly strong dollar. But again, right now, it is easy to just hop on trend with really anything inside of the oil complex and say, look, let's go for it here. There's some upside potential. And again, specifically inside of Chevron, look for us to crest and test above that 165 level to kind of signify that breakout, before really hopping on board.
Okay, last but not least, we look at Walmart. And obviously, Walmart reports tomorrow. We have Lowe's, Target, BJ's, Gap. We have a big week of retailers. Thoughts here on Walmart for tomorrow's earnings, too?
Yeah, to start with, look, I absolutely love trading in and around the earnings. I like to take some shots around earnings, and Walmart, this is right in my wheelhouse for it. Why? Well, let's begin with the fact that Walmart is up 59% year to date. That one is it's staggering to me. This is not a tech company. People, this is Walmart. Now, again, you're going to make the argument the online sales is spectacular. Look, I have a very easy argument here. Outside of any technicals, okay, I'm pushing all that aside. I'm going to leave that to Rick in a moment. I'm simply looking at the fact it's up 59%. I don't necessarily think this quarter or really some of their guidance can necessarily sustain some of that upside potential that we've already had. So with that, I'm just going to take a bearish shot just to the end of the week. I'm going to go out to the November 22nd. Again, November 22nd expiration. Just going to be buying the 82 puts, selling the 80 puts. So it's just a very small $2 wide put spread done for a 50-cent debit. Just taking a shot. Earnings come out. Look, it's not about disappointing the street. It's just
$13.90 for the SPX.
Well, as robust enough to support an almost 60%
year
to date, upside move inside of, yes, people, it's Walmart.
Oh, earnings.
Okay. We'll give Rick the final word here on Walmart's chart.
Yeah, I would just echo Don's comments about the general, just pace and trend. Really surprising for a company that's a behemoth like Walmart to see such sustained and pronounced consistent uptrend here. And the price action was kind of strange, I thought, too, because you could have drawn this trend line here going across the lows. Usually my trick is I extrapolate it, put it across the highs. Then once it breaks out, it becomes support. Guess what? That didn't happen. We formed a very strange parallel line just slightly above it here. So that gave us our new smaller channel here. So just kind of an odd situation I was commenting on. These old trend lines, they can come back into play. So, I'll probably just leave these on just to keep an eye on it if we do start to deteriorate here. Now we can see once again, though, the pace of the gains is starting to slow down. Maybe we are due for a bit of a pullback after these lengthy gains here, because you can kind of see RSI starting to flatten out, not really making any significant peaks anymore along with the price activity. Also breaking through this green trend line here. Still bullish, still above that 50 midline, but trending lower here. So now if we were to zoom in and consider our support and resistance, if we do get a breakout to the upside, upper edge of our white channel here would be around 87 plus 1 standard deviation channel around 93. Then to the downside, we've got a confluence right here, 21-day EMA, linear regression line, and channel trend line all around like 83 or so. And beyond that, then we would be in our area for Don's trade between 82 to 80 in our shaded area.
All right. Yeah, we'll give you the final word here. Thank you for all those charts. Rick Ducat, amazing as always on the charts. Final thought, Don.
Yeah, in the overall marketplace, I have to go back again and look, this entire week, it's not necessarily about NVIDIA's earnings. It's not about some of the economic data that's coming out. It's about what, again, is going on inside of that bond marketplace. The bonds, if they continue to slip to the downside, look, it's going to generate fear. So there's going to be interest rate fear. It's going to cause some sell-side activity inside of the S&Ps. That, people, is what really caused the sell-side activity on Friday. And we're right on the cusp of that again on this Monday. So any further selling inside of that bond market, you could have some problems moving forward. Look for expansive volatility later in this week, again, with bond sell-side activity.
You fearmonger.
All right, Don Kaufman, great to see you of Theo Trade and Rick Ducat there on the charts. And we looked at Caterpillar, Chevron, Walmart.
God.
3 today. Thank you for the trades and the
I almost want to buy it.
Coming up, we'll spotlight the markets post-election, that rally that we saw. And now what? Where do we go from here? We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Cut the cord on the way you get market news. It's Market on Close.
Okay.
Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street.
15:20, Randy.
Eastern, available anytime, anywhere on any device for free.
1560, 80.
Schwab Network.
Randy.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I want to get some insights in the news shaping the markets, get us ready for this week ahead. Scott Ladner's with us, Chief Investment Officer at Horizon Invest.
Magnificent. Watch your mouth. I seen what you said about my AOC.
bond worries of late. What do you think is happening, and how do you position now for the next few weeks?
Hey, Nicole, thanks for having me. Good to see you again. Yeah, look, I think a lot of it. Your last guest actually highlighted something I think probably the most important thing, which is bond weakness. So if we get rates higher and they stick up here in the anything north of 450 in the 10 years is probably creates some challenges, particularly on the small cap side of the trade. But people are just they're a little bit flummoxed, they're a little bit confused. So because if you think about what happened and Trump won, like right out of the gates, everybody was really excited about deregulation. Everybody's really excited about taxes. They're excited about that this time around, but they're also grappling
1,700, Randy,
with the tariff and the sort of the trade posture that we know Trump's going to take. And so these two wrestling forces is causing some volatility. It's going to we expect some back and forth over the next few weeks, a few months, frankly, as we figure this stuff out. But the fact the market's having to deal with like trade and tariffs and taxes and deregulation at the same time is I think probably causing some of this confusion.
I see. So at this point now, you think we'll get some more clarity? Where will the clarity come from?
Some of the clarity could come from probably a couple of places. One, we need to find Treasury. Like we need to see who he's gonna pick for Treasury. Some of the appointments or some of the suggestions last week that he put out, frankly, didn't inspire a ton of confidence.
Shut up.
Get a market-friendly Treasury Secretary. I mean, all you have to do is look at the RFK nomination for HHS and see what that did to biotechs and the healthcare sector overall, and say that it's caused some worry. Not saying they're not the right people. I'm just saying
I've had enough of his mouth. We've been through a year. We've been through a couple of years with it. I mean, Pow. He is the worst.
Really care about what Blackwell delays are going to.
Anything's better than Powell, you idiot.
Clarity and clarification about is the rest of the economy, is every company in the economy, every sector of the economy trying to get these chips? Are they still investing in AI like we think that they're going to? Getting that clarity actually will, I think, would be one of the more important macro things we're going to get, and what is frankly a pretty light macro week.
Mr. Negativity, where'd you come from?
I see. And how do you feel about earnings? I mean, we're getting some retail earnings in particular, but we'll have NVIDIA and Palo Alto too. Snowflake will be in there. Can those drive the market, and what do you expect?
Yeah, I think they can. And we got retail sales at the end of last week, and they're pretty good overall. We got some good revisions, some kind of good breadth in the retail sales numbers. So we are coming into what everybody knows is going to be a somewhat compressed holiday shopping season. So when holiday shopping season gets compressed, they pull it forward a little bit. And so we expect to see some numbers and some guidance out of firms like Target this week. That will they'll shed some more light on consumer behavior.
Who are you?
Consumer behavior, and we expect retail sales and overall retailer performance to be pretty good this holiday season because, frankly, everybody that wants a job's got a job. The labor market continues to be strong. People are making basically 5% year-over-year wage gains, and that's the backdrop to a strong consumer. A strong consumer spends money. We think they're going to, and we think it'll come through in some of the earnings. But we do need to see it come through in the earnings and in some of the guidance. It'd be key this week, but we have a lot of reason to suspect we'll get good news.
Mm.
So what kind of stocks do you like? What kind of sectors do you like?
So this is going to sound boring like a repeat, but tech, you can't get off the tech train. This is the mid 90s. AI is him, as my kids would say. It is the real deal. A la internet and PC revolution in the mid 90s. So we need to be at least involved with tech. You can't be underweighted. You can just sure as heck can't be shorted. So tech is sort of number one. When you get out of that, you probably want to look towards some of the more Trump-friendly types of sectors. Think financials, and probably more of the smaller financials than larger financials, but any financial will probably do. Something in home builders. We know that there's going to be a big push towards towards making homes more affordable in some respect, and so maybe you're going to get some surprise government announcements that could help the home builders on top of mortgage rates that will probably have downward pressure over the next year or so. Those the trades that are Trump friendly at least that have some regulatory relief and have some sort of some macro backing as well are the ones we generally like.
I see. And what are we leaving out here? I mean, when you think about the new administration and the new year, what are some of the key things that you think will really drive the market? And you're expecting some new highs, right? whether it's the end of this year or in the new year?
Yeah, we certainly are expecting new highs. You get new highs when you have a strong economy and nothing, and you don't over leverage in the system, and we've got both of those things happening right now. But in terms of what's missing or kind of what to look for coming out, one thing we think people are a little bit confused about right now is the performance of small caps over the last week or two. Small caps were a big winner, obviously, and Trump won. And people were wondering, like, what the heck's going on with small caps right now? Why aren't they doing better? They should be doing better if we have a nominal growth surge, we have deregulation, we have lower taxes. Like, these are all the tailwinds that we need in order for small caps to do well. And while we do think they will do well,
I think I've had enough of you, Guy.
Have higher interest rates. We already have fairly low taxes, so that the marginal effect of
what?
Have not had the earnings boost and the earnings power that large caps have. So we need to see the earnings story turn around. We do need to see a little bit lower rates that will help small caps a lot. And we think the rest of the deregulation part will end up finally then kicking in.
These idiots been pumping small caps for years and they ain't done shit.
Something in focus here, and also just the financials. I mean, what kind of financials do you like?
So we do think the Fed is setting up the market for for a pause or a skip. Like how they characterize that will be important. That's probably not going to come until January though. We do think they're going to still cut in December. The data is still supportive of that. The data is still supportive that they need to get toward neutral, and neutral is lower than it is right now, or lower than where they are right now rather. And so we do think they're coming up for a pause, but probably not this next meeting. The important part to remember is they're still in a cutting campaign. And the Fed put is alive and well. So that, that part, we can't lose sight of that part, which is really, frankly, pretty important. And, in terms of financials, we do, as I mentioned earlier, we do like them. We do think they're sort of Trump adjacent. And we do prefer the smaller names in that space, probably more because of the M&A, more M&A activity, and the deregulation part will actually help them on the margin a little bit more than the banks like JP Morgan or Citigroup, the kind of the behemoths. But overall, like anything you want to pick in there is probably going to be a winner.
Okay, thank you so much, Scott Ladner. Great to see you, Horizon Investments. Thank you. Coming up, we'll spotlight the post-election market rally. We want to take a look here and delve into this with Lisa Schreiber, investment analyst at Gradient Investments. Thank you for being here. In our spotlight, we're taking a look at the markets post the rally. How are you feeling?
Yeah, I think what we saw post-election frenzy after we had a quick and very clear winner. We saw some cooling off last week as the investors kind of shifted from the post-election more to the rest of the earnings season and the Fed and the economy. And I think overall of said economy, there's not a whole lot who is actually which would be seen negative at the moment. It's holding up pretty well. The only sore point I want to point out here though is valuations are still higher, they're grinding higher, so it's a little bit more of a challenge to finding good companies out there which discount the valuations. And we have some more earnings reports coming out this week, especially on Wednesday with a very big one, NVIDIA, which should guide us a little bit more and which should have a little bit more implications on the markets going forward.
Yeah, how do you feel about NVIDIA? You think this can drive the markets in a good way? I mean, there was some news about the Blackwell chips and some overheating in the servers, but the big picture is that NVIDIA has been the clear market leader. Do you like NVIDIA? If it dips, do you buy NVIDIA?
So we still like and hold NVIDIA, but we are still a little bit cautious here. We took a little bit more of the gains here because we think at some point we see maybe some difficulties going forward, and it can certainly drive the market just because of its weight in the S&P and its implications on other sectors, AI sectors, tech sectors, on the broader market. But overall, I think it's important, obviously, that they beat their numbers and expectations, but also I think investors will focus especially of what the commentary is. Do we have cautious commentary or more upbeat commentary, and not what their guidance is? And that could ruffle some feathers if we see some weakness there.
Yeah, understood. I mean, what about some of the other sectors? I mean, we were just talking about financials. Is that an area that you think you could find some profits in going forward?
Obviously, yes. So we like financials more, the big financial, the big asset managers pretty much at the moment that could see some heightened M&A activity, which already what we saw is spiking up a little bit again. So we like financial at this point, but more the big players at this moment.
Right, understood. And the Fed, I mean, we were just talking about what the Fed may do, and I think a lot of
Trade
folks are
stocks.
thinking December cut, January pause.
Do you
But
trade
see
stocks?
a lot of cuts next year.
You
I
don't?
mean, I think
Yeah.
that's what
Oh,
people
yeah.
really need to get into, because I think
Okay,
there's a
give me that
consensus on
number.
what to expect in January and February. I mean, in December and January, and then what?
So I think we, when we look at December, and I think the consensus
very much,
is more
sir.
a little bit 50-50
Thanks for
at the
calling back.
moment.
Appreciate
we saw
it.
the last CPI report coming
Right.
in line, the core CPI, and we have another unemployment rate coming up until the December meeting, another CPI report coming out, and I think the Fed is proceeding very carefully up from now, that the inflation is not going into the wrong direction. We do not see it as of now, but I think they're keep continuing very careful. We could see another December cut, and then maybe a little bit more cautious report focusing meetings going forward.
All right, and then I wanted to go over some of the names that you like. You look at Wendy's here and SLB, which used to be Schlumberger, and Avery Dennison. Wendy's, you said valuation near 10-year lows, and also you talked about ABY pulling back on its earnings, and there's Schlumberger in there as well. Tell me a little bit about each one of these and why you think they're good picks now.
Yeah, so Wendy's, for example, a great high-quality name, second largest quick burger chain in the U.S. They had some disappointing Q3 earnings coming out. Also, when their unit growth, I mean, they're not known for a high accelerating unit growth overall, but that kind of sparked a little bit fears among investors, because they're guiding that they're closing down outdated restaurants in not so good locations. What I saw here is actually pretty positive, because they're expected to open up new restaurants in the same pace, so they're staying overall flat, but in better locations, more modernized. So actually that can be a growth driver going forward. And what I also like to point out here is their growth initiatives, their strategic initiatives more into the breakfast sector, which already we saw some good numbers here, and also international growth, and their digital ads, digital business sector, which area which grew 40% year over year. So I think at this point in valuations, which is very much low, below peers and below its own history, it would be a good entry point, and it's poised to grow when we see some of these strategic initiatives actually playing out.
Yeah, good luck there. Wendy's, SLB, and Avery Dennison, your picks there. It's great to see you. Lisa Schreiber, thank you very much for being on the show with us today. Appreciate it. Thank you. Coming up, the disruptors will focus on HP Enterprise after Raymond James upgrading the stock. George Sellis will walk us through the note, share an example trade. Stay with us.
TJX. Doo-doo. No, I've never shopped there. I heard it's in 3 continents, 9 countries, worldwide, with 5,000 stores. TJ Maxx. No, I've never shopped there. Don't think I will. I'd have to drive to New York, and I don't want to take that spill. TJ Maxx delivers great values. TJ Maxx, TJ, oh Max, It's a great place to shop. TJ Maxx. New high, yeah. New high on spit. New high. It's now 10:41.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Palantir is one you have to look at in the next 4 or 5 years. I mean, Albert, this is a new story being built when it comes to AIP and it comes to the Palantir enterprise piece that's not being factored into the stock.
HCWB.
Trajectory here, I mean, we could start to be looking at 4 billion, 400 billion, 500 billion. Could this be a $1 trillion valuation if they continue to execute?
Come on, Dan Ives.
Out of the realm.
Tune in to the newest episode of Market Overtime. Oliver Rennick sits down with Dan Ives to discuss why the AI revolution may just be beginning.
He talks
Market
weird.
Overtime debuts Monday at 4:30 p.m.
HCWB.
All week on Schwab Network and our YouTube page as well. Don't miss it. And welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us for a look at developing stories. I'd like to bring in Caroline Wood, senior markets correspondent here on Schwab Network, taking a look at NVIDIA, which is under some pressure this morning after the Blackwell chips maybe overheating or something. Let's get some details on that.
Yes, I heard you talking about NVIDIA with your last guest. Shares under pressure today ahead of earnings on Wednesday. They are off their earlier lows, though, only down about 0.7% right now. The bar, of course, is high heading into earnings, so there could be some nervousness around that. But there also is this information report about some issues with the Blackwell chips. We know demand is there. The issue so far has really been all around supply, but now the information is reporting that they're dealing with some overheating issues when those chips are connected to the customized server racks that it is designed. So the information says NVIDIA has asked its suppliers to change the design of the racks several times as it tries to overcome some of these overheating problems. These server racks are designed to hold up to 72 chips, so it's a lot of power there. NVIDIA has responded to several media outlets about this report, saying the engineering iterations are normal and expected, which is maybe why we could be seeing shares off earlier lows. I will say that Michael Dell, the CEO of Dell, actually tweeted yesterday that the first in the world GB200 server racks were now shipping, saying that they're thrilled that their cooling gel is part of it, saying the AI rocket just got a massive boost.
HCWB
This
entered a deal in the
October numbers, but it will be interesting to see what Jensen Huang says about,
got $7 million. HCWB, alerted to me by one of the members. Biologic enters an exclusive licensing deal with WY Biotech for immunotherapy development. Immunotherapy development. And they got $7 million. And this got a big old run on it. It's up quite a bit. 27.61, up $1.60 in a day. Probably just got halted. Maybe. I don't know if they can get halted. It stopped trading.
Time. George Sillis is here, senior markets correspondent, taking a look at HP Enterprise, an upgrade over at Raymond James to a strong.
George, back off.
About this one.
Well, I think there's a little bit of a corollary to Hewlett-Packard alongside the narrative around NVIDIA, Nicole, as well as their server technologies. Their server technologies are custom in-house ones they're developing, so it looks like they're having some problems. They talked about it, but the stock really is catching a bit after it sold off earlier today. But we know that the server markets have been relatively very pronounced lately. We saw big moves this last year in Hewlett-Packard Enterprises.
Okay, I'll be right back.
As well as Supermicro, but Supermicro obviously has got its own idiosyncratic problems, but nonetheless, I think there's still a lot of growth for the server market. And if you look at Hewlett-Packard Enterprises, this is a company that's a legacy player in megatrends, secular trends, data, cloud, connectivity, networking solutions, and integrating storage and servers together. And their stock has actually performed quite well over the last year, respectively, up about 28%. And overall, they're still getting some analysts that are very bullish on the name. If you look at the call today, Raymond James upped their stock price target to $29 from $23. And they actually moved their rating to a strong buy, and they actually see the AI high-performance server market really picking up. Hewlett-Packard potentially getting a larger piece of that particular pie going forward. Not to mention that Hewlett-Packard Enterprises is basically a network software and infrastructure company. Their $14 billion acquisition of Juniper Networks complements the software with hardware in the network gear framework, and that acquisition looks like will be closing rather shortly. And that, with that said, that is actually supposed to or expected to increase the earnings multiple plus the profit growth of Hewlett-Packard, and this is also why Raymond James is quite bullish on the name. If you actually consider looking at the growth rates in both earnings and sales, they were actually down in sales over the last 4 quarters compared to the previous year, expecting to resume mid-single-digit sales the next 4 quarters, and earnings are actually expected to grow about 1.5 times their sales. And right now, based on next year's earnings, the stock is trading less than 10 times, which is around its historical average. But again, it looks like the growth rates for both sales and earnings are going to be higher than historical averages. So I think there's also a valuation embedded call here from Raymond James, and also I'll point out again that the server market is obviously in high demand. Hewlett-Packard is one of these companies from a legacy standpoint that serves that market.
Okay, and so how would we go about an example trade here today, George?
Yeah, so the stock doesn't actually move, quite aggressively in the trend. It's up nicely this last year. The reason is the company pays a pretty generous dividend yielding around 2.75%. So what we're going to do in this case to capture or still participate in that dividend, but also enhance that to yield by selling calls, what I'm going to do is I'm actually going to sell a $23 call against a long stock position. So I'm going to go out to the December weeklies with 18 days expiration, and that's the week that the company actually has earnings. So it's basically an 18-day expiration. You could actually sell those, if you buy the long stock, 100 shares, and sell the $23 call, you could earn about 75 cents a share or $75 a contract. So in essence, what this strategy does is you're still long the stock position, you're selling calls against it. The only thing you don't participate in is if the stock is greater than $23 by expiration. But essentially, it does lower your cost basis to around $21. And that break-even level is essentially your risk. So it's like you have a long stock risk all the way to zero, but your participation is capped if the stock does breach the $23 by expiration, which again expires the day after earnings.
All right, good to see you, George Sellis. Thank you very much. Appreciate it. Coming up next, we'll take a look at retail. You have several retailers reporting this week. We'll be right back.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round because we have a slew of earnings this week. Walmart, Lowe's, Amersport, TJX, Ross Stores, BJ, Gap, just to name a few. Jan Rogers-Niffen, CEO at J. Rogers-Niffen WWE. Sarah Henry, Portfolio Manager, Logan Capital Management. Great to see you both. Sarah, are you feeling optimistic? Then, if so, which ones do you like the best and why?
Well, we are going to get a slew of data, as you say, and it's an everything quarter. We have Walmart, and then Lowe's, and then Target just in the next 3 days. And I would focus on, Walmart first is going to set the tone in terms of how the consumer is feeling. And they've just done an amazing job really revolving their company into almost like a mini tech company, using technology, adding ancillary earnings streams like advertising, which have moved the margin up. So Target, to me, is really interesting. On Wednesday, they are earlier in the adoption curve than Walmart, and they trade at fully half the multiple that Walmart does. And the yield, dividend yield, is 3 times as much as almost 3%. And they have learned a lot. They are taking a page out of the playbook that Walmart has done. And
Walmart and Target this week.
Iterating
That's
their
true.
own process with some of the things that Walmart has done. So to me, that is a very interesting company.
Yeah, and Jen, you're on the same page. You like Walmart, you like Costco. I guess you think the consumer's still out there, or those retailers are doing something very right.
Well, I agree with everything we just heard about Walmart, and I agree that Target needs to step up their game, and they're trying to. But I think the big problem for Target
is woke.
Is one word. That's Walmart. I just don't see how
woke, you dumbass.
Walmart has made such an enormous improvement in their business, and they've done exactly what she just said. They've broadened out their appeal because they've got advertising and they've got marketplace, and they're just such a strong competitor. And I just don't see. Target made some great gains, right? They were running away with the ball for a while, and then they sort of stalled out, and they need to get it back. And right now, their multiple reflects what I see going on. They're stalled out. I don't see it happening. I feel the same way, by the way, about Lowe's versus Home Depot. Lowe's made great gains when Marvin got there, and they fixed a lot of stuff that was wrong. But now they've sort of stalled out, and Home Depot just keeps hammering harder and harder.
Home Depot didn't look at today.
And even when the market comes back for home improvement, I don't see how they make gains
Triple
against
top.
Home Depot, because they, like Walmart, are just executing as well as you can execute retail. Right now, Home Depot just happens to be in a tough space.
Oh, I thought you were optimistic on Lowe's upcoming report, though, Jan.
I am optimistic on this upcoming report. I think it'll be the last time they may make some steps toward gaining on Home Depot, and I think every quarter from them forward, Home Depot is just going to keep walking away. I just don't see it getting fixed.
I see, but not anymore after that. I mean, we also have Gap, BJ's, Ross Stores.
I walked into Home Depot or a Lowe's, it might have been a Home Depot, and went back to the glue department, and I asked the guy, I said, I need an adhesive that will glue a tile down to a concrete floor, or a carpet down to a concrete floor, or at least to I had a little piece of carpet I had to glue down. And he couldn't point me out to an adhesive to put that carpet down. I had to figure it out on my own. I sat there and I went back and forth. I spent probably 30 minutes in there reading and trying to figure out what glue adhesive, because I'm not into that stuff. I expected to go in there and say, do you have a small tube of such and such so I can glue this carpet down on the floor? Wanted to sell me this big old gallon thing of shit. I said, all I need is a little, I got a little piece of carpet. No bigger than 4 by 12 inches wide. Come on. I just need some kind of glue to glue this thing down. So I made up my own mind, got what I got, but it worked. But I don't know how, if it's water soluble or anything like that. I was very disappointed in the service there.
Download our free Schwab Network app. It's available in the Apple App Store and tune in 24/7 schwabnetwork.com. I'll see you at 2 o'clock for the watch list. Join me then. Fast Market is next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Schwab Bank.
Yeah, someone tried to call me. Some chick from Obamacare.
Checking account built for investors.
Cut the cord on the way you get market news.
I wasn't paying attention. I didn't get to put.
Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and some option strategies. We're going to cover some earnings in the retail space. We'll lead it off with Walmart, which is near all-time highs into their quarterly report, and Affirm, which has rallied about 23% so far this year, trading at over 2-year highs in today's session. And like Folio breaks down consumer sentiment data in Lowe's, the home improvement retailer stock, up over 3% this month and reports earnings ahead of tomorrow's opening bell. Let's take a look at the major indices, which are just off the session highs. As we begin the show, the S&P 500 up 0.4%. Dow relatively flat. The NASDAQ 100 up about 0.8%, led by some gains in Tesla. Russell 2000, the small caps up nearly 0.6% in today's session. To help me break down all this market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, I'll give you a take here because rough week last week. S&P was down over 2%, NASDAQ 100 down over 3.4%, but trying to rebound here in this week that is all NVIDIA.
10 sectors of the S&P 500 all green to start the day. Why is the Dow the weakest? NVIDIA.
Yeah.
There's a double-edged sword with putting a stock like that in the Dow. It kind of dwarfs the rest of it. So NVIDIA, a little soft news there. That's, is that tradable ahead of the earnings event? It's already, $3 off its lows? Mm-hmm. So NVIDIA is still tradable. I think that this market, I could be wrong here, and I so often am, Tom, but this market appears like it's clearing all the questionable news out for the end of the season. And the end of the year, the last, 6 weeks now? Boy, this is going to be a fun ride for the next 6 weeks because with everything surrounding what the new administration's doing, what the Biden administration's doing, I think this is going to be a crazy 6 weeks till the end of the year.
Yeah, we typically have that Santa Claus rally, that rally into the end of the year, the historically strong fourth quarter. But it seems like a lot of the move has already been baked into the market with the S&P 500 where it is at this point.
Yes, except a lot of these names just corrected off their highs. And if you look at a lot of these names, here's the other thing, something to think about for midweek. If your thesis is that NVIDIA surges to new highs and then consolidates, it's been consolidating now for 5 months. Lower, remember the first time it hit 140 was June, and now it's just hanging out near 140. So there's your
nice
for NVIDIA going forward.
Wow, HCWB.
Little question marks with the Blackwell chips going in. So I think, like I said, look at the move the last couple days. Just in Tesla has a $15 market maker move on a $16. Sorry, I lied. $16 market maker move with no event.
Yeah.
Out.
There is an event, you dummy.
These markets are bracing themselves.
Did you not read the news? See, he's a little lost with Tesla. He doesn't understand.
It's going to be Alex Coffey, senior equity contributor here on the network. Alex,
Elon.
Here, I'm just, it doesn't feel like market exhaustion. We're rebounding a little bit today, but it seems like with the S&P 500 up 23.5%, that you have to start thinking like, where are the next gains going to come from? Are retail earnings going to be that next leg up?
Well, rather than, straightforwardly answer that question, because I don't have that answer, I wish I did, I think that it can be dangerous to say, hey, the market's up this much, that means it can't go up anymore. You could have said that for a year. So going down that kind of path can really set you back. Those who've remained invested through those times have outperformed those who've been trying to pick the top. So, tops are processes. It starts, with a little bit of a sideways and then, of course, of a breakdown. But, I don't know that we have any reason to think that the end of last week was anything more than a healthy pullback, kind of getting rid of some of the froth. You're seeing names like Palantir give back a little bit, a name like NVIDIA giving back a little bit. But, I look ahead, as Kevin said, and I look at the end of this year with, only a month and a half till the end of the year. Really, that last week and a half is pretty quiet, all things considered. You got NVIDIA earnings, one more round of eco data, and one Fed meeting. That's basically what's left on this calendar from a catalyst standpoint. Well, Fed meetings haven't been super volatile. Economic data has been pretty benign. I can make an argument that Wednesday afternoon is the biggest event left for this year that isn't something that will surprise us. Surprise-wise, things to think about. Geopolitics. Is there some sort of an escalation before the guard is changed over? There was a little bit of escalation over this weekend. I think that's why you see the Treasury market not, as weak as it had been, and also certainly why you see a bid into gold alongside crude oil. So that's something to think about. We know that geopolitical, sell-offs in equities have been buying opportunities. Doesn't mean that they always will, but they have been in the recent past. So perhaps if there is some sort of escalation, that presents opportunity. But there's nothing that sticks out to me here, Tom, that says that more of the same isn't what your baseline should be.
Alex brings up a good point here, Kat, because we always talk about that. Like, if there's no catalyst out there that can draw the market either higher or lower, typically we've seen in our trading careers where if there's not a lot of news out there, we tend to drift higher. That's been the norm. That doesn't mean it's going to happen this time, but that seems to be the norm. Like, once we get through NVIDIA and these retail earnings, that, hey, there's no real catalyst to send us down, and if the economic data comes in line like it has or a little bit better, who's to say that we can't continue to rally?
Yeah, there's no top-tier economic data this week. The PMIs and ISMs at the end on Friday, consumer sentiment on Friday, that's it really in terms of major, other than housing data for the week. You're going to have NVIDIA's, think about what NVIDIA is going to say after he's already said during the last month or so that
VIX is moving,
insane, and the Blackwell chip is sold out. What can he say that's more? And the question is, I think the numbers are around $32.5 billion in revenue for NVIDIA. Are they going to beat by $2 billion?
Yeah.
Right? I mean, there's so much going on there.
We have 3 black crows.
The one catalyst you can look at.
Okay, let me think here. Would like to see one more down candle. Well, a good one. I'd really like to see another down candle, Randy. A nice, healthy one. But I don't know. I think we'll get it. Let it drop one more time. One more drop.
See the jump in AMD, but that's been a dangerous trade. So, I don't know that NVIDIA 180 is in the cards for the end of the year. I wouldn't rule it out. Wouldn't think that NVIDIA 100's in the cards either. But I probably might be more likely to believe that 180 happened before 100. And so you look at that and say, if that's your biggest risk factor from a single stock, and then your second biggest risk factor is Tesla from a sentiment standpoint, well, there's a lot of good news in Tesla right now. So if NVIDIA isn't bad news, I just fail to see right now what's really going to set this market back. Now, it only takes a couple days in a row to the fear train rolling.
A war. Ooh, 227.
And they didn't do it, right?
Think about that phone call, Tom.
What?
Hey, these
Rob.
chips are running a little hot. Oh, you want to cancel? No. Didn't say that. Didn't want to cancel.
Yeah, they're working with the server builders basically to kind of reconfigure. I'm sure they're going to figure.
And it's in custom servers only.
Yeah.
And they are working to adjust the servers to cool
and
off.
The companies that are buying them are the most cash-rich companies on the planet. So it's not like, and they're doing these for essentially products.
We're definitely at resistance on HCWB.
it's not like the failure to get these delivered is going to set back meaningfully the business operations of an Amazon or a Meta or an Apple or an XAI. This is all just a race for the future. If anything, it's going to save these companies some money while they're not doing this kind of work. So,
Yeah.
It's all also speculation.
Yep.
Find out from the company.
Right.
But my thing is even in the worst case scenario, I just don't see how this is a major setback for anybody.
Right. You look at some of the server builders. Dell's up. Supermicro is up 17% today. HPE got an upgrade today. So some of these customized server builders using AI doing well today. And you mentioned AMD. That's a good point. That stock's up over 3.25% in today's.
Yeah.
Maybe going to take some market share from them. Maybe that's what traders are thinking. But this stock's pulled back nearly 40% from its all-time highs that we saw in March. AMD has already now negative on the year. Let's move on to the other story of the day, and that's Tesla up another 6.5% today here, Kevin. And this is based on the back of, hey, full self-driving. Elon Musk is going to have a say in this potentially. Stock's up 37% so far just this month.
Now, the knee-jerk reaction is to say that, oh, Elon Musk is influencing Trump and full self-driving is going to come. Well, hold on. Full self-driving is already in California and Texas. Mm-hmm. They're just trying to expand it and get the Department of Transportation to go faster with some of these because shocker, there's massive regulation about no steering wheel and no gas pedal and brake pedal. And they want to just accelerate that away from Texas and California into the rest of the country. They want the rest of the country to catch up to those two places.
Yeah, they want rules around autonomous driving, which there should be.
Yeah, exactly. But remember, I hate to use this term from the past. Elections have consequences. Yeah. So if you think that Elon Musk is not going to come out a net winner in this, he's going to. Sorry about that.
Yeah, and it might not be just full self-driving only, right?
And by the way,
no way, it's going to be a lot more.
In the pipeline.
That benefits other car makers as well, not just Tesla.
Yeah. Well, and I think this is actually a good point because I was actually going to take a different point, which is if you look at kind of what an administration under Trump and kind of the.
I learned something about Elon this week. You know, when he goes out, sometimes people kind of pick on him and stuff and give him crap. He walks into this coffee shop and they tried to refuse him service because, you know, he had a mega hat on. So he grabbed his, you know, he ate his apple pie and left. Everybody's snickering and laughing at him and stuff. And he comes back the next day. The waitress was kind of getting picked on and she got fired. Or she was going to get fired or something like that. So he comes back in. Oh, there's two stories I watched about him. One about a coffee. Both of them were coffee shops. So they didn't refuse the service with the black lady waitress one. She got fired because she went ahead and served him or something like that, or she stood up for him. And so he came back in the next day and he went up to her and I can't remember the story now. And he offered her a job. But he walked into this other coffee shop and they told him to leave. He comes back the next day and he makes a proposition to the lady, the owner of the coffee shop, and said he liked to shop and he wanted to make it an example. So he took a bad situation and turned it into a positive situation. That's what he's like. That's the kind of guy he is. He's not like a Cuban or whatever his name is, or a Biden, or the same way with Trump. Trump would help anybody out, don't matter what color of skin you are or what race or gender. And he's helped so many people. But yet he gets criticized and beat on and using his own money, not government money, to help people out. So I just find that Elon's a good asset to any government, even if he would have worked with them during the Biden regime. It would have been some good results. But they wouldn't have none of that. Always clean as Jim. Fuck, what is the deal with all these goddamn calls, man? I'm so sick of it.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking retail earnings this week. We're going to kick it off here with Walmart. Let's bring in Caroline.
Yeah.
Correspondent here. Caroline, this stock has had a phenomenal run. It looks like I mean, if you didn't know it was Walmart on a chart, you'd think it was an AI tech name at this point. But expectations pretty high going into this report tomorrow morning.
Well, Walmart is now using AI to help its shoppers, so maybe that's why the chart also is looking good. I know they've talked about it on the past few earnings calls, but yeah, this is a stock that's actually lower right now. It was higher just a bit ago, but down about 0.2%. But as you said, it's up 60% year to date, trading about 2% away from the highs. So it's had a really stellar performance. The bar definitely is high. But, you know, I will say the Wall Street community is very bullish on this name heading into earnings if you take a look at the breakdown. But I was taking a look at some stats. Walmart's having its best yearly performance in over 25 years right now. In terms of the expectations, as you can see here, adjusted EPS of 53 cents on revenue of $167.5 billion. That's about 4% revenue growth year over year, a little bit more than that. That compares to 5% revenue growth in the previous quarter, in the second quarter. When you take a look at the year-ago period, overall same-store sales growth is expected to come in at 3.8%. That is compared to the 4.7% in the year-ago period. So a deceleration, but still growth nonetheless. U.S. same-store sales growth is expected to come in around 3.7%. That compares to almost 5% growth in the year-ago period. And Sam's Club U.S. same-store sales growth is actually expected to accelerate to 4.2% versus about almost 3% in the year-ago period. I think outlook is going to be key. We know we're heading into the key holiday shopping
Oh, I wasn't watching my SPX. We did pull back one more.
Customers a week globally, and we know from previous earnings reports that they've really been searching for value, and we'll see what the management has to say about that. Last time when they reported back in August, the company was talking about higher engagement across all income cohorts, but specifically the upper income households continuing to account for the majority of the market share gain. You know, the $100,000 a year salary plus really gaining market share there. So it'll be interesting to see what Walmart has to say, especially considering the latest retail sales report pointing to a very resilient consumer. Now, we know grocery prices continue to be high, and I saw a note from Goldman Sachs saying Walmart's grocery prices are about 10 to 12% lower than the typical average basket. So one would think that they'd be a beneficiary of those higher grocery prices as well. As my mom's favorite topic of conversation lately is how expensive things are at the grocery store. But the bar, is high, but history is also on its side. I will say that Jay Woods of Freedom Capital Markets was out with a note this morning saying shares have climbed higher after earnings after 8 of the last 10 reports, with an average move plus or minus about 3.8%. So we'll see if it can continue to follow that trend. Shares down, basically they're unchanged right now, basically flat.
Caroline, $167.5 billion in revenue. That's not for a year, that's not for 10 years, that's for 90 days. You mentioned the AI beneficiary that they are. What I talk about a lot when we talk about Walmart here is how this
SPX
massive company, 8 billion
back at the 63, Randy.
Outstanding
Kind of broke
now,
out of trend.
Still acts like a small, lean, agile company. How do I know that? You know what their focus is for this quarter? Targeting supply chain logistics costs. So they're still working on bringing down costs to
First candle out of the flag.
price. But here's another interesting story. In terms of share buybacks, they're hesitating on some of their share buybacks. Why? Because they don't want the Walton family to get too much over 50% ownership. There's 8 billion shares out there, and the Walton family already owns about half the company. It's an amazing story.
All right, so what you're saying is we shouldn't expect any announcements tomorrow about additional share buybacks.
Yes.
Noted there. I think that there's a lot to consider here. Obviously, for Walmart to continue to keep prices low, which is really why people go to Walmart, right? I think they have to be as efficient as possible, hence why they're utilizing so much technology to be able to do so. They also have a kind of alternate revenue streams as well that they're working on with the Walmart Plus membership and also their advertising business. So they're trying to be, as diverse as possible as well on that front. When you take a look in terms of what analysts are thinking heading into this report, just given how impressive this stock has run, 95% of analysts rate Walmart as a buy, which is actually more than the analysts that rate NVIDIA as a buy. 90% rate NVIDIA as a buy heading into that earnings report this week as well, which of course is a main event, although Walmart, I think, would be a close second here. Only 5% are in the hold camp for Walmart. The median price target, though, is only about $4, $5 higher than where it's currently trading at $89 a share. So I think the big question will be, will analysts adjust their ratings or the price targets because it's getting pretty close to fairly valued. In terms of some of the commentary that I've seen heading into this report, I know that Citi is looking for Walmart to raise its full year outlook, so keep an eye out for that. Piper Sandler raised its price target heading into the report, now at $93 a share from $83, so it's currently trading around $84 a share right now. Also raised its comp store sales estimate to 4% growth versus the majority on Wall Street looking for about 3.8% for overall and 3.7% for U.S. So a little bit more optimistic there. Thinks that falling gas prices during the quarter will actually help low and middle income spending, and then also said Black Friday sales cadence seems relatively similar to last year for Q3. So Piper doesn't expect any promotional activity to significantly sway gross margin one way or the other. I think that overall there's a lot of bullishness on Wall Street.
Well, I'll be right back.
This report. It's just going to be a matter of where the stock goes from here, given the median price target and just given how much it's already run at this point.
Yeah, definitely elevated far above some moving averages also. I'm curious to see what their advertising business looks like also, because they started to roll that out and advertising spend was massive over the last couple of quarters. All right, great stuff. Thanks to Caroline Woods, senior markets correspondent here, breaking down Walmart had earnings. Alex, let's bring you back in here. The aftermarket's only pricing about a $4.20 move either way in the shares. But implied volatility elevated, but it's had a good run so far.
Yeah, not even including the gap portion post the last earnings, right. Just from when it opened to essentially where it is now, it's up 17% over the last quarter. It's something like 23% if you include that jump higher of about 5-6%. So it's been a monstrous performer. Caroline talked about its sort of AI tilt to it, where it's using a lot of that technology to help catalog the tens of thousands and hundreds, I don't even know how many, hundreds of thousands of goods and services that they sell. And so another company that's using this technology in its early kind of infancy already to make things more efficient, I think that's important, especially because it's a company that can invest into it, has the money to do so. It's one of these names that, feasibly in the next few years on the trajectory it is, could be one of those trillion-dollar companies, as it's about 3/4 of that as we speak. Back to school season, and then Caroline, whether it was intentional or not, talked about, I think it was, she said her mom, everything she's talking about is, hey, how expensive things are at the store. Well, there's a reason that you see it in the consumer sentiment surveys. You kind of see it in terms of sort of the outcome of what happened with the election.
Yeah.
Is that regardless of what you say GDP is, or what hourly earnings are, or what CPI is, the general population feels things are too expensive and the economy is not working for them. A place like Walmart does its best to appeal to the value consumer. So it's going to be more resilient than its more discretionary peers think Target. And so a little bit more grocery tilt as well, about 50% in groceries. Back to school season, value appeal, those are the big things. If you just see a test of that all-time high, which is just shy of 86, this is a strategy that can work for it. We're looking at buying kind of a standard, classic call vertical to reflect a bullish example trade here. Equal risk to reward, it's a $3 wide spread expiring this week. 83.86 for $1.50. You risk 150 with a chance to make 150. 84.5 is the break even, basically in line with where we're at now, especially when you take into account the fact that you're going to have an earnings event that's largely going to dictate where this stock goes from here. I think if you're going to do a strategy like this, be it bearish, bullish, whatever, however you want to set it up, reasonably with this short dated of an expiration and the fact that you have earnings on the calendar, you would set your expectations that it's likely this will either be a max profit or a max loss. Now, I know that it can land in that $3 wide window, and especially with a name like Walmart that averages something like 3.5% or so for its move, it's certainly possible, but you're going to have an earnings reaction. It's going to go higher, it's going to go lower. You only got $3 to work with here, so setting those expectations that the max loss is a realistic possibility by the end of the week. If you weren't comfortable with that, you would absolutely not do this.
Yep. Let's break this one down. No 22nd weekly cycle. So just 4 days till expiration. You'll have a couple days after earnings for a potential move on this one also. So maybe the first reaction, maybe not what you want, but maybe you've got time in it. But buying the 83 strike call, sell the 86 strike call, $3 wide bullish call vertical, $1.50 debit. There's your risk, $150 per spread. Pretty good risk reward scenario here, Kevin. 150 to make 150. But you're buying an in-the-money call. That 83 strikes up over $1 in the money, so you don't need that big of a move to the upside to get above that break-even of 84.5.
Yeah, we talk about the break-even a lot on this show, and guess what? You're there. Yeah. You're basically at the break-even. All you need is nothing or higher, and this is a profitable trade. So remember, 83, 86 trade. If you're spending $1.50, it breaks even at 84.5. You're 84.40. Right now, so you're basically almost there. But if it moves downward, you have a little more exposure. That 150 will go away pretty fast on the downside. But boy, Walmart, you know they're going to put up just video game, small country like GDP numbers for 90 days. Right. So this is a company that just does so many things well, and they compete in everything now. Right. And eventually, there's probably going to be a daytime. It's going to be Walmart and Amazon.
maybe Target's still in there, maybe some others, but yeah, you don't need that big of a move to the upside on this one because you're buying this vertical. Say the stock pops up to new all-time highs above 86. Maybe you close a portion of it or all of it, depending on how many contracts you did. So it gives you a little bit of flexibility as far as trade management goes if the market's open for some trade management on that. If the stock falls, you've still got a couple days until expiration on this one. Maybe it does rebound. But directionally, bullish trade here, that example that Alex brought us. All right, good stuff. That's Alex Coffey, Senior Equity Contributor here on the network. And coming up after the break, we're going to be joined by Landon Swan from Lightfolio for a look at sentiment data in Lowe's. The home improvement retailer stock hit all-time highs just last month, up over 20% in 2024. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Happy Monday.
Happy Monday to you. Happy Monday to Lowe's investors. Pretty good run so far this year, off of those all-time highs. But we've seen a resurgence in Lowe's and Home Depot. They've already reported earnings. That stock's done really well. What kind of data do you have for us here on Lowe's?
Yeah, Home Depot, really, they reported some strong numbers, but the stock didn't really, react as well as the numbers were. So I think a lot of it was baked in. They also talked about how that some of their more affluent customers who are still in good shape were still putting off projects, which matches what Lowe's said their last quarter. Right? They were talking about how inflation's high and people were pushing back big ticket items, pushing back projects. And that's just kind of the sentiment that we're getting through our data as well, as people are still kind of waiting. I know that, with the rate cut, everyone's kind of expecting mortgages to come down and that to spur some home improvement as you switch houses. But I think everybody's kind of sitting on that and waiting right now because mortgage rates are still just under 7%, very high. And when you look at what current Lowe's customers have, about 90% of Lowe's customers are homeowners, and most of them have mortgages under 4%. So it's, they're in a tough spot to go from 4 to 7 to switch houses to make that move. And then when you do, you do all the projects. So I think a lot of it is kind of sitting and waiting, even the customers who are doing a little bit better. And that's I think it's a bit of a concern for investors. We know the last quarter that Lowe's had comp sales on do-it-yourself down about 5%. Their pro segment did better. I think they were up about 3%, and that the pro users were up about 20% on a year-over-year basis. So strong numbers on the pro side, but that's only 25% of their sales, right? That is more of a Home Depot thing. That's about half their sales. So you can see that their Lowe's pro user growth is doing well on a year-over-year basis. Down from the summer, of course, but still doing well on a year-over-year basis. But again, it's a very small percentage of their revenue, about a fourth compared to their counterpart, Home Depot, being half. So I think that's a bit of a concern, is that the everyday user, the consumers out there, are kind of waiting. They're pushing back big projects. They still got the small project, but when it comes to big appliances or things that they might take out a loan for, or big projects that they're going to take a loan for, a home equity line of credit, whatever it may be, they're staring at those interest rates and they're saying, you know what, let's wait a little bit and let's see if it comes down. There is pent-up demand, so once that happens, I think it's going to be really good for these companies. But the data that we're seeing is showing that maybe we're not there just yet.
Landon, this stock, 6 months up 21.5%, 12 months up 34%. So all the cautionary tales we're talking about not really showing up in the price of the stock. It's still pretty strong. Is there risks there of another? I mean, remember, because Home Depot, they didn't put up any great numbers, and the stock rallied. Now it's lower after the fact because of the overall market, but it rallied after earnings. Should we play this similar? I'm not looking for 6 months or 6 days. I'm not looking for 6 hours of trade here, Landon. How do we play this if they put up a good number?
Right, I agree. So look, the data that we've got on websites, I think that's the key for this one. So Home Depot down about 8 points on web visits, Lowe's up about 9 points on web visits. So we're actually seeing a movement more towards Lowe's, and I think that comes on the lower bar, right? So remember, this is year-over-year change. So this isn't how many people went to Lowe's versus Home Depot. It's how many people went to Lowe's now versus they did a year ago, right? And so I think Home Depot had a higher bar a year ago, but Lowe's is starting to catch up. And I think that could play out a little bit. Again, based on what Home Depot said, everybody's pushing back their purchases. Lowe's said it last quarter. I don't see why it would change, but then I've got this data staring me at the face and saying that their web visits are up, and we know that 75% of their revenue comes from consumers, not pros. So I think that's kind of the upside. The stock has pulled back just a little bit. But it is up significantly, like you said, and all of the good news, I guess, from Home Depot is baked in. So this was a tough one to play. We've got a score of plus 18, which is right there on the edge where, if it was plus 20, we'd say, all right, it's worth a bet. At plus 18, I think it could still be worth a bet. If I had to pick, I'd go up for sure, especially with a little bit of a pullback here and this web data making me say, all right, there might be something here that makes Lowe's outperform Home Depot. You always got to default to the data. I mean, the talking points that we've got on Lowe's are from last quarter, except for this data, which is showing, promise and showing that maybe they're actually doing better than Home Depot, especially on the consumer side. We know that Home Depot did well on their pro side. The sales were up 6%. They had a lot of pent-up demand on the pro side, but on the consumer side, everybody's kind of weak right now, but these numbers tell me that maybe Lowe's isn't that weak, and maybe we'll get a little bit of a surprise to the upside. It's not strong enough data for us to buy out of the money calls or anything like that, but I'm pretty confident, Kevin, you can structure a trade that takes advantage of some potential upside here.
Landon, and Home Depot, post their earnings, I thought that was just a mediocre report, but it seems like the pent-up demand, that interest rates are going to come down. People, there's not enough supply out there. People are going to redo their houses. They're not moving out of a 3.5% mortgage and going up to a 7%. So this is almost like a waiting game, and Wall Street's giving them the benefit of the doubt, and it's not data-based. Is that anything that you see here, Landon? Because until that 10-year goes back below 4%, I just can't imagine people doing big projects at this point.
That's everything that we've got saying that same thing. I agree. Everything is we want to do project, and we as consumer, we want to build the project, we want to do the expansion, renovate the house, whatever it is, but we're not willing to pay for it right now. Let's see these rates come down. Let's see the wallet just get a little looser and just have a little bit more money, because right now things are a little bit tight. There is a lot of pent-up demand, and people want to do these projects. I'm encouraged by the website visits. It kind of conflicts with what Home Depot said not too long ago and what Lowe's said last quarter, and what a lot of our data says is that people are sitting on their hands with desires to do projects but waiting with the money. But the web visits, again, I think that's kind of like the unknown element that maybe investors aren't taking advantage of. Maybe they don't know about this yet, and maybe that's the thing that Lowe's comes out and says, you know what, our consumer segment is actually doing a lot better than Home Depot's did a couple of weeks ago, and they're doing a lot better than we reported 3 months ago. So I think the upside is more likely than the downside because of that, because there's that kind of X factor baked in. And I think everyone like us is expecting the fact that nobody's moving from 3.5 to 7. Nobody's doing these big projects right now. They're all waiting. So if there's any kind of indication that that's sort of turning and we're moving around the corner there and that we're wrong on that, then I think that the upside is the way that stock's going to move.
Yep, and then the impact of the hurricanes, of course, are going to be a positive
If we're waiting for 7% to go to 3.5%, you could be waiting a long time.
Yeah, for
People might be realizing that. That's
like
the thing. Like, I might just say, you know what, I give up. Let's do it now.
Yeah, that's true. I think it goes back below 6. It'll be okay. All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
Yep, that's Landon Swan, co-founder at Lifefolio. Kevin, the option market pricing about plus or minus $10 move in the shares. So implied volatility is elevated in the near term.
So, based on Landon, based on Home Depot, based on everything else we're thinking, based on the recent, it just came down slightly. Tom, the practice money, paper money trade we're looking at here is the 1 week to $10 diagonal. Now, I put this in 270, buying the 270, selling the 280. Buying the 29th of November 270, selling this week's 280. Can you adjust that? The stock has rallied a little bit.
Yeah.
We put this in originally around 490. It's trading about 540 now since we put this in. Maybe do you want to adjust the strikes? Possibly.
Yeah.
You could do that. You'll probably get a lower net debit on it if you went 275, 285. Hold on, I can price it for you right now as you look at 275, 285 would cost you about 390. So a little bit less. You could save a little money there doing that. But remember, that's two different targets on this one.
Yep, let's break this one down. We did look at the $10 wide call diagonal on this one. November 29th weekly series. Buying the 270 call that's in the money. Sell the 280 strike call in the November 22nd weekly options that expire in just 4 days. By about 540 debit, we've got 490 on there, but the market moves. It's dynamic, right? So the debit you pay is going to be your risk on this trade. So whatever you pay for it is going to be a risk. $490, $540, whatever you pay on this one. Break even around 272, 273 to the upside is going to be a break even on this one. But the idea is you're paying less than the width of a call diagonal. Kevin mentioned you can adjust strikes because the stock has moved up, but the implied volatility levels at what you're selling, about a 47% implied volatility versus what you're buying in the November 29th option series on the 270 strike, that's about a 33.5% implied volatility. That's why it's less than the width of the call diagonal, and that's what you're trying to take advantage with this type of strategy. This example is a bullish one. If you're more bearish, you can buy a put diagonal to take advantage of those that dispersion between implied volatilities. Got some assignment risk on that short 280 call over the next 4 days also into expiration, so keep that in mind. But a good look at, hey, if you think this thing's going to bounce like it did in Home Depot post earnings, this type of strategy takes advantage of it. Kevin also did highlight the fact that, hey, this stock traded $287 just about 3 weeks ago also. So it has pulled back a little bit, hanging on to that 50-day moving average as a baseline support, but good use of Lifefolio's data there. All right, let's take another quick break. We
had to break out of the wedge today on low.
Now, pay later stock is moving higher so far this year, up about 23-24%, rallied to 2.5-year highs during today's session. Stick around.
Ah, I like that one there. Doo-doo-doo. Oh, yeah. Doom,
You watch the
doom.
market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Affirm, let's get a quick market update here. Stocks higher on the session, except for the Dow is relatively flat, but the S&P 500 up nearly 0.4%. I mentioned the Dow down fractionally. NASDAQ 100 still leading to the upside, up nearly 0.7%. The Russell 2000, the small caps up just over 0.5%. We've seen treasuries actually positive now, so we're starting to see yields weaken throughout the session. You see the dollar there just a tad bit weaker. 10-year yield now lower. Did hit near 4.5% earlier, now lower. Crude oil up about 2.8%, back above $68.50 a barrel. Gold up 1 3/4% after the worst week for gold in nearly 3 years last week. Bitcoin hovering just below 92K, and the volatility index is coming in a little bit after a big pop on Friday after some losses. All right, let's bring in our next guest, and that's going to be George Tillis, Senior Markets Correspondent here. George, we're talking Affirm. This stock has just popped. Parabolic move over the last couple weeks here. Buy now, pay later, becoming more popular. What's your thoughts here on Affirm?
Well, I think the brand has been growing. And to be honest with
Woo!
you, we're starting to
Yes,
see
it has.
This brand across multiple e-commerce sites. It's available on Amazon, Shopify. They've even got partnerships now with Visa. So I think this is another catalyst for the underlying name. And today the stock is higher by close to 10%. And if you look at some of the announcements on large institutional holders, the Soros Fund actually has taken a position in Affirm, and I think this is a company that's really catalyzing the aspects of changing the dynamics of how credit cards are used. Essentially, now you can choose a customized payment, of course, which again, consumers really appreciate. Not to mention, it gives you different options versus traditional credit cards. Maybe you don't want a credit card, but you want to finance one single purchase. Maybe it's a big one. You can do that using Affirm. And what's nice about the business is, much like I would say Visa or MasterCard, they don't take the financial risk on, and neither does Affirm. They don't actually hold capital for things like loan losses. It's not a financial company. They actually are a financial broker that brokers the transactions through third-party commercial lenders. And I think this is an interesting business which has been growing. And it is a stock that doesn't necessarily trade a very large market cap. It's around $17 billion. They generated around $2.5 billion last year in revenue. But the problem going back just a couple of years or so is that still the company hasn't achieved break even yet. But if you look at the forward estimates for earnings, they're in about the mid part of their fiscal year right now for 2025. They are expected to achieve a full year of profitability in 2027. So that puts them out about 6 quarters before profitability. And typically the stocks will start moving, just based on my anecdotal experience, about 6 quarters ahead of that break-even level.
George, this is the number one of those.
K-Web new
charts
high.
we talk about a lot. The 1-year chart looks a lot different than the 3-year chart. And the numbers that they put up for the last year, pretty solid. Is this, remember, this went through the honeymoon phase. They sold all these stocks off hard, and now they're all recovering. Had something changed, George, I mean,
Yeah, Trump's president.
Raising price targets into the mid-60s. It's still kind of, if you poll all the analysts, still looks probably, it's like 11 bullish and 10 neutral on it. What's going on here, George? Is this whole buy now, pay later thing start in kind of a recovery phase?
I think so. I mean, I think that to answer the question is that this company is generating the network effects of its brand, and so it's becoming synonymous with buy now, pay later. You could consider a firm essentially like a verb of making these buy now, pay later transactions. So. With that said, some of the other competition has gone out of the wayside. There's so many different buy now, pay later names that I've tracked in the past. I no longer track, as many of them are no longer in business. So I think that's important because they're generating these network effects. It's a technology business, which in fact, if you look at gross margins, are still quite low at around 42%. Which tells me that they could expand that significantly going forward, assuming they can keep costs in line and sales growth improving, even though sales growth, by the way, is expected to decelerate. If you look at the sales growth in the last 4 quarters, 46%, next 4 quarters, 33%. That's down from 51% of their 5-year average. But we also always talk about how decelerating sales growth doesn't mean the stock is not going to continue to trend higher. It all matters if they're getting either, in this case, close
does it really matter?
Outpacing the deceleration in sales growth, and that's the case for a firm. Is they're getting closer to that break-even level, and
yes,
it's
they are,
becoming
sir.
more visible over time. Now, the reason some of the analysts are bullish and some of the analysts are neutral on the stock for the most part, and there's a couple dozen that cover the stock, is because of the profitability profile. They still haven't achieved it yet. So therefore, the company's burning through money. And to burn through money, you have to either have more money or essentially raise more money. And to do that, you have to issue some additional debt or equity. In the context of the issuance of equity, they continue to issue it, so that's going to suppress price action. The company has about $7 billion in debt, but they have about $2 billion in cash, $17 billion in equity. So balance sheet looks relatively healthy, let's just say, and just to a large degree. But again, there's the risk of secondary offerings, which can put pressure on the stock. And short interest does exhibit this because it's still trading at around 7% short interest of the total free float.
Yeah, George, I think one of the big things for me is when I look at these stocks, it's almost like a reflection of, how good or bad the consumer's doing at this point, because if you're getting charged no interest on some of this stuff, that's a concern because credit card debt's at record levels right now. People are using this stuff.
Oh, sure.
Yeah, I think that's going to be one of the concerns, but the stocks had a great run.
Remember, this company got famous financing Peloton bikes.
Yep. Now they got partnerships with Apple, Shopify, all of them. All right, great stuff. Thanks to George Tillis, Senior Markets Correspondent, here breaking down a firm for us. Kevin, I mentioned the parabolic move. RSI above 70, just slightly. So overbought on a technical basis, but it's had a good run, up 25% now so far this year. So I looked at a strategy that takes advantage of, hey, if you're a firm shareholder, maybe you want to lighten some of your exposure, or if you're just speculating where, hey, maybe it's overbought, maybe it turns around, or at least consolidates. So I looked at a strategy that takes advantage of that.
SPY back to the 200, Randy.
Weekly cycle, so just about 2.5 weeks. So
SPY at the 200.
Sold the 63 call, and then bought the 66 strike call. So a short $3 wide, neutral to bearish call vertical. Collected roughly about 90-cent credit. You probably collect over $1 on it right now. The stock has moved a little higher. But if you collected 90-cent credit, that's what you could potentially profit with a break even of 63.90 to the upside on that, Kevin. That 63 strike's got about a 60% probability of finishing out of the money on this one. So it's a little more aggressive, but almost a reward of 1 with 2 at risk on this one because you've got risk of about $210.
News out today, they just extended their partnership with Priceline.
Yeah.
Paying for vacations over time like that probably seems like a pretty obvious choice there.
SPX, same thing, 200.
Today you're selling the 63.66 for about 90 cents out of the money, taking some money off the table. This is a short delta spread. You need to just stay below $63.90 is your break even.
Yep. I
Oh,
think
higher now, I'm sure.
when doing these directionally, you could, if you're really bearish on this, you buy a put vertical, right? So, or buy a put something on the bear side. But if you want to give yourself a little cushion, it's having a great run today. Also on that price line news, and as far as along the other partnerships that they have. But if you want to maybe take that neutral to bearish type stance where you profit in 3 out of 4 scenarios, as long as it doesn't go up through that 63.90 break even point, you can be profitable on this type of trade. If it goes lower, stays where it is, goes a little bit higher, you could still be potentially profitable. All right, Kev, that's going to do it for us today here on Fast Market. But stick around right here in the Schwab Network. Next Gen Investing is coming up.
We'll bounce up. Head and Shoulders.
Join me, Oliver Rennick, alongside Schwab Network's options
Oliver,
experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Okay, I think, what time is it? Midnight. It's noon with 3 white soldiers.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built
The checking
for investors.
account.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning
Nice.
Trade Live on the Schwab Network.
That's an
I'm
extension
Oliver.
pattern right there. We could be moving up more now, Randy.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
Megaphone.
Support from the Schwab Trade Desk,
Megaphone pattern.
a team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Do. There it is. That's a not bad trade right there, double bottom.
I'm Jenny Horn alongside Alex Coffey. And Alex, to kick off this week, we are seeing pretty firm territory in all 4 of the major averages here. Strength, and Tesla has been the standout of the
Am I seeing the right thing?
NVIDIA pulling back, but of course, I think that of the overall market activity.
This don't make sense. 5870s. Jesus, $3,000? No. What did I do? Type in the wrong one?
Which is getting a modest lift, about 1.8%, as one analyst says that AI server demand will only continue to benefit a name like HPE.
Yeah, a lot to get through. Let's do upvote, downvote, not endorsements, not recommendations here. Our list has a couple names that are going to let us know how the earnings fared for the quarter. A couple others on the list have been on the move lately, deals and, of course, scrutiny from a regulatory standpoint. But let's start with Trip.com. Now, this is a company that actually basically entirely functions within the People's Republic of China. So while that name might kind of think of it as something that we might be using here from a travel agency standpoint, it's actually an ADR out of China, and it kind of has that look of a stock that is exposed to China. Big moves higher a month and a half, 2 months ago, and then kind of sideways to lower as sort of that initial pop around those stimulus announcements have started to wane.
Yeah, and so this name is, as far as overall, I mean, like expectations here goes, we are expecting earnings out today after the close. So analysts are expecting about 81 cents a share as far as their earnings, and we are expecting some degree of improvement as far as their revenue. But as you know, with the names that are exposed to China here, I do think there's this scene, like basically risk because of the U.S. and China relationship. But I think that you made the best point of all is that they primarily operate in China. So I don't necessarily see some of the election headwinds maybe weighing on this company because they serve business that is not necessarily impacted too much by here in the U.S. So I was reading about like the tariff impacts regarding China. I don't think the Chinese companies will see as much of a hit as perhaps they were maybe pricing in. We did see that some degree of weakness over the last week or so in this name, but I do think that more and more hearing from these Chinese companies like Alibaba, Baidu, we saw reports last week. They did not exactly illustrate a super strong recovery in the Chinese economy. I would be surprised to see anything different from this name, although we are up about 2.2% here into this report.
Yeah, it's one to watch. I do think that, it's going to come down to broadly your feelings and assessment of the greater China region when it comes to whether or not you like this name or don't. It's more service-oriented than, of course, goods-oriented when it comes to travel. But that initial pop that we saw around like the, 8th or 9th round of stimulus has certainly lost its luster now. And we'll see if there is good news or not from the company. looks like in 2023, about 87% of its revenue was from the Greater China region. So very, very domestically focused in China. Next on our list is Warner Brothers Discovery. A name, I believe, at the very beginning of 2023 was the strongest performer in the S&P 500. Well, those days are in the distant past, as it's been a struggling name really for the duration of the last
I'll
2
tell you
years,
why.
Absent that January 2023 month.
Wokeism.
Do you remember that? I can still imagine where we were on the old set, and I just remember it so vividly because it was actually a few months that it was the best performer of the year. And gosh, what an unfortunate fall from grace it's been. We've seen lower lows, lower highs. I mean, from a charting perspective, this has been a pretty clear downtrend, except we have seen some recovery. So that's, I think, what the bulls are hanging on to today, especially continuing to climb today on news that the company has reached an agreement with the NBA following months of uncertainty. So they announced that their TNT Sports and NBA have agreed to extend their media partnership by an additional 11 years. The deal does give TNT Sports the rights to produce and distribute new and existing NBA content across its
It's a
platform.
cheapie.
But also we know that popular basketball
It's up
studios
good, too.
show inside the NBA, which includes, several of the big players like Charles Barkley, Shaquille O'Neal, will also be moving to Disney's ABC and ESPN. But per the
Way oversold.
announcement regarding all these companies, we did see their chief executive say they are pleased to partner with the NBA and Disney and ESPN have solidified long-term rights and revenue for Warner Brothers Discovery. So while TNT has not historically attracted a ton of basketball viewers, there has been uncertainty about whether that audience would remain after the NBA said in July had signed on an 11-year agreement with Disney as well as Comcast. So I think that now the scene is still a player at the table is a huge win, especially when right now their legacy business is somewhat failing. Streaming is not exactly crushing it. They needed the win here, and so I think that this is a sigh of relief today.
Yeah, and as you look back throughout this performance for the year, it does seem that it's trying to base out from a technical standpoint, basically flat going back to February, which on the performance that this one's been on, flat over that long of a stretch is actually pretty good relatively. But it's up some 40% since the lows of August, which I think is pretty impressive. It's been kind of quietly outperforming over the last few months. So we'll see if that can continue for WBD. Let's talk Palo Alto. This is a stock that has earnings this week as well. The stock can move around earnings. It's
What I'm watching
a few times this year, Jenny. Particularly disappointing, going back to February.
PA&W.
Outperforming quarters as well. Made a new all-time high not that long ago, although it has slipped just a little bit over the last few sessions. Really about a week ago it made that all-time high, but all things considered, really, really nice recovery after that just disastrous, quarter back in February.
Okay, and actually, oddly looking like the almost perfect inverse of Warner Brothers Discovery, because we saw that pretty significant nosedive, like Alex mentioned in February.
I have a feeling that's going to go down, not up.
The nastiest gap in this chart over the last year. If you look at the chart, you'll know exactly what I'm talking about. But it has since been a trend of higher lows, higher highs. To Alex's point, we've pulled back about 5% from highs, but those are all-time highs in Palo Alto Networks. So not too shabby for a name that lost a sizable chunk of its value just in one day on earnings. And I have to say that I was also looking at a chart of CrowdStrike earlier today, similar space, different story that has plagued CrowdStrike, of course, but both of these names recovering, and the resiliency of cybersecurity, I think, remains to be somewhat amazing. So as far as analyst conviction goes, I've seen nothing but optimism. I was actually seeing this note out of B of A, which did say that Palo Alto Networks, in their opinion, will deliver solid first quarter results. They believe that the next generation security annual reoccurring revenue probably will grow 35%, with firewall product orders, in their opinion, likely showing signs of a recovery. B of A also did note that free cash flow margin has limited upside, and management plans to cap or scale down some vendor financing. So the federal segment of their business could be now at this point a headwind in their opinion, but they said there's so many right now areas of guidance that they see only being raised for this quarter that they're pretty optimistic. Other analysts I saw that were raising their price target: Rosenblatt, Truist, JP Morgan. So a lot of right now coverage that's moving to the upside. So that's encouraging for a name that's still up 60% over the last 12 months.
Yeah, it's been a really, really important area. We know that it's become a really defensive aspect in terms of spend on software as a service. kind of a double entendre with that, no pun intended, obviously, because these kind of services are protecting these businesses. But we know that this is sort of the new frontier of I guess, malware and kind of warfare when it comes to cybersecurity and sort of where those battles are taking place. So all these companies with that exposure, this is a staple within business spending now. You need to have this in 2024 to be a successful business, as being online is critical. So a major player within the space, a really nice comeback in terms of the performance. We'll see how much more growth is there and, does it warrant the valuation. Last one on our list is Moderna. Now, this is a company that, really probably is just due for some good news. It really is longing for some good news. As you look back over the last few years, it's been a really strong underperformer. But that's always the risk. And I'll use an example of something that's totally different. So it doesn't have to be healthcare, your opinion on the product they made. When you make one thing, if the demand falls for that one thing, your company's going to struggle. Think GoPro, for example.
Yeah.
GoPro was
GPRO.
thing for a while, the stock went crazy, and then they just weren't that popular anymore. And the stock went down tremendously and really never recovered. Another one, think about Peloton. Peloton was all the rage and popularity around the pandemic, and then it wasn't anymore.
That's one I forgot completely about.
Zoom,
I think of the pandemic winners.
yeah, exactly. And so the same applies to the COVID vaccine and the fact that Moderna really just hasn't had any breakthroughs into other use cases for this technology. Not surprised to see a chart that looks like this.
Yeah, and I mean, you think about what has been the
I
most
remember this
successful
one.
for a lot of these pharma companies. It's been GLP-1, first of all, but it's also been diversity. It's not relying so heavily
I'm
on
gonna write down
one
GoPro.
pipeline, as we
It's
know
not a
with
bad
lot of these
idea.
Companies that are trying to bring various drug regimens to market, they can see setbacks, and if you rely solely on that one specific treatment, I mean, these days are volatile for a reason. I think, frankly, because of a lot of companies don't have the capital.
There's
to have that
HSBC.
diversity. From understanding Moderna, they are trying to diversify that pipeline. It's going to be expensive. It's going to take a lot of time and a lot of approvals regarding these various government bodies. So I think it's going to be more of a wait and see story. Now, we did see HSBC, though, upgrade shares to buy from hold, price target of $58, but that was trimmed from $82. And so the recent share price weakness really reflects worries over the company's path back to growth, which they also did say that if Moderna's existing key pipeline products manage to launch successfully and their RSV vaccine recommendation pressure eases, this could be now an area for upside given the right now underperformance of the stock. So basically they're saying they're betting on exactly what we're talking about, but I do think it's going to be more of a long-term story before we get that diversity for growth for this company.
It may never happen.
True.
That's just the cruel reality when it comes to investment. Not every investment's a winner. Just in the time frame, kind of normalize things. I was talking about Warner Brothers Discovery since the lows in August had been up something like 40% in real time from that point. Moderna is down over 50%. So the market's been extremely strong going back to kind of that second week of August. Well, you look at Moderna's been an outperformer, but an outperformer to the downside by a dramatic, basically dramatic level. 52% since, going back to the lows, too. I'm not even going off where it closed. The lows on August 5th. So it's a disappointing area. You can see kind of, why, many maybe would look at this and say, maybe wait and see. But it does kind of seem like a situation where, if you're
Meta hit the 200.
You're really needing something to break through because the sentiment around this, particularly with sort of the changing of the guard on the regulation side, perhaps, and also administration from the executive branch, they're not probably going to get a lot of help from regulators and from the administration. So unless they got a major breakthrough that is seen in a positive light, it's probably going to be a tough uphill battle.
I agree, and I don't think that the upcoming administration is supposed to be necessarily one that will be a friend to some of these healthcare companies, which we've seen in some weakness there. Although I will say Moderna is making a decent move to the upside today, so not to discount that. We are at least seeing a nice session thus far for Moderna shares in need of some love here. But we'll be diving more into our upvoted names that still have earnings yet ahead. We'll be talking Trip.com as well as Palo Alto Networks ahead of their earnings due out on Wednesday. Stick around, Next Gen Investing. We'll be right back.
Do.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage.
What did I do put 2,300 SMA on SPY?
No place better than the Schwab Network.
Well,
Trading at Schwab.
we got 8 minutes for the fat cats to come back.
Giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
Disney had a good breakout last week.
It's Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. So joining me is Rick Ducat himself, our Chart Master, today and most days. So Rick, we'll start off with Trip.com. I mean, actually, I will say I was pleasantly surprised when I first glanced at this chart. It's not one that catches my attention a ton, but we do have earnings out today after the close. It has been a disappointing trade regarding those companies with Chinese exposure, especially as vast as this one is, but actually a pretty decent chart.
Yeah, and even if you're not super familiar with the company, the principles of technical analysis are still very similar. You know, it's still kind of the same things you're looking for. In this case, there's several things that stick out about this chart right away. So the first is that we had these 52-week highs back here, our green line. You can see that was right around 58. Then we had a bit of a slide downward here. We kind of fell below our moving averages, notably our 252-day EMA for a little bit, and then it was resistance for a while. Then we did get a gap up on earnings. You can see here, sideways consolidation, then a big push to the upside, kind of in line with other China-focused names. However, now we are at the point where we formed the classic kind of M-shaped price pattern here. You can see where we formed kind of a double top. We were treated back to our old support level, which was these old highs I mentioned a moment ago. And now we are kind of hanging on here. We've got our shorter term blue trend line. Price has slipped below our yellow 21-day EMA. And now we're kind of just fighting to see if we can get out of this trend line here. Notice that we had very, very heavy volume earlier during
He doesn't know about the snake.
Below average volume since then, possibly because the numbers have been so thrown off by those big values here. But for right now, you know, kind of a, you know, sandwiched in between our moving averages, juxtaposition of two trend lines. You know, it remains to be seen which way will be the breakout here.
Yeah, and I have to say the resiliency of not only these like Chinese internet companies, because we haven't really seen that late, but it's more so like these online travel agencies that seemingly are all doing quite well on the year. It's been amazing. So as far as now momentum of this trend, what are you seeing?
Well, not exactly what you would want to see if you were bullish in this name. So first of all, just looking at the general price action, we have kind of this space here. We've got our two red lines. Notice that we have kind of our best close, even though it was on a red candle here, 68.43, and then our intraday highs, 69.67. Notice that the best we could do was close around the level of our previous best close. We did not make intraday highs or anything, and RSI reflected that. We were struggling a little bit of divergence as we headed into those highs, now notably lower during our next peak, our subsequent peak that failed to take out the first set of highs here. Now we are in the bearish territory. We're below that 50 midline. Our longer term trend lines are still more geared toward the downside here according to the RSI. Momentum looks a little worse than the price action, I would say. More geared toward the bearish side. Price is still holding on to our trend line though, so we'll have to see what happens as this day progresses.
Okay, and as we've mentioned, we of course have earnings still ahead here. We're up about 2.2%, but as far as some trends we're watching, price levels to keep on our radar here, and more of maybe a long-term picture, what are you watching now moving forward?
Yeah, so when we look at this one, we can see that the level I mentioned earlier, kind of that horizontal area here where we had our highs, this is the important part, right around here. So between like 68 to 70 or so around that point. From here, we've got our 21-day EMA roughly lining up with our volume node near around 63. So those are some upside points to watch first. To the downside here, we've got our trend line, our linear regression line, our line of best fit, that's our solid blue line there, and our old floor here, our green line that we've mentioned before. So this is another key area to watch as we move forward here. A break below this level could be a tough situation here. So right around 58, then below that 53, you can see that was another notable high point, and that would be another area to watch. Now to give a quick longer term view, you can see here we've got our 5-year chart. Really shows how explosive the recent growth to the upside has been here. Just mostly we were within this channel for the past few years here. Big growth off of those lows near 14 here, and now just the same level that I mentioned before, 58. You can see how obviously important it is when we zoom out a little bit. That's why we look for these gaps and points where price stops.
Okay, yeah, I think good takeaways here, and a lot to look at when we talk at trip.com, of course. So now when we trade this name, Alex, say looking to lean into the trends we've seen, frankly, from all of its peers. I mean, we're talking Baidu, Baba, JD.com, the list goes on, and expecting some more bearish price activity post-earnings. Walk us through that thinking for an example purpose.
Yeah, I think that's a reasonable fundamental picture that you're laying out, which is, hey, these names have struggled broadly with exposure to China, and for good reason. There's a reason all this stimulus has been announced. It's because the greater China economy has been a little bit more lackluster than many had hoped. From a technical standpoint, I mean, Rick talked about just the general trend. You look at those shorter trend moving averages pointing lower. The fact that the stock's been on a little bit of a downtrend, didn't make a new high. And then, of course, some of those targets he talked about, the former highs, as well as perhaps that EMA from a 63-day as well below the market here. But one thing I would note too is because it's an ADR, has a lot of gaps in the chart, so that's something to think about. But what I looked at was a put calendar, 55 strike, kind of using the market maker move of about $5 on this name to target a downside level of around 55. Also has a couple of those support levels along the way where it could catch a bid, so bear that in mind. But 60-cent debit means that you have $60 in risk. The nice thing about this is it's very customizable. Couple things of note, there is not weekly options available. So the shortest dated calendar spread you could do is selling December monthly, buying January monthly. So while you do have earnings that will likely move this stock, it's not a short dated trade. It's still a traditional calendar spread with over 60 days, or 60 days exactly, I should say, to that January expiration of the long option. So it's bearish. Will likely benefit if there's a downwards move post-earnings, but not to the same extent that a shorter dated trade, if possible, would have if there were weekly options available. But basically just leaning into the macro weakness of China and looking for that to spill over perhaps to trip.com.
Yeah, and looking for maybe some recovery from China, although this name has been at least the outperformer of the group as far as like Chinese companies are concerned. But now Looking at Palo Alto Networks, talk about another name that has outperformed, at least on a 12-month basis, up 60%. And Rick, I'm no chart master, I will not steal your thunder, but gosh, this is a technically beautiful chart. I mean, I know we gapped it down, and ever since we've been seeing consistently higher highs, higher lows. I mean, 200 and 50-day moving average, both trending slightly up to the upside. I mean, all things point to a nice recovery.
Don't sell yourself short, Jenny. I think you make some pretty good observations on the charts here. But you're right, though, because this has been a nice a move to the upside here. We kind of had this period similar to our last chart. Kind of a similar theme here is that we had a notable high at our green line here. And in this case, we topped out again. We had a bit of a rejection, and then we broke above it. So kind of the thinking is the general shape, kind of this cup and handle type shape here. That's the kind of price action that happens. I kind of messed up there. But, you know, the handle shape is right there. So it's kind of like a coffee cup where it kind of gradually bottoms out, it retests the old resistance and then breaks to the upside here. So that's kind of the general shape to look for. And, you know, we had some notable congestion points. It was definitely not like a clear victory here because this would have looked pretty dicey to me. I think this would have been a kind of a precarious situation here.
Got a retest?
We were right at the support, on the verge of breaking through not only our moving average, but also our blue trend line here. So the Bulls did manage to kind of right the ship and break above our blue rising wedge type shape here. Now kind of drifting back within these boundaries, though we did log some highs near 408. No notable volume or anything recently here, but you know, backing off from the highs a little bit here.
Yeah, and I will say that
pull back,
pulled back a bit from the highs. I mean, now I guess like over 5%. It has still felt like a
I agree with him.
Substantial recovery in this entire space, which has been encouraging as well. But as far as then trends with momentum, what are you seeing with RSI?
RSI behaving mostly like you would want it to if you were bullish in this name here, because you can see not only do we have this gradual trend upward, our green solid line there, we are above the 50 midline after once again a bit of a battle trying to break above that threshold that separates bullish and bearish momentum, in this case crossing over to the bullish side. We had a brief trip into the overbought area here, which again, that's what you want to see here, because RSI made a new high above its previous high, so did price in terms of closing prices. So mostly kind of matching up with what you would want to see. The break out of the overbought area.
Trips after hours.
Sign here, but you know, we're hanging on fairly close to this supportive level, and we're still above our green line 380. Those would be things to look out for: a breach below those key levels and a break in our green RSI trend line, and a break below the 50 midline. Those would kind of be the things to watch out for.
Okay, yeah, and I mean, I know we're pulling back modestly today. We do still have now about 2.5 trading sessions prior to getting Palo Alto Networks earnings, so we also have some time there. So now, as far as levels we're watching, I mean, I think that the Bulls are hoping for some new all-time highs, but give us your breakdown on some key prices to watch into earnings.
Sure. So when we kind of look at what's been going on recently with this one, as you said, we're close to the highs here. So maybe it makes more sense to start with the upside. The area we're at right now is important, though. I've said that a few times here. And when we reveal our standard deviation channel study, you can see we've got blue linear regression line. +1 up is this yellow line here, our +1 channel. This is a resistance point. We've had some trouble getting above it. We did have this breakout, but now we've kind of faltered. We're below it once again here. So this area near like 390 is important, and just above that, this red line, the series of lows that we had after our push to the upside around 394. Finally, intraday highs 408, that's the mark to beat. If we were to move beyond that, +2 standard deviation channel comes in near 423. So those are some areas to watch to the upside. To the downside, we've got our green line that I mentioned before a few times. Lines up pretty close to our 21-day EMA, around 379, 380 or so. Then down here, once again, we've got this kind of cluster of moving averages and our linear regression line and our low point and our volume node kind of all together right around 360. So that's another key area to watch out for. Finally, our long-term chart, once again here, just looks pretty darn good. Not much else to say about it, just kind of trending upward nicely. Kind of an ascending triangle type shape here, not exactly meeting.
We're at the 200.
Describing the price action here, but RSI trending upward here for the most part. You know, looking to make
let's get ready.
Down those highs. Really, that's what the Bulls are looking for, obviously.
Yeah, and one of those rare names that actually looks more strong when you zoom out.
Okay,
so
I see something
that
here.
Long-term breakdown as well, and appreciate the entire breakdown, Rick Ducat, our chart master. And so now.
Oh God, I can't stand you sometimes, honey. You're just a little bit too loud. We've got a head and shoulders. That was probably it right there. Dang it. SPX. If it goes below this trend line, we could end up all the way back down here again. Or at least to the triple bottom. Oh, did I hear him? No, I didn't hear him. I didn't have my headphone on. Inverse head and shoulders. Super MICR. Oh, that's SMCI. One hell of a drop on that baby. SMCI breaks the 200, will go higher. Supermicron stock rises as investors await filing to avoid delisting. Huh. The challenges have ranged from deteriorating profit margins to a short seller report and its accounting firm resigning. Oh gosh. Guilty. No, I didn't hear him. See the channel status? Set a channel status. I wonder what that means. Today is the deadline for Supermicro to submit a plan to remain on the NASDAQ.
Hard to unravel. That's basically saying like our 10K is not good. You know, essentially that would be my takeaway from it. So the fact that they kind of did this should be baseline, but I think it takes some of those like really dramatic fears off the table for now. One thing we've been doing throughout the show is kind of looking back to the August lows, the different performance. You know, a name like Warner Brothers Discovery was up, 40% from that mark. The overall S&P 500 is up about 50% from that mark. SMCI finds itself in the camp of a name like Moderna. It's down over 50% since August. Now, we know the reasons why, but if you're an investor, I mean, this has been a really strong market since that first week in August, and your SMCI has not only been a drag, it's been, a huge drag on portfolio performance. You have to wonder how many have just kind of, said, hey, I'm either out of this thing or, I'm going to wait and see, but I'm not adding down here.
Yeah, and a few things on that part. I mean, if you take a look at demand for these servers, it's pretty sky high considering some of the numbers that they've already given. Obviously, they're facing a bunch of issues, but they have customers like NVIDIA, AMD, Intel, and I was talking about it with one of the guys here at the New York Stock Exchange, basically what happens if they do get delisted, but he did say that the longer this goes on, the worse it is, not just for share price, but for customers as well, because it could erode confidence for customers too, and we know that demand has been very strong. In terms of, I also do think it's important to note, one thing I didn't mention is this isn't the first time that Supermicro has faced delisting. It actually was delisted back in 2018 after an SEC investigation into revenue recognition practices. So it's, not a first for Supermicro. We'll see if they avoid it. I think that given all of those reasons, despite increased demand for its servers, we're seeing the majority of analysts on the sidelines for this name. More than 60% have a hold rating. The median price target does imply some upside. It's $35 a share. It's currently trading at $22 a share, but it's a long way off of the highs from earlier this year, almost $120 a share. In terms of what actually would happen, I was just chatting with people here. They talked about it moving to basically, it would still trade, it would just move to the so-called pink sheet, so it would be over the counter. But they did say that could create forced selling as well, because some funds require the companies to trade on an exchange. So we could see additional selling if that's the case. And then obviously talked about the erosion in customer demand. So we have to see how this plays out. But right now, things look positive. But, you know, as we've learned with Supermicro, shares can go down just as fast as they go up. So let's keep an eye on this one.
How do they look positive?
I would say is far from resolved.
Come on.
As far as like the delisting and
There's nothing positive about this stock, girl.
Felt by the markets, but we'll have to, I'm sure, be watching this one very closely as we will. Appreciate it though, Caroline Woods, senior markets correspondent for the network. And now we trade this name, Alex. Obviously up 20% today. Gosh, it's hardly even making a dent though in like the recent downtrend we've seen. At least a sign of optimism though for at least today. I was how I look at it maybe.
Yeah, it's got almost 20% short interest on the most recent numbers that I've seen, so there's certainly some doubters when it comes to this company as it goes right now, but that can be an accelerant to the upside if some of these issues are resolved. Now, I wouldn't fault anyone for saying, you know, there's just risk here that I'm not comfortable with, and perhaps this is just a name that, you know, some just will not look at for that reason. But for those who are interested and perhaps see the FOMO being a bounce back to the upside, obviously, with this NVIDIA story, there could be more demand for products that Supermicro and its peers work on. Whatever the reason may be, even if it's just a resolution to this uncertainty, you could feasibly find some sort of upside resolution being possible. I think risk definition is important. So be that if you're bearish this stock or bullish this stock, risk definition I think is really important just because there's just tremendous volatility. If you were to look out, even going out to January of 2027, there's over 100% volatility. That's basically saying the market sees realistic possibility that this stock could double, or it could be worth nothing over a lot of different time frames. Shorter term, it's more like 200%, 300% this week. But what I looked at was sort of your traditional call diagonal spread. Sometimes this is referred to as the poor man's covered call, or using options to create somewhat of a covered call like strategy. But what you do with that strategy is buy an in the money call in a longer dated option and then sell an out of the money call in a shorter dated option to create similar risk parameters to a covered call to the upside. But of course, it'll perform a little bit different to the downside as it's going to have, of course, definition.
No, I didn't hear you. Your heads, you weren't on.
Spent. Now, of course, you're not a shareholder here, so there's expiration dates and other things. You wouldn't have, stock.
I can hear you now.
Or dividend rights, like stock ownership.
Oh, I'm just sitting here trying to figure out what this NVIDIA news is on Supermicro, SMCI. They sound like they can give it a enhancing portfolio. So yeah, I'm just trying to figure out what that means.
Nice. No, I get you. I missed your call this morning about the one that went all the way up to like 20.
SPX. Yep.
Yeah, that was awesome.
Bingo.
Dude, that was so good. I was walking the dogs and I heard you making money. And I was like, oh, I bet this thing's gonna rip. And then he sold at 5, and I was like, who was it that said it might go up to 20? I think it might have been Randy.
Randy.
Like, oh, it might go up to 20. And I was like, you're kidding.
That was a little after I got out of it, and I got back in it, and then I got out of it and watched it run up.
Yeah, crazy.
But that would have been a good one to hold. I'd have had $4,000 on that one.
You always tell me to hold on to a runner.
I know it. I just get that beach trade idea. I've been practicing on where I can get in and out of here within an hour and be done with everything.
Yeah.
That's what I want to do when I retire. I don't want to sit around here all day long.
Yeah, you're here for like the whole day, literally.
No, for the last 20 years.
Yeah. How are things with you, man? Everything's good?
Yeah. I got all my work done yesterday and then slept 6 hours straight. I can't tell you the last time I've actually slept that long. I woke up and it was 1:30 and I went, what? Usually I'm up 2 or 3 times a night. But here lately, I've been sleeping a lot longer, and I really appreciate that.
That's good. That means you're getting some deep rest.
Yeah.
Well, it's just nice.
Huh?
Pretty bad.
What's that?
5 is nice.
On what?
On the 1 minute, if you look at the
On
1
what?
minute,
What? Spy or?
Yeah, SPY, SPY.
We got a megaphone pattern. Do you see it? Put it on the 1 minute. Clean it up, and you'll spot a megaphone pattern.
Yes, I do.
She'll be able to reverse here real shortly.
You gonna jump in on that one?
12:45. I don't know. Might wait a little bit.
Then the fat cats be coming back, or are they already back?
They're back. But now it's kind of like consolidated mode. Yeah, I'll wait for one more candle.
Yeah, the low is 58, 587.2 something. It was down there.
Yep. Oh. That we're at where we pre-market high. I mean this morning right at open, pre-market open is where we are right now.
Isn't there a rule that if it passes the pre-market open, it usually runs up after that?
I mean goes down, goes below it. It'll drop below it if it doesn't hold it.
Yeah.
It's like a major support level, but not actually because you know we dipped on down to this head and shoulders from Friday, inverse head and shoulders this morning. So I'm going to see if it holds that bottom. There we go. Okay, now we're going to start talking here.
Yeah, it just dropped. Look at that.
Yep. There's your megaphone.
I thought it was a big cup and handle there. You see where the megaphone starts? I thought they would, come back up and touch the top again.
Yep. Let's probably see if it starts to reverse here. We get one more candle, maybe. Here we go.
Here we go. What are you looking at?
The 19th, the 589.
It drops one more time. Maybe touch the bottom of that megaphone.
I don't know. We got a hammer right here.
Or you think it's gonna stair step its way down?
Don't know. It's got real slow volume right now, so people look like they're just kind of waiting for something. No volume at all. So if it starts to pick up the volume, I might.
It looks like the volume picked up. I'm reading like 100,000, 60,000.
I mean, on the time and tape, this thing hasn't moved a bit.
True.
The last 20 seconds it didn't move. That could be Ameritrade's problem too, though. Yeah, it definitely paused. It was Ameritrade. Dang it. That caused me to miss a trade. I didn't take it because it wasn't moving, and it was 88 to 94. This thing's acting up.
At 95 right now, going up.
6, yep. Tesla potential double bottom. Is that what you said?
No, I haven't looked at Tesla. I think it was God, I think it was John that was looking at the Tesla puts.
Yep. He did a good job. We got a double bottom. Triple bottom right now.
I was looking at Apple. It hit like 230, and you know, it looked like a high to me. So, you know, just out of nowhere, just ran up to like 229.8 or something like that, and it looked like a good trade.
Did you watch Fight the other night?
Oh, that super rigged fight with Mike Tyson?
Yeah.
That was the most rigged fight I've ever seen in my life.
He was not healthy at all. He should have not walked in that ring.
No, he was paid out.
Yep.
I think that Mike Tyson, if he was actually supposed to fight, he would have whooped his ass.
No, I don't think so.
You don't think so?
No.
I think he got paid out.
He did not look good at all.
No, you're absolutely right. He looked like...
He just, I mean, healthy-wise. His face...
Oh, health-wise, yeah, no, he looked like almost sick.
He couldn't hardly walk.
Yeah.
He had done something. There's something wrong there. That wasn't the Tyson I know.
You could tell he was like testosteroned out, like he was taking like you can tell like just like in his like physique and stuff, you can tell that he's like taking he's supplementing his hormones or whatever, however you say it.
Well, he had a real bad alcoholic problem. Plus he had smoked all that weed and then he ate mushrooms and did drugs. So I mean, he was not being 50, 60, being that old.
All I know,
58.
Is that he was really in there for the fight. In the last 10 seconds of the fight, Jake Paul like bowed down in front of him.
Yep.
If I was Mike Tyson, I would have thrown an uppercut of the fight. You know what I mean?
I think Jake was very respectful to him because I don't think Tyson just didn't do it. He just wasn't there. He had nothing. He threw 98 punches. He didn't throw none. I mean, it was, he couldn't go in there after him.
Yeah, it was honestly really bad.
It would have been murder.
You know, I don't know. I feel like Jake Paul. I know like he's I think he's like a better than average boxer. I think like an average boxer, and he just has like a lot of hype around him, and he's able to sell out stadiums and stuff. And You know, hopefully we get to see him fight somebody that's like actually good.
Yep. I don't want to see him fight no more. I'm done with him.
Yeah,
Unless you get someone in there that's in shape and his age, and I'll be ready to take. I'll be ready. Not retired or.
But there are like a few. If you look at, it's like all over Twitter. Like there are like a few moments there in the fight where, you know, Mike Tyson was like, dodged a jab by Jake or whatever, and Mike Tyson like stepped in to like throw a hook, and you could tell like he was holding back, you know, throwing the hook, you know,
Oh,
like
yeah.
instead of, you know, stepping up and dodging and then throwing the jab or
Yep.
the hook,
Oh, yeah. Yep.
you know, you could tell he just stepped in and he held his hands down.
Yep.
You know, like I don't know.
Yeah. I was wrong. Man, I'm really liking where this Tesla is right now.
Fire's coming back up. We just missed it.
I just can't believe this computer's acting, Ameritrade's acting real slow today. Almost down. Oh, that's what I did not want to do. I can't trade with this platform running like this. I'm going to shut it down and try to reboot it.
Okay, we'll be here. I'll hold down the fort.
Yep. Nice bounce.
Yeah, you see it on SPY?
Yep. I waited for that bottom of that triangle and I didn't take the trade. That was my fault. Just this platform.
We were both asleep there.
Yeah, we're talking. Plus, my platform's not. See how it's messing up? And it's taking forever to shut down.
Well, honestly, I was waiting for the bottom of the for it to touch the bottom of that megaphone.
God darn it. I'm gonna go make me a cup of coffee by the time this thing's shut down.
Ramsey, so you telling me you knocked out a crackhead's teeth out?
There we go.
Wow, SPY's on a run right now. Randy, why do you wish you would have killed him? You know what? I wish I'd never asked that question.
Yep. But I opened up a can of whoop ass on him too.
Are you kidding me? My gosh. Sorry to hear that, Randy.
Much better. Oh, darn, I missed that trade. That'd been the scalp right there, right to the 200.
Yeah, that was the move right there.
Yep.
I was waiting for it to touch the bottom of that megaphone, but it went, a bit earlier than I thought.
Well, you got the snake. I seen the hammer, and then we got the yakking, and on that pullback, it created an inverse head and shoulders. Then I probably would have took that trade right there. For sure. Because right after it hit that pullback on that shoulder line, boom, to the 200. Today's the 18th. What did that thing run up to? I'm going to see how much that thing is now. 116. So it went from 88 to 116. Or even cheaper, 62 cents it got down to. But that was this morning.
No, I was this morning. I think
Yep.
the lowest went down to right now is like 80 something, right?
Yep, 88, 86.
88.
That'd been a good trade. 30 cents. 40 cents.
It's $1.10.
$1.19. So how'd you find out about me?
I think that there was something I was watching on, I was reading on Twitter, and you had replied to it. I don't know if it was a Zach Morris tweet or I don't know. It was something about Solana,
Yeah.
and I was like, and I clicked on your thing, and I saw you had a Discord, and I joined it, and then I just kind of lurked for like a week, and I was like, oh, this guy's pretty funny. So
You said,
I don't think there wasn't like a lot of science behind it.
yeah. Zach gave me a watch.
We would have made 37.5% on that if we would have
Bought it.
if we would have came out at 1.1 or something. 37% in how much time? What was that, like 2-3 minutes?
6, 9, 11.
Yeah, crazy.
Catching the squeeze. That's what I'm good at. I mean, that's a perfect setup right there. Just wait. Even when it breaks out, still wait. Wait for that pullback, and then boom. There's your snake.
The cage match is going to be set up between Randy and Jim.
All right.
They're already setting up a cage match. You heard, Jim?
Between me and Randy? I'm scared. Firm. TripAdvisor. FU to U's got earnings Tuesday morning. FU to U.
I'm looking at it.
And Lowe's in the morning. Walmart in the morning. TCOM after hours. That's trip.com. That should be one that's...
Did we hit the top of that megaphone on the spy? Or
Do we hit it? We do if we will if we squeeze between the 200 EMA and SMA right now. If we could stay in there and break the 200, we will hit the top of the megaphone. If not, we'll pull back and hit the VWAP and then retrace back up.
okay.
You see, right now we're at the 200 and it's kind of having a hard time breaking it, but we're squeezing in between the EMA and the SMA. So that EMA's got to hold or we hit the VWAP for sure and then bounce back up.
Yeah, hitting those cells there.
That'd be the right shoulder the second time. Remember me talk about the right shoulder? They like to come back and retest the right shoulder a second time. And in fact, it gets a higher low, that'll be bullish.
I'm gonna start looking at some calls then.
Remove. Yeah, I was thinking about Bruce Springsteen this morning. He sponsored Harris, and I remember when I was young, I used to love that guy singing "Born in the USA," song "Born in the USA," and then he sponsors illegal immigrants crossing the border.
Talk about hypocrisy.
Yeah. I mean, Bruce,
About November 19th, 590.
on the SPY. A little bit too far out of the money.
For tomorrow?
Oh, yeah. Well, no, not really. I'd rather do that 589s. But I don't know. I'm not an expert.
I'd be interested if they come back down to like the 9 range.
Yep. We're waiting patiently. It is now 2:13, 47 minutes before power hour.
I'd be impressed if this thing decides to do anything crazy.
Like pull back and hit that trend line and then boom,
Yeah.
bounce back up a bit from the VWAP.
Yeah, I don't think that. You think this is moving around a lot today?
Moving around a lot? The SPY?
Yeah.
No.
Yeah, but who? I think it was Randy that got I think it's called an iron condor.
Oh, he did. Show off. Randy's a show off.
I'm no, sorry, not an iron condor. What is it when you buy
String.
out of the money puts and calls? You know what I mean?
Strangle?
Yeah, strangle. Sorry.
Strangle or straddle? Out of the money. Okay, you got in the money.
No, it was straddles. I think it was a straddle.
Yeah. Yep. They're both in the money. The straddle's right in the money. You can make it out of the money too, I guess. Move it around. $3.14 right now. Friday or Thursday, I got stuck in a trade, in a call, and I was down, and I turned around and I bought a put, and I couldn't believe how much it went up by buying that one put and still being in the call.
Really?
Yeah, I mean, I don't know what happened there, but it shot up like $300 or $400, and I said, I'm out. Right after I bought the put, I was in the call too at the same time. Randy says the SPX seems shaky. The bottom of the megaphone.
Oh.
Spy knife too, right? There it is. Right shoulder. Which one?
They're at 85 right now.
Let me see here. Where in hell? Yep. 10 of them. To get 90. See how it pulled right back to the right shoulder? I caught so many trades off that right shoulder as it came back the second time.
Sorry, I have to push the talk. Just missed him at 85. Ah.
I love chart patterns. Snake breakout, pull back, boom, snake breakout.
Did you end up getting any?
No, not yet. I'm just not, something telling me not to be in too big of a hurry.
I'm seeing like 4,000 orders for asks and bids on this one.
Yep. Tesla's pulled back. Oh, I was gonna Apple. I'm just not feeling it. Now I'm swinging Baba. And I'm still even. I was up this morning. I was up a buck. I mean, it was up $1. I could have sold it for 170, but now I'm back to even. See if we get another pullback here.
I just saw it go down to 83 right now.
Yep. Boom, right there. Can't wait to watch this video when I'm done. This couple I know is on this big old ship all by themselves.
On a ship? You fished, Jim?
Oh, I fished a lot when I was younger.
Like bass fishing or well?
Well, not really bass fishing. I like to eat fish, so crappie and walleye and fish that I could eat. I don't like eating bass.
Used to go spear fishing a lot down in Miami.
Catch a heck out of white bass. And I lived in Oregon. We caught salmon and hammerheads and stuff like that up there. I caught a wolfeel in Newport Beach. And a 12-pound bass. And a 35-pound catfish.
Randy says he doesn't think it was going to hold.
I don't think it is either. It's just too damn slow.
Yeah, you would see a lot more movement.
See, Trump's giving a lot of uncertainty to what's been given to Wall Street in the past 4 years, which is more or less a free ride, because they printed so much money. And we're going to try to cut that spending out. So Wall Street's going to have to try to figure out how to make money on its own instead of using government tax money. And making a killing off everybody. And we're suffering. The poor are suffering for it. Because they got to pay the taxes.
Yeah, it's ridiculous.
Mm-hmm.
I hope they slash all departments that we don't need. I saw a study the other day that the United States funded, and it was, I think it was something about the sexual promiscuity of squirrels or some shit like that.
Oh, yeah.
If you give them cocaine, and it was like like a $1 million study or something like that.
Yep.
And it's like, are you serious?
It's like Fauci. Yeah, Fauci giving Russians a bunch of money to cut the brains of cats to see how they act.
You know a movie I saw this weekend? V for Vendetta, because we were talking about it in the chat, and I was like, oh my god, I haven't seen that movie in years. If you watch that movie today, you'll see literally it's a play-by-play of what the Democrats did to us 3 years ago.
Yep.
They made a virus. Anthony Fauci made the virus. I think that they messed up because I think that the truth is that they accidentally released the virus. I think
Yep.
that they were planning on releasing that virus to us, like further into the future when they had better distribution channels.
Yep.
But they had to expedite the process. That's why they literally dumped everybody in Wuhan and they flew them all around the world because they were like, "Fuck, we already messed up. We might as well,
Oh yeah.
get the ball going." I had a friend of mine. He's a pilot and he flies cargo. He's, everywhere throughout the world, and he flies 747s, the big cargo planes.
Oh my.
And he used to fly a lot to China and California. He would do that trip, back and forth.
Yeah.
And he told me one day he flew into Wuhan just before COVID was the thing, and he told me that the people who were unloading the plane were wearing, like full biohazard suits.
Yep.
And he didn't think much of it. He was like, that's kind of weird. You know what I mean? Never seen that before. And then like 3 months go by and it's like, dude, they're either killing everybody in Wuhan, throwing them out of windows, or they're shipping them throughout the whole world.
Oh yeah.
I don't mean to be the conspiracy theorist here, but
Oh, it's pretty obvious. Something's up.
no. The virus totally was not being developed by accident.
No.
I think that them Magnificent said something. I think that they just had to speed up the timetables when, an intern took out the virus from the lab, or I don't know. But I saw V for Vendetta and I was like, oh my god, this is literally what happened.
Okay, Randy. SPX. This is it. Double bottom. Megaphone. I mean, it looks a lot better than Spy does.
Are you looking at the today expiration one?
Yeah. 59.
I didn't mean to go on a rant.
That's right. 58.90s. As long as you don't talk about my mama. Go, baby. November 18th. 58.90. They're at 390 right now.
They were at 270. Did you get them then?
Mm-hmm. 290. 290 and 320. I'm gonna stop out here.
Got deadly quiet in here.
Yeah, I just added another one. We got 3 at 282. $2.83. Snake. Yeah, Zach Morris, he gave me a watch. I thought it was real nice of him.
Jim, you should start a GoFundMe and I'll add to your wash fund.
No add to my wash fund.
I'll make him GoFundMe for a brand new watch.
I might do that next year. I'll probably make some changes next year. I'm not sure yet.
I bought one more.
Huh? Need to sing bounce.
Yeah, no, I just bought one more. I bought one more for one more contract.
Okay.
Down.
This ain't working out too well.
I'm not liking it too much.
One, two, three, debt. If you can count to 3, you can trade with me. Uh-oh. Give me my money. I want it right now. If you don't give me my money, I cut you off.
What's your average at right now?
280, 290. I should have probably got about 2 or 3 little bit. I don't have much in this. $900.
I have I'm at 287. Getting them at 2.5 would have been the move.
Yeah. It's important that we hold this though, because if it's not, it's a free fall. We got to get out. Break it, and we want to break the 21 and run it up to the 63. Get it up in here. $3. Now we break the 21. We broke the 9. Now the 9 crosses the 21. So as we start to go up, we have the opportunity to pull back down again after we break out of the snake. So if you're a little nervous, always get out when you're a little green. If you don't feel like the trade's going to work for you, I always say that. If you got that gut feeling it ain't working, where am I here? Right now I'm up 30.
What's Randy saying?
Randy said meow. He's still getting just no upward moment. He's feeling putty.
Here it comes.
Here comes what? Here comes the sun. We could end up,
Moving now.
yeah. If we break the 63, which we can bring it to 58.90. YouTube,
I want to be like Randy when I grow up. He made like $7,000 in like 5 minutes. I was like, you're kidding.
yay.
I think it was last week.
Yep. If I'd have been smart, I could have done that today. Whatever happened right there, it just dropped real fast. So I'm not liking how this is appreciating. I was at 340, now we're back to 280, just like that. That's not good.
Yeah.
I should have sold them right there. I've been 150. There we go. Break.
High now, right?
Yeah, now we're going. I want the 63. I can get out of here and be a happy camper. 350. Ooh, 70. Randy, we staying in or we getting out? $4, I'm out. I'm out. Did you hear me? Out. Alex?
I got out at 4 with you.
Oh, 45, just bet some beach up in that dude's eyes and shoot him with my old
45.
That dude's eyes and shoot him with my old 45. Just bet some beach up in that dude's eyes and shoot him with my old 45. Just bet some beach up in that dude's eyes and shoot him with my old
45. Yeah. Well, come on, man. Is it it? It's the song. And my old 45. I'm up with my 45.
Coming back down, I've got another one.
I had seen Hank, and I walked up to his bus, and I said, bus driver, would you give Hank this joint?
Jim, 4.2.
Yep, 420. Did you like that trade?
I love that trade.
You see, we waited for it to pull back, right? We didn't really rush to get into that trade.
Nope.
We waited for the triple bottom. We waited for an indicator. It's $5 now. I mean, shit.
Well, shit.
$600, 300 out the table.
You think you'll get a put off the? You think we sell them to close?
We probably run up and hit the 200.
Hit 200 and then
Pull back.
And sell, right? Because we've already tested that 200.
Yeah, we could.
Today.
Yep. Right now, the momentum's on our side.
It's at 4.6 right now.
470. Ah! That'd have been a grand.
That's one or no?
He's out as well.
Always got to keep a runner just in case, you know what I mean? No, I'm good.
Well, that's true in a lot of ways.
Usually, I think it's better that you sell them in pairs, right? Like, if you have like 4, you sell 2 and 2, or like you sell like 50% and then you sell like the other 50%.
Yep. Oh, I got 2 songs out here. Boy, you're right. Right. Wonder which one I want to play.
Those 58.90 puts are at $2.80. They were at $6 like 5 minutes ago.
That's strange. Huh. Okay, it's an internet issue. I can't believe Joe Biden is getting us ready to put us in World War III.
Did you see that shit? He
I
sent
can't-
long-range missiles to Ukraine. So that guy's an idiot.
I can't believe he fucking did it. I mean, he's
That guy's an actual idiot.
we're about to hit the 200. Look at that. No, $5.60 now, buddy. Randy.
560.
In the money.
Magnificent sold too.
I'm gonna leave. Probably everybody out in this room will leave here because Jim always sells too soon. We could make a lot more money if we were in another room.
If we hit that 200, I'm gonna get some puts here. If I see it reject.
Yeah, profit's always a good thing. It's true. We could be driving Cadillacs by now, though. Last couple of years. I mean, I've had a real good time, but jeez. There was days I could have made 120,000, 60,000, 80,000.
I remember I was here, and I remember I saw one of your calls hit, like in total, I think it was like a profit of like 50,000 or something like that in a day.
Yep.
I was here for that one.
Yep.
But I think Randy's always saying like, "Oh, you got to think about the tax implications."
He's always saying that to me.
So you can't get too sad.
And I'm always, I'm always fighting the IRS, so. They got to where they say I owe for a quarter in 2022, and I've been fighting them about it.
Are you kidding? I paid the IRS. I think it was like $3,000 $3,000 the other day. I had to pay him for, obviously taxes owed.
Yep.
They took it out of my bank account, and then like a week later, I got another letter in the mail saying that they didn't like receive the money and that it was like apparently refunded. I don't know, but they're a mess. If you look up the IRS,
You were refunded?
no, I wasn't refunded. No, I have to pay. Are you kidding me?
Mm.
Well, they're saying that the IRS, if you look into it, their employees owe, I don't even know how many millions of dollars in back taxes. You can look it up. There's like a statistic on it where if you're an IRS employee, I think it's like 70% of them owe taxes. It's insane.
No shit.
And the IRS.
They audit each other though. I mean, the way I understand it. Oh well.
No, what I'm trying to say is that the agents, they owe taxes, right? They don't go after themselves, but they go after everybody else. You know what I mean?
Yeah.
I think I think it was my mom. She had to pay like $3,000 in fees for like late filings or some bullshit. Like she missed it by a day or something like that.
Yeah. They're real strict now. That this year here. I mean, I've dealt with them for 30 years, and I've been late, and they've never really punished me. But now, you will be punished if you're one day late. Especially if you got an R on your name. Weaponized.
Well, how many rounds of ammo did they buy this year? I forgot how much it was. I think it was like in the thousands or something like that.
Quite a bit.
Yeah, like what were they gonna do? They're gonna start shooting grandpas and grandmas? It's ridiculous.
Yep. Well, that's a beautiful trade. That was a beautiful call. You can't complain about that. That was really, really nice. And there was no pullback. It was within down here was the pullback, the triple bottom. And it's almost to the 200. Golly. It's hard, man. I mean, you don't know if that sucker's going to run up or not.
Why? What is it at right now?
$5.90, $6. Yeah, it's left 600 on the table.
Tell me those things?
Huh?
You can't tell me those things.
I can't tell you that. We're about to hit the 200 of this.
No, I meant that as a joke. Yeah, of course.
Oh, I know. I picked up on your humor already.
Oh shit, that's $7 right now.
Fuck.
$7.20. Is that the one that we were trading?
Yeah. Oh well.
I'm gonna see if it rejects here at the 200. You think it's going through?
I just think it was a beautiful call. I'm just smiling that I didn't collect all the money, but I mean that was just beautiful.
It was beautiful.
Just waiting for it. I mean, the patience of waiting for that thing to pull back made it outstandingly beautiful.
Right, it's like getting that girl's phone number after you've been hitting on her for a few days.
Yeah. I've been hitting on Vegas for almost 7 years and I ain't got her number yet. Yeah, I do.
I might get one put at 180. 58.90.
Damn, it's beautiful.
Just to see if it sinks right now. 1.75 maybe. 1.7. Let's see if it stops here.
That's just a nice trade.
That was beautiful.
I'm going to grade myself on that, magnificent. Because I don't think you'd give me this grade.
You got to tell Magnificent to give you a grade on the move and then the execution.
No, the execution, he'd give me a C. $760, for God's sakes.
Damn, Jimmy, how much you leave there?
Oh, 1,100. 1,200. 1,100. 11,1050.
What do you mean, Rand? You about gave up on that? What is that now?
Oh, there's people out there trying to be me. And this girl that I know messaged me just now. The guy was trying to pick her up. He says, I know Jim personally. Please stop scamming people.
Oh, are you kidding me? You know how many people I get? You know how many requests I get to, like, to be my friend, and they're like all fake Washboardjim accounts?
No, I mean...
Are you kidding me? I got like at least 10 of them.
Don't accept. Yeah, I want to know about them. That's why I don't ask for friends.
But not for the entry and execution. No, the entry was good. I think the entry was excellent.
The entry was excellent, magnificent.
You might have been off a few cents, but I thought it was really good.
He meant exit. You have to correct him every once in a while. For that, you get a B+.
I'm gonna tell you right now how many suggestions. No, I don't have any pending requests anymore. I'm liking this foot. I think it might come down after that.
I think I'm going to sit here and try to figure out. I think I take a trade about. I think I could get away with taking a trade about every hour, hour and a half every day. Way up my. This one here was.
There's no way to retire now.
That's not.
Taking a trade every hour?
Yeah.
That means you have to sit in front of the computer all day.
Yeah, that's true. But if I averaged it out, by the time I get in a trade and I get out, and then I wait for the pullback, it's about a half hour to 40 minutes. 3, 6, 9, 12, let me see. 1, 2, 3.
Let's see if it touches it again.
7, 8, 9, 10. About 33 minutes. One, okay, let's see right here. 1, 2, 3, 4, 5, 6, 7, 8, 9. About 30 minutes. 7, 8, 9, 10, about 30 minutes. 2, 3, 4, 5, 6, 7, 8, 9, 10. Interesting.
Holiday shopping has never been easier or more rewarding. Earn Beauty Insider points and Kohl's rewards when you shop Sephora at Kohl's.
Woo! Power Hour.
point of the post-election pop, slow down in some of the momentum. But generally, what we got last week was a further pinch in the yield curve as 2-year yields rose, 10-year moving a little bit more sluggish now. I think an important message there, though, is that we do have that kind of knock-on effect in the bond market, where if the Fed's not going to cut in December after last week's inflation data, actually the ascent of yields might slow somewhat if the Fed's not going to pour gas onto it. And then lastly, for this week, NVIDIA sitting right at $140. You can pretty much get a well-defined level around 139, 140. It's basically back at that old range that we were at, moving sideways, then we broke down. And then when we got back through that, lifted off, now we're coming right back down to basically 140. It's an area where there's been a lot of volume trading in the last month, and kind of the midpoint of this range, old support, possibly support again. We'll see if NVIDIA can hold it. Obviously a huge story this week. I got Jenny Horn and Kevin Hanks here with me in the studio to get things started here.
Yeah, it is a big story.
Interestingly, our big winner doing a lot better than NVIDIA today, Jenny.
I mean, just surging towards its best day in 9 months, as investors do, I think, take the bet the stock will be able to avoid being delisted from the NASDAQ. So I think that was the major story. Plus, getting a further boost today on the launch of its AI data center offering called Supercluster, which does feature NVIDIA's new Blackwell semiconductor platform. But the amount of now accounting issues, regulatory concerns, the auditor resigning news, all of this has, I think, given a different tone to what was once seen as the AI winner, frankly. It was at one point up over 318% on the year. At its record close, I mean, we had seen its market cap swell to $66 billion. Now it's around $13 billion. It is still the 433rd largest company in the S&P 500. So it's not like it's the smallest by any means. But yeah, I mean, we've talked about, like, was this an accounting malpractice, or are we seeing the beginning of an Enron situation? I think today, just maybe seeing a sigh of relief. But again, we don't actually know anything regarding it. Could still be delisted. It could also still be delisted from the S&P 500, which you just joined about, I mean, several months ago. So that concern still remains. I think today just maybe seeing like basically a breath from all the selling we've been seeing.
Yeah, kind of a bold rally in a way, up 24% kind of, you know, on the expectations that they're going to file this, kind of coming down to the wire, like, what's the celebration here? I don't really, you know, it's like...
Maybe the fact that they have this news with NVIDIA.
Come on, Anthony.
Like the fact that they're still seeing development as far as like their own offerings and their graphics processing unit systems, liquid cooling racks.
Right.
So,
which, by the way...
Hey, Jenny, you feel like bashing Tesla?
Some issues on the server racks, which, by the way, Supermicro does make the server racks, and there's, not that I know those are the ones that were having trouble overheating, but there's a kind of mystery around, like, who's to blame for that, or if anybody's to blame. So I guess if they're going to introduce something, liquid cooling sounds like a good way to reduce the heat.
or maybe the liquid cooling isn't cooling enough. Yeah, I'm not
Right, because they actually already are using liquid cooling, a lot of them, I think.
And I'm not really sure you're right exactly who is to blame. I feel like we need more clarity on the NVIDIA story. They should mention that on their or something about that, because again, this is the first quality control issue we've heard from Blackwell, which is concerning when it's the most expensive.
Well, it did kind of rebound.
Yeah, NVIDIA though, you know, within 1% today, Kev. So no one's freaking out.
Flush wound.
Totally.
NVIDIA today on news that, you know, uncertainty is key. But we're 2 days
It's
away
key.
from earnings where we talked about this a bit on Fast Market today. NVIDIA last hit 140. The first time it hit 140 was June.
Yeah, that was the high.
Yeah.
So that's kind of the old level now that you'd think is some support.
Or this has been a big a 5-month consolidation, which this stock has been known to do.
Yes, it has.
An earnings event that you know they're going to do well. It's a matter of how well, right? Is it $32.5 billion plus 2?
Yep.
Is that the whisper? That's the general knowledge now. But you know, needless to say, this is not exactly the beginning of the week that NVIDIA traders and investors thought it would be.
No.
They thought it'd be a big week-long celebration, like a Super Bowl party, like the week leading up into NVIDIA. So far, it hasn't exactly gone that way.
Maybe the last couple of quarters that was more appropriate, right? I mean, the thing is, what's important to remember is that even though NVIDIA's right at the highs, Taiwan Semi's done well, stock markets are still so close to the highs, that the chip trade has been consolidating at best for months, since the summer, since that level basically.
Yeah, but it's not the first time it's done that.
Yeah.
And then what happens? NVIDIA comes
phrases before, like endless demand.
Insane demand.
Tell me about the macro here for a thought, Kev. It seems like there's a decent little pushback in bonds the last, really the last week, actually. We just can't push the 10-year through 4.45.
So I guess the dollar staying unchanged for gold is the new dollar down for gold.
Dollars,
all they needed was a day where the dollar didn't spike higher and gold rallies, $40-some. But, you know what? The best thing about this market today, dollar yields, quiet.
Yeah.
Very quiet. Market loves that.
Yeah. Dollar down 40 bips, finally giving some back. Multi-year highs for the dollar. It was due for a little cool off, I think, for sure.
Of course it was.
We got auctions this week for bonds. We're going to get some of those in the next 2 days. We're going to get a little bit of Fed speak, but NVIDIA highlight, right?
Everything is leading up to NVIDIA. There's a little bit of data, PMI and ISMs on Friday, consumer sentiment on Friday. Besides that, it's an NVIDIA week, and then it's the consumer, frankly. Walmart, Target, Lowe's, Best Buy. I mean, a lot of consumer-driven names the rest of the week.
The only thing is, though, I don't feel as I totally agree, because I do think NVIDIA is the major market mover of the week. But the only thing is, the semiconductors haven't traded in step with NVIDIA, so I don't feel like it necessarily has the same power to pull some of these stocks out of the slump. I mean, you look at the semiconductor ETFs; they've all peaked out in mid-July. I mean, sometime this summer. Well, the S&P has continued to rise, NVIDIA has continued to rise. I mean, the correlation has only diverged between semis and NVIDIA more and more. So I'm like, does then good news for NVIDIA no longer reflect good news for all of the AI
That's
trade?
kind of the point that I was making about SMH, that NVIDIA's kind of been in a world of its own, so its ability to pull the market higher, I feel like, has been less obvious for about 2 quarters now.
Even the way it trades with the S&P 500 has not been as strong of correlation. So
that's true.
I say, once again, the risk is that this is just maybe a non-event. Although I do give I feel sort of bad for this company, because their earnings calls specifically, whatever Jensen Huang says, I do feel like will be so criticized. We'll just be looking for any signs of weakness. I mean, myself included. I'm just tuned in volume 100, waiting for any slippage.
That's you, though. Everybody looks at everything he says and spins it as positive. Everybody looks at it and says, how do I label a fresh new YouTube channel on semiconductor investing for NVIDIA? But,
I seek the truth.
I feel you.
I look for any signs of hey, maybe demand won't be up to this astronomical level we've seen over the last year.
Right back.
All right, a lot of pressure right now. Thanks, Kev. Thanks, Jenny. We got some more thoughts on that, as well as the macro with Mike Block this afternoon. He's co-founder and chief strategy officer.
This guy's got to go.
Agent Smith.
McDonald.
You got multiple different AI processes running for your stock analysis. Remind us real quick, Mike. There's 3 of them.
We actually have 4 agents. We have Agent M, Q, S, and O, and there might be some more in the works, a little teaser here, but suffice to say, these are autonomous AI agents. They all perform a different part of the investment task to help make things more efficient and more effective in terms of generating alpha and great ideas for clients and for investments.
All right, let's start with the top. A little pullback last week. Which agent is in charge of the technicals, finance, support, and resistance for S&P?
That would be Agent Q.
Okay.
The thing to remember is Agent Q works in conjunction with everyone else. If you make a query on Agent S to ask her about sentiment or to give you some scenario analysis, she's going to draw from Agent Q's technical expertise and backtesting. So every morning, Agent Smith's subscribers are greeted by Agent M when they log in, and Agent M is kind of out there at 4 a.m. figuring out the macro picture, and he confers with Agent Q. And last week, when we were at the highs, he said, we just can't seem to get through 6,000, can we? Sure enough, there was this letdown for any number of reasons. Maybe it was fear of tariffs. Maybe it was just the nature of the flows going into expiration and everything like that, which we take very seriously. It's not just all about the Fed and the data, right? It's about where the money's going. And Agent Q and Agent M are really adept at figuring that out. Now, look at what's going on today. We're trying to get a little bounce back, and they're stuck at 5,900 yet again. But if they can get through there, what Agent M and Q are saying is, we break through some negative gamma, some negative pressure.
Where's that?
Able to ride back,
Where's that gamma level that you're watching, Mike? We love to pay attention to that stuff too.
Big round number in the cash at 5,900. We got through there for a little second. I think we got as high as 5,906 last time I looked. and now we're stuck around in that neighborhood again. So again, these are things we're attuned to, as well as the macro, as well as big things like NVIDIA earnings. Don't forget there's VIX expiration Wednesday morning, and that's going to create a lot of pressure on everything. One of the big things that we're looking at is Agent M this morning said, look, if we can't break out of this logjam, there's ultimate downside risk to 5,000. With the VIX here above 16, maybe this is a good time to think about insurance into year end.
VIX 15 versus the 13.5 low. So I guess the point there being that we got real low in VIX, and the little drop that we got in stocks brings us still to something below average for VIX.
Yeah, look, VIX can go lower, VIX can go higher. What we're saying right now is there's a lot of overhead resistance, a lot of money piled into the market, perhaps justifiably following the resounding Trump win. Remember, it's not just that Trump won and people think he's pro-business. It's not just that there was this red sweep of the House and the Senate, as it appears. It's more about that we have resolution. There was a lot of fear going into this election that we're forgetting about now, that we wouldn't know what was going on. That it could be year end. We wouldn't know. Now we know. So a lot of complacency kicked immediately. But, there still be, things are to be determined, TBD. There be dragons, as I like to say. So there's a lot that needs to be worked through here.
So one other thing on the calendar is December. The Fed move was assumed to be a cut. As last week, midweek, it was like 85%. Should that be closer to coin flip after inflation, after what bonds have been doing?
Yeah, bonds are telling us a story as they tend to do, and there's a lot going on with bonds. But let's talk about the Fed. It was interesting that one got on this very dovish footing going into the election, and then the election gets resolved. We get that out of the way, and then magically, Jay Powell, Thursday afternoon, is there saying, things are going so well, maybe we don't need another rate cut right away. We can, you can't hurry rate cuts, I guess, if you want to be the Supremes or Phil Collins here.
They'll get him. They'll get rid of him fast.
That. I'm not going to sing it. Don't worry. And we get into.
I really don't think Powell knows what he's doing.
Jim, what do you think?
Because this has gone way too freaking long.
Jim,
way too long. Huh?
Are you going to trade anything to close?
I'm not.
Touched the 200, and now we're going up again.
Yeah, I missed that. I'm going to wait. That last trade was a good one. I want to savor that last trade.
We're touching, the high from, what was that, 2 o'clock today?
Oh, yeah? Yep.
I think we're going to fall through the bottom again. Adam, what is your expert opinion here?
My expert opinion is that we're going to probably hold at the top up here and wait for the Winslow's NVIDIA earnings Wednesday. We've got some good earnings coming out this week. Retail, snow. I think it's going to be all about the earnings on NVIDIA, how NVIDIA reacts.
Didn't they miss earnings last time?
They didn't miss them. They just didn't appreciate that there wasn't a big enough percentage gain. And I think that was just in their head. Because they were arguing about the 3 trillion market cap. They were already freaking out because we were at 3 trillion. And they said we were due for a pullback. So I don't think the earnings mattered that much last time.
Do you ever play earnings calls or no?
One out of every 20 I'll play before earnings, and I'll take them after earnings. I hardly ever play earnings unless it's 2 or 3 days later.
I have a friend of mine that he plays the earnings, but he does them. He gets the options after earnings, and then building up until earnings, he just sells everything. So like the day before he'll just dump everything, or 2 days before he'll just dump all his options.
So when earnings come out, the stock dips, he buys it, then he just waits.
No, you'll buy them like 2 months before.
Before earnings.
Yeah, before earnings.
And then dump them before.
Like a month or, I think it says like 30 days and more.
That makes sense. Yep. They call that earnings play.
Yeah.
I usually look at 2 weeks into earnings, but yeah, a month. I traded Tesla's earnings.
I saw some guy on Reddit make like $50,000 on like penny calls,
Mm-hmm. So good.
Yeah, you think we're just gonna hover here till close? What does Randy think? Randy! Everybody's being awfully quiet.
Kind of about the way the market is.
Is there anything else exciting going on? Nvidia, nothing. Meta's stuck. Apple pulled back a little bit.
And Nvidia might pop.
Yeah, going into
Nvidia's the problem with Nvidia is that Blackwell chip now heating up. That's a deterrent.
There goes Nvidia. 141. Climbing. So the SPY's gonna go up then too. I don't know how to read these things. The things that Bob sends us. Super SMCI.
Yeah.
BOB strength.
Seems like people's willing to take the long shot on SMCI on this dip. After once they get this delisting, try to avoid delisting. I just think it's risky, but it could be.
So if it's a BOB of high, then that means it's a good, what is it? When are NVIDIA earnings again? It's on Wednesday, right?
Yep. Earnings after hours.
Liquid options for the day. Understood.
We got John Deere on Thursday morning. Shoe Carnival, SCVL Thursday morning. Tomorrow morning, FUTU, Lowe's, Walmart. Walmart, I think, will be another catalyst this week. Now, they were calling puts on Walmart because they're not used to the run that it's had already, 100%.
Did my thinking video was, I heard you talking about them and decided to go on a little run right here.
Oh, did they? They like me.
Yeah, look, since you mentioned it, it's already up like 40 cents.
I bet you it bounces a little bit.
SPY looks like an ascending triangle to me. That's what Randy says.
So we broke resistance. Look up on the screen there. You see that 1, 2, 3 top, triple top?
All right.
On the 1 minute. You see it 1, 2, 3 put, right?
Mm-hmm. Yeah, 1, 2, 3 top right there.
Mm-hmm. Then you go to the wick. That's your next resistance. 141.63. Nice little recovery on that little bottom I called on Tesla there, or at least that mention. There's a fallen wedge. We got 3 black crows here on NVIDIA. So here's your fallen wedge. Yeah, not really. Maybe a bull flag. Yeah, bull flag. Up to the 200, boom. We have 26, yeah.
On the side, on the 1 minute, maybe 3 black crows, maybe? I don't know. Can't read. I'm trying to look at this real quick. Hold on.
Spy.
Yeah.
We got crows, all right. We had 4 over here before. We have 4 more now. Now, Alex, you know, as you get closer into close, it gets a little bit more difficult. You're gambling now.
Yeah, I understand. 200. Wow, there it goes.
Do, 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 do. Trump will help Tesla dominate. So here's a chart. Let's see what this guy's rolled up on. XBI, is that Deutsch? Oh, there ain't no chart here. XBI. Spider Biotech. I've got a, I don't know, I just don't feel like trading much anymore. I don't want to ruin a perfect day.
What's going on, Jim? What happened?
Nothing happened. I just don't want to take too much risk here until the close because I've had too good of a day. Don't want to get complacent. Nvidia's dropping here. I'm going to keep an eye on this HCWB tomorrow, see if it has a second wind. HCWB. Type in second wind on this one. Second wind, you know what that means? You're exhausted, so you go sit in a corner and you get a little bitty few minute rest and you start to breathe again for another round. We got a 1, 2, 3, 4 right now on the SPX. One, two, three, four, five. Take a nosedive. Ooh. There she goes.
Because it stems from this kind of very crypto-heavy economics view. Everybody's looking for this low dollar, and we got the opposite.
Absolutely. So I think it's anybody's guess, really, what's going to happen. This 6% move or so that we've seen in the dollar off the lows of just a few months ago is extraordinary. I mean, this is unbelievable, and I think it's just as much because of what other central banks are doing, and just now, I mean, just a short.
Let's say we had more time in the day right now, and I saw this trade right here. We had the crows, and then 3 white soldiers, and then retested double bottom. Well, it created what you call fallen wedge. Once it breaks out of that fallen wedge, it's going to come back and find support. And you got an inverse head and shoulders right down here. So it's either going to pull back and hit that 3 and bounce up into close, or it's going to bounce right here on up. I'm not going to trade it because I just don't feel it. I mean, I don't want to. I just don't feel like trading it. Might here if we hit this 3. Now, let me see here. SPX. Where's that? The 58.95 at 115. I reached back and touched 115 again there. We're at 130. 145. Take your fast scalp off of it. $150. I'm out. 1,415 to 150. November 18. That's how you do it. Gosh, 185. Called a falling wedge. Breakout, pullback. 1, 2, 3. Boom. So that's the wick. I call that a higher low. Golly, 210. Look at there. To the knife. Golly. Can you believe that? I'm glad I got out, right? Jim, why'd you get out of that trade? Well, I'll tell you what, little buddy. When you're out on the field and you've been hustling cattle all day, you want to get in there and go to the bar and have a beer. So I went to the Double Top Saloon right here and exited the trade. Now beer's on the house. That was one heck of a knife. I got out before I got to the double top because I just don't, I'm just not feeling it. But that was a good trade. $35. Contract. What do you think about that, Alex? Hey, Bob, you got your mic on. Look at BKKT. Always clean as Jim.
Hello?
Yeah, what's up?
Hi, my name is Ashley. The reason for my call is that the updated plan for Medicare has just been released.
Yeah.
Do you have a minute to check what additional benefits you can qualify for?
Not right now, but how old do you have to be to get in this program?
So, sorry to have disturbed you at this time.
You're a computer, aren't you? Fucking AI. Government, man. I'm telling you what. The Biden administration sucks. Talking to me about Medicare. Dang. I don't even know. Do they have a counselor you can go see when you go get old? I have no clue what I'm looking forward to. The free benefits or anything that goes along with it. Maybe 65, 70 with the... I don't know how much longer I need to stay healthy before I can start feeling like I'm a dead man. Okay, BKKT. Ain't that a coin stock? Oh, circuit breaker. Okay. Holdings traded higher following reports suggesting that Rump Media, is that misspelt? Is that supposed to be Trump? Rump Media, is that supposed to be Trump? Them bastards. Who wrote that? Rump. Oh, it's too much. Oh boy. Speaking of rump, Tyson cheeks. Oh, we got less than a minute. This is going to be a big deal here on Rump. I got to do some homework. Might do a little video on this tonight, see if I can find some stuff. Coinbase doled out more than 100 million to political action committees. What? God. I'm just sick of this country. Trump to meet privately with Coinbase CEO Brian Armstrong.
Later, Jim. I said bye. I'm gonna work for the rest of the day.
You got okay. You're heading out. It's nice being with,
gotta go.
nice hanging with you today, Alex.
Nice hanging out with you too, man.
Now, always remember, private message me or something if because I always don't have my headset on.
Oh, I got you. I'll ping you next time.
Yeah. Bye bye.
Bye, guys.
Oh, it's already over. Shit, I didn't even have the bell on. Ding, ding, ding. Well, I really enjoyed today. It was really laid back, waiting for it's just my day. I didn't have to sit here and ponder to the market. I get back to my desk, I'm ready to take a trade, take a 30-minute break, ready to start looking again. Say I was counting 30, 40, 50 minutes in between trades. I think that's the way it's always been. A lot. Just one could easily overtrade and get stuck. But the volume to me wasn't here today. Not like I always like to see it, but it was respectable volume. So I'm gonna get out of here and wish everybody a great day. Thank you, mannequin.